consensus even within the LDP. Yesterday we have one of powerful LDP politician Taro Kono saying that he favors a rate hike. People are really focusing on the inflation data from the U.S. and how the tariffs are impacting the U.S. economy.
Right, our senior stocks reporter Hideyuki Sano here with a view of where the Japanese economy may be headed, which is, of course, a very complicated question. We'll also be watching those oil-related stocks in today's trading session, given, of course, the rising geopolitical tensions in the Middle East. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.
Thinking about investing in the U.S. versus the rest of the world right now? Ultimately, those formidable advantages are bendable, they're probably not breakable. However, I think both things can be true. I think the U.S. can remain exceptional, and I think it's still possible that investors are going to look to allocate marginal dollars elsewhere. And what I mean by those marginal dollars is the following. Like, there's a lot of talk about whether we're losing or we're winning. I just want to posit to people that the United States of America has 5% of the world's population, 25% of its GDP, and over 70% of its market cap. So we came into 2025, one might argue, with actually a lot to lose. And I really dismissed the concept that people would allocate away from the U.S. In January. I just said, that's not possible. We are the world's reserve currency. We have all these formidable advantages. There's nowhere better to allocate capital. I actually still think that's true. And the middle market, which you talked about, is, if you add it together in the U.S., the third largest economy in the world. So, I mean, there are amazing opportunities. But what I'm hearing from investors all over the world is, yeah, America's great. And it may stay great, but maybe I don't need to put more than 70% of my capital into that equity market.
In case you missed it on the opening trade,
a company like yours that is leaning into the data and the analytics part of the business, that has a multi-year partnership with the likes of Microsoft, some would argue that would be better fit to be listed in New York. What do you say to that?
Completely disagree. I think the narrative of different multiples in New York and London is frankly inaccurate. And if you look at the FTSE 100 and if you look at the S&P 500, yes, they trade at different multiples. That's because there are different constituents in those indices that trade at different multiples. And we've done this analysis, and a number of banks have done this analysis, a number of academics have done this analysis. There's no significant material differential. And in some cases, the UK listed companies trade at a higher multiple based on when you adjust for return on capital, growth rates, et cetera. So a little bit of an embedded narrative out there that is actually not accurate.
Don't miss the opening trade, live every weekday. What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
Zero commissions was an industry-changing innovation. Mobile finance and fintech in general, I think, was aided by the rise of Robinhood. I think that every company will become an AI company, but I think the humans will ultimately be calling the shots.
As a young adult, Vlad Tenev dreamed of becoming a mathematician. Entrepreneurship, let alone disrupting the fintech industry, wasn't part of the plan.
I wanted to be a mathematician. I wanted to make exciting discoveries and figure things out. I had no idea what algorithmic trading was, but I knew that I was a little bit stagnant and that this sounded like a really fun opportunity.
Leaving graduate school at UCLA set him on a different path. In 2013, he co-founded Robinhood with a mission to democratize access to financial markets. For decades, when people traded stocks, they had to pay fixed commissions. Tenev changed that, pioneering zero commission trading, a move that forced every major brokerage to follow suit.
Certainly, the industry moved to zero commissions as a result of Robinhood's impact.
Then in 2021, the GameStop short squeeze exploded. Retail investors, everyday people, not professionals, bought the stock in droves, encouraging peers to do the same. The frenzy got so intense that Robinhood shocked the market. It restricted trading on certain stocks. That decision eventually landed Tenev in front of Congress.
This was a technical and operational decision that we made in this current unprecedented environment. Can be substantial. So to protect the firm and protect our customers, we temporarily disabled buying in these securities.
Even after the chaos, Robinhood endured and expanded into crypto banking, derivatives, and now tokenization, which Tenev calls the biggest capital market innovation in decades.
My motivation is creating new things. If you create new things that are more useful, that's really what gets me excited.
Today, Robinhood is valued at more than $90 billion, and Tenev remains committed to pushing the frontier of finance, whether through blockchain, AI, or the next big platform shift. From the son of Bulgarian immigrants to the architect of a new financial model, Vlad Tenev is helping to shape how the next generation will own, invest, and build wealth.
You know, when I started the company, I was worth nothing, but things haven't changed very much for me, as it might be a little bit surprising, because I was never really doing it for the money.
When people traded stocks historically, there were fixed commissions, and then fixed commissions went away. But did you pioneer the idea of having no commissions, or did somebody else do that and you did it better than other people?
I think that a lot of people talked about zero commissions being the future, and there were some startups that didn't really work out that tried zero commissions on a more promotional basis. So your first 10 trades per month were free, that sort of thing. But certainly the industry moved to zero commissions as a result of Robinhood's impact.
So for people who are not that familiar with the business, they might say, if they're watching, well, how do you make money if you're not charging for the service you're providing? So how do people who offer no commission brokerage trading, how do you make money?
Right now, Robinhood's a highly diversified business, right? We have 9 revenue streams that generate 100 million plus in annual revenue or more. When we started, obviously it wasn't as diversified. It was just equities trading. And our idea at the time was, you have all of these great companies in Silicon Valley around where we are today. Instagram, Uber, Meta, formerly Facebook at that time. And the playbook was, why don't we just get customers, have a retentive relationship where customers don't just use your product once, but they use it on a recurring basis, and you create this environment that's very, very sticky. And if you get to tens of millions or hundreds of millions of customers, then you've got such a valuable enterprise that monetizing it will be easy. So we didn't even think about it very much to begin with, because we just said, we have a technology advantage. We're going to lower the cost to operating this service to like near social media internet costs. And then if we build a big franchise, revenue will be easy to come by.
What was the original business you were going to do? Was it to be no-fee stock trading, or was that later?
So we got in business together at first, right out of grad school, because we saw an opportunity to trade. So no customers, just proprietary trading. And that was a business that was structured as a hedge fund. It didn't ultimately succeed. It was sort of like a fairly quick failure. But then we pivoted that into algorithmic trading technology. So we saw that algorithmic trading was basically going to eat the institutional space. We built software for that. And that actually led us to discover the Robinhood opportunity, because we said to ourselves, okay, we've got these customers using our completely automated systems to trade billions of dollars of volume a day, and the number of people that are needed to maintain this service is just a handful of software engineers. So what's preventing this technology from going to retail and giving the benefit of commission-free trading through this efficiency? So when we kind of put that together, we got very excited about the retail opportunity, and that's what ultimately led to Robinhood's creation.
So when you started, where did you get your capital?
At first, it was angel investors, so we had to really just knock on a lot of doors. But you could invest in Robinhood as basically a retail investor, and we took all comers because we had to just work very, very hard to get our initial $1 million. So we had angel investors that would put in 50K, 100K checks. We would pitch them just like we would pitch the Sequoias and the Andreessens, and some of those people ended up doing quite well. Yeah, still holding on.
And today your market value is north of $90 billion.
That's right, yeah.
It's pretty impressive. So the person who invested on day one has made, I don't know, 9,000% or something like that, or more.
We've gone through a period where the stock price was kind of a negative distraction. Right. We would get questions about why it's so low, what we're doing to increase it, all that kind of stuff. And it can become a distraction from running the business, really. You have to contend with it. And so it's really nice for that to be gone so that we could focus on actually building real value and, working very, very hard to not have it be a distraction in the opposite direction where, people think that we've won, we get complacent, we stop caring as much. I think that's always, it's a self-reinforcing and self-correcting cycle.
You have started another company recently, is that right, Harmonic?
Yeah, so I'm chairman and co-founder of an AI mathematics lab. So this is getting back to my original passion to kind of understand how the world works and the laws of the universe. And that one actually just raised Series B financing led by Kleiner Perkins. So it's they've been cranking over there, building mathematical superintelligence.
So it used to be the case if you had a company like yours, a publicly traded company, 90 billion market cap, your shareholders would say, don't do anything else, don't get involved in any other business, just focus on this. But today, in the era of Elon Musk and everything, people can do multiple companies at once. So your shareholders in Robinhood don't care about your being involved in Harmonic or some other companies?
I would say my situation's a little bit different. I'm not operating there, so I'm executive chairman. And while it's certainly more than a typical passive investment, I care much more than I would for that. There's a CEO who's running it and managing the team. So I do think it's a little bit different.
And so today, how many different businesses do you operate? You're in the stock trading business, but you're in the tokenization business. You're in many other businesses. How many different lines of business do you have?
Yeah, at the highest level, we have a couple of large businesses. So the brokerage business is where we have our FINRA registered broker dealers. We have a introducing broker dealer, a clearing broker dealer. That's basically our brokerage business. Inside that, we also have a derivatives business where we operate a futures commissions merchant. And that's where our prediction markets and futures outrights properties live. We also have a cryptocurrency business, one of the largest in the world, and that's standalone and regulated differently. We have a business we call Money, which operates Robinhood Banking and the Robinhood credit card. And We have a few other acquisitions that we folded in. We acquired a registered investment advisory platform called Trade PMR recently. We acquired an exchange, Bitstamp, which has an institutional business as well. And there's a couple of other smaller things inside this. But yeah, it's a financial super app, business, institutional, U.S. global.
Let's talk about tokenization. For those who aren't experts in it, what actually is tokenization? Can you explain what that is and why that's a good business?
So tokenization is a new technology. And basically the idea is you take any real world asset. It could be a public stock. It could be a private company stock. It could even be a piece of art or real estate, a house. And you take that asset and you put it on the blockchain and you associate tokens with it. And then those tokens, leveraging blockchain technology, can be traded 24/7 in a global liquid market. So we've demonstrated it in two forms. Number one, tokenization of public NMS equities. So we launched a product in Europe called stock tokens that basically allows a customer to get exposure to US equities. You can buy, a Tesla or an NVIDIA token 24/5, soon to be 24/7, and the experience and the process is as simple as trading a stock, even more simple. But then the real power is taking assets that are not easily liquid and tradable 24/7 and putting them on the blockchain, making them trade easier as well. That's where private companies and in the future real estate and things like art come in.
So since you started the company, AI has become a much bigger deal than it was at the time you started the company. And many of the AI companies sort of have very high market values and so forth. What is your view of the importance of AI to your business and to other businesses you might want to start?
I think that AI obviously is going to change everything. It's a huge platform shift, perhaps bigger than the shift to mobile and cloud. And every company, in the same way that every company became a technology company, I think that every company will become an AI company, but that'll happen at an even more accelerated rate. Most of the time, you're not doing it just because you want to make money. You also love trading, and you're extremely passionate about it. I think there will always be a human element to it. I don't think there's going to be a future where AI just does all of your thinking, all of your financial planning, all of the strategizing for you. It'll be a helpful assistant to a trader and also to your broader financial life, but I think the humans will ultimately be calling the shots.
So the United States economy is in reasonably good shape. We haven't had a recession for more than 7 years. Normally you have a recession every 7 years or so. We haven't had one. Do you worry about a recession affecting your business, or do you think we're in pretty good shape economically?
We've been through some cycles. 2022, while maybe there's debate whether it was technically a recession, we got hit hard as a recently IPO'd, undiversified growth stock that was, heavily dependent on retail trading. And I think since then, we've made investments to make the business more resilient to all market environments. We have Robinhood Gold, our subscription offering. We offer high interest, which allows customers and us to benefit from increased rates. We've done really, really well on the active trader side, growing market share. And active traders actually do tend to be more resilient because they're sophisticated enough to employ multi-leg option strategies and things that could do well even in sideways or down markets. So business has gotten more diversified. Obviously, near term, we have to be prepared for ups and downs like any company. But I think that we focus on our market share, we focus on customers, we continue to diversify the business. The same strategy we've been employing will continue to work. I don't think it'll require a change of strategy for us to continue to be successful. My motivation is creating new things. If you create new things that are more useful, that's really what gets me excited.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's talk about your background for a moment. Your parents are both from Bulgaria?
Yes.
And you were born in Bulgaria?
I was born there as well.
So how did they happen to pick Washington, D.C. area to come to?
First, my dad actually went to Delaware. So he was given an opportunity to study for a master's at the University of Delaware in Newark. And it was not clear whether we would stay in the country. You know, he knew he had this program, but afterwards was very uncertain. So he came by himself. My mom joined him a year later, and then I came 6 months after that. So I lived in Delaware for 6 months.
And you spoke only Bulgarian then?
That's right. So they put me in school right away. I mean, there was no babysitters back then. They needed school, so I got dropped into school.
But I mean, you're in school with everybody speaking English, and you're speaking Bulgarian. Was it difficult?
It was very difficult. Yeah, it was very difficult in kindergarten. But also, that's the fastest way to learn. You're highly motivated to learn when everyone else is speaking the language. So probably took me about 6 months. But yeah, I learned English very, very quickly. And I remember that. I remember like struggling to communicate with the teachers. And, you know, sometimes I look at my old kindergarten report cards. But yeah, there was a good upward trajectory.
Archie, you went to Stanford. Did you major in math?
I majored in math, and I found out pretty quickly that if you want to do theoretical physics, as I did, you spend a lot of time in the math department. So I ended up finishing as a math major, physics minor, pure math.
All right, so you did well there, and then you decided to do what?
Then I actually went to UCLA. My dream was to study with this professor, Terence Tao, who's, you know, some would say the greatest mathematician in the world. When I was in college, I had no idea that I would be an entrepreneur, much less so starting a financial services company. I wanted to be a mathematician. I wanted to make exciting discoveries and figure things out. And then what happened was 2008, I was first year in graduate school at UCLA studying pure mathematics. My co-founder, Beju, found a job at an algorithmic trading firm. And the first month that I was in graduate school, and his first month at this algorithmic trading firm, 2008 financial crisis began. So Lehman Brothers went belly up, stock market crashed, and he convinced me at the time that it would be a good time to start an algorithmic trading company. And I actually didn't understand what that was. I had no idea what algorithmic trading was. I was, you know, very much in the theoretical graduate student frame of mind, but I knew that I was a little bit stagnant and that this sounded like a really fun opportunity, and I could learn a lot of stuff.
When COVID came about, a lot of people stayed at home, and they didn't have a lot of other activities to do, so sometimes they were trading stocks. And it was said by some people that that really helped your company because people were trading at home. They were often next-gen people, and they were younger people. Is that true that you were helped by the younger generation, people staying at home, buying stocks, or is that not really a way that your company grew?
That certainly happened. Between end of 2019 and 2020, our user base and our revenues and generally everything about the platform grew between 3x and 5x. So we were big before COVID, but the acceleration due to the pandemic and all of those tailwinds certainly accelerated the company quite a bit.
Let's talk about the company now. today you are a major force in the financial services world. And I guess you've got a lot of people who want to give you money and they want to invest with you and so forth. What is the greatest thrill that you're getting out of doing this?
I think my motivation is creating new things. Like if you create new things that are more useful and become the standard, right. That's really what gets me excited. And I think in a business context, that's innovation. You know, we talked about tokenization earlier. I think tokenization is the biggest innovation in capital markets since the central limit order book, right? I think it could change everything. And to have the opportunity to not just like attack that innovation, but bring with it the scale and the resources of Robinhood so that it could actually get the highest chance of succeeding and taking hold gets me very excited. Of course, zero commissions was an industry-changing innovation. Mobile finance and fintech in general, I think, was aided by the rise of Robinhood. But I always like to think about the new things and in the future. A big tragedy is that private markets are where the bulk of the interesting appreciation and exposure is nowadays. We're obviously working to solve that.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
What is the best investment advice anybody ever gave you? I assume it was hold on to your stock that you have because that's done so well, but anything else?
Well, the traditional investment advice is to make sure you're diversified and that you have a well-balanced, diversified portfolio. And I think that's interesting because nobody wants you to be diversified as a founder, right? So your shareholders don't want you to be diversified. They want you maximally exposed, in fact, to the one asset you're watching. So it's much more of a put all of your eggs in one basket and watch that basket very, very carefully. So for me personally, I think the rules are probably a little bit different than the conventional advice. I've been highly concentrated, and I think that's worked well.
Suppose somebody came to you and said, I have $100,000, I'm reasonably young, I'm a person who uses an account at Robinhood, but I don't really know what to do with $100,000. Where would you recommend they put $100,000 today?
I think one of the biggest opportunities, also a big tragedy, is that private markets are where the bulk of the interesting appreciation and exposure is nowadays. If you want early exposure or even medium to late stage exposure,
Facebook and Instagram have about 3 billion and 2 billion users a month, respectively. No single country in the world is home to that many people, and it's why Meta, which owns them both, attracts fierce scrutiny from governments and critics.
And that was before terms like generative AI became commonplace. But for years behind the scenes, Meta's been building a vast network of AI researchers, and it's used what they come up with to show people content and ads it thinks is going to keep people clicking.
That's not always worked out for the best. The company's long been accused of having an outsized influence on the spread of disinformation and social unrest far beyond the shores of its Californian headquarters. And that's led people to question whether switching on even bigger, faster, smarter forms of artificial intelligence is actually good for the world.
Meta says it is, and its boss, Mark Zuckerberg, must know what's at stake if his company gets it wrong.
So, on this episode of AI IRL, we're speaking to Sir Nick Clegg, once a nearly 20-year veteran of British government, now the man Meta's got in charge of convincing the world's public that his employer is doing the right thing for us all. So Nick Clegg, it's great to have you here. Thank you so much for joining us. Now, the Brits watching will remember you as the leader of the Liberal Democrat Party from your time in government. You were at one point the Deputy Prime Minister here in the UK, but for years you've been at what was Facebook, now Meta. So give us a sense, how is AI changing what you and the company does at the moment?
So in one sense, it's a continuation because AI, of course, I mean, AI is not, I mean, I know the hype almost suggests as if it's just been invented yesterday, but of course it's been talked about since the 1950s. And as far as Facebook, now Meta, is concerned, almost every aspect of what you see on social media is in one way or another affected by, ranked by, sorted by AI, and has been for many years. And we've, as a company, have long had a pretty strong pedigree in cutting-edge AI research, which we then open source. We have open sourced and shared over 1,000 AI databases and models over the last decade or so, and quite a lot of the foundational technology that's used in the industry. PyTorch, for instance, you know, the sort of AI libraries was devised by Facebook researchers. That all being said, I think clearly generative AI, the development of these large language models, and now these image models, is a qualitative step in a new direction. And that, in terms of particularly the work that I do, is of course accompanied by a lot of time and thought is invested into how you can innovate with generative AI in a way that is responsible, that is safe, that is thoughtful, and we do that very openly and collaboratively with researchers, with academics across the industry, and of course governments are trying to grapple with this, and they're trying to work out whether and in what way they should regulate.
Not to ask people about their bosses, but you know, Mark Zuckerberg, like, yeah, how is it changing his priorities? Because for a long time, you know, he seemed very focused on building a metaverse, and now, you know, we tend to just hear about the AI side of things. I mean, I'm just curious to get your sense of how those priorities are shifting. Are they shifting?
You would say they're not incompatible. In fact, they're sort of mutually dependent on each other. You can't really build a sort of metaverse suite of products, namely the idea of moving from a sort of 2D internet where you're looking at something on a flat screen to actually being immersively in an environment where even if the three of us were physically apart, if we were wearing virtual reality headsets, we'd be able to communicate with each other as avatars now, in the future hopefully as holograms, feeling really we're breathing the same air. Now that technology cannot be built without AI. Well, you certainly can't build content for that, for those experiences without AI.
But it certainly seems like the rollout of some of those headsets just hasn't quite caught on at the speed at which it was initially promised. And now you have generative AI just catching wind really quickly since last year. You have new generative AI tools that the company is releasing. How would you rank kind of those two priorities, though, given the headsets just aren't quite catching on at the same speed?
So I don't think we ever actually claimed that the headsets were suddenly going to sweep the board. That would be wholly unrealistic. You don't build Rome in a day. You certainly don't build a new computing platform in a few either. We've always accepted this as a long-term investment. And by the way these things catch on tend to go in waves. I mean, I've read about ChatGPT exploding, and then particularly when kids started going left the end of term and went on summer holidays, it subsided in terms of its user base. These things fluctuate. I think as I said earlier, AI is not new for us, but at the same time, I think I wouldn't look at generative AI as a kind of just as a product. It's not an app. It's not a piece of hardware. It's much more foundational than that. It's like an operating system. It's a completely different. It's the sort of scaffolding, the infrastructure. I'm mixing my metaphors. I hope you know what I mean.
So how are these changing some of Meta's core products then? You talked about the generative AI that's going to form a core part of the business. Can you just sort of talk us through? I know a lot's new at the moment. What is changing there?
So I think if you look at, for instance, at the where content comes from that is being recommended to you on Instagram, we've been very open about the fact that over the last year or two, we were already leaning into having more recommended unconnected content. In other words, content that was not connected to your family and friends, but that our AI systems have been able to scour the internet and say, you might be interested in this, you might find this amusing, you might find this fun, you might find this educational. I think you see an acceleration of AI systems not only recommending content, but now increasingly generating content. So one of the things that we've been working on is how to make sure that people can distinguish between the provenance, the origin of something which is generated by AI rather than generated by human beings. So we will have visible, clear watermarks on the photorealistic imagery that people will be able to use in something called /Imagine, which is our photorealistic tool integrated into Meta AI, which is our sort of Meta sort of ChatGPT equivalent, where you can ask it anything from a restaurant recommendation for this evening to how to plan your next summer holiday.
And this is going to be baked into Messenger, into WhatsApp, into things like that.
Exactly, and I was going to say, and all of that gets then baked into all of the platforms, into the messaging apps as well as the social media apps. And then again, I think this is a new departure, not entirely new. Some companies look at character.ai, for instance, they've tried this. We will be leaning into the development of AI characters, personae, from Jane Austen to, a Tom Brady style,
Says
sports
a lot about
expert.
your taste right now.
Well, yeah, it's a big range there.
So as more people start to use these tools, which sound really exciting, I imagine that creates a really robust data set to train these models. Do users have the ability, though, to opt out if they don't want to be part of that training set?
Yeah, they do, and they have the ability to, for instance, delete the data which they have when they're interacting with some of these AI characters, these AI personae that I spoke about.
And those personas, sorry, just to interrupt, but are they an alternative to having a friend? Are they can you message someone that you wish existed and who doesn't, or is this an
existing?
Well, I think it'll be very interesting. Actually, I think the truth is, let's see how people use them. Often it's the most sort of unexpected use cases that really take off, but you will be able to, you'll be able to bring in these AI persona into a group chat. So you have a mixture of. So if you're a group of friends who are organising a holiday, you'll be able to all together chat with one of these, with the travel agent who is an AI persona who'll be able to give you recommendations in that chat group.
And for these product development roadmaps, how early in that process do you personally get brought into those in terms of making sure that what's being considered by engineers, by developers, actually tick the boxes that obviously regulators and governments and people worldwide need ticking before they are adopted by millions of people?
Right at the outset. So I think the kind of way in which we become more and more joined up, the bigger and bigger that the company has become, as you quite rightly say, in order to anticipate some of the legal, regulatory, moral, ethical, cultural issues which these new products might bump up against, the more we can plan for them, and the more. And by the way, you will have seen when we open sourced our large language model, we produce a 75-page Some information about what data is and is not used, making it very clear, for instance, that the data of your communication with family and friends is not included in the training data, as well as what you can do to control your experience and the use of your data. And I think that is all to the good. The more open we can be about how these new technologies operate, the more open we can be about what the risks and the benefits are, what the controls are for users, and also how we need to work with others. We've had thousands of hours of red teaming, stress testing to make them as safe as we possibly can. We can't guarantee that they won't spew something inappropriate or something, unwelcome at any point, but we can keep retraining it. And we try and do that as openly as possible with other folk in the industry. Because if I can just take one specific thing, which I feel really strongly about, you can't reassure people about a new technology if you can't detect it in the first place. That requires high levels of industry cooperation, which is not yet fully mature, but is something we're trying to lean into through something like the Partnership for AI, for instance.
The way you're innovating responsibly, it sounds like, has a lot to do with your open source philosophy, which not every AI company out there is adopting. Some are closed source models. And this came up in talks in Washington where leaders were, just a few weeks ago talking about why they adopt a certain stance versus another. Why did Meta decide to go in this direction, especially because critics would say perhaps open source models can actually make it harder to police and then hold that company accountable?
Yeah, we see it very differently. First I should stress, one shouldn't get theological about this. There's space for closed models and open models. And by the way, we don't open source some models and tools where we think it would be ill-judged to do so. Just over the summer, there was an AI tool that our researchers came up with, which can take literally a snippet of your voice and then extrapolate it absolutely perfectly. And of course, that would be irresponsible to open source instantly. I totally understand, and I really don't mean this critically, I totally understand why for other companies, it is a competitive advantage to keep it as a proprietary property, which you then charge basically people to access. We just literally flip that round. We think that the more people use our generative AI tools, the more they will innovate and we'll be able to incorporate those innovations into our own products. So, we're a company, we're not a charity, we're not doing this just for sort of charitable purposes, though I do think it has a tremendously positive effect on democratizing technology. Just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have any of the private or public entities that have either the money because you need a considerable amount of money or the very significant GPU computing capacity or the data to build any of all of these things. So we think in the long, well, not even the long run, actually, relatively quickly, shared technology tends to be safer technology.
One of the, just moving things on forwards a little bit here, there's a really interesting bill that's working its way through Parliament here in the UK as we speak. And one of the things, it's called the Online Harms Bill, and one of the things that it deals with, obviously, is, as you know extremely well, is online harms and keeping social media companies responsible online. And there's an interesting line in it that essentially threatens leaders of companies with prison, essentially, or punishment for failing at their companies to keep their companies from causing online harms. And I'm just curious to get your sense of whether that is an appropriate threat, do you think? Is it overkill? And do you think holding execs personally liable could be helpful?
So I think this issue of liability, which of course is not new, you see it in the banking industry and pharmaceuticals. Sure. It's not, I really do think the devil is in the details. You know, it clearly would be both unworkable and absurd. Yeah. You know, the notion that
that Mark Zuckerberg could go to jail?
Well, not that. That the United Kingdom is going to lodge an extradition request to the authorities in California because there's one piece of content they don't like which has appeared on, in Instagram in the UK. That would not work. To be fair, that's not actually what the bill, as my understanding, says. It says something quite different, which is if there's systemic and repeated failure to even cooperate with the regulator in question after repeated requests and I think then even a court order, at that point, executives become liable. It seems to me that is not a wholly unreasonable approach to saying, in the absolute extreme case that a sort of rogue company refuses to engage with, refuses to cooperate, doesn't make any even best efforts, even after the regulator has gone to court. I think it's somewhat difficult to then suggest that is.
The line I picked out was the individual has failed to take all reasonable steps to prevent that offence being committed. The offence being online harms, like it's all steps.
No, I don't think it is that. I think if you, to be fair to the bill, though I'm not a legislative lawyer, but I think to be fair to the bill, it is much more heavily caveated than that. Having said all of that, I do think all democracies, including the United Kingdom, always need to be very mindful that where they legislate is where other, sometimes less scrupulous jurisdictions might choose to follow. And so one of the things that I sometimes feel is lost in the debate in a place like the House of Commons is that if you overdo it in legislation, then it's very easy for the Iranian authorities or the other less scrupulous authorities say, well, if they're doing a version of this in legislation in democracy A, then why can't we do it in our country B? And that's one of the things I somewhat worry about sometimes, which is that the debate around controlling content online, which of course I understand the political instinct because it's all about exercising political sovereignty over things that your citizens see, can often almost accidentally aid and abet those people who actually want to censor speech around the world and pressure private companies to do their bidding. And that's why one needs to, I think, tread extremely carefully in taking on powers like the one that you've just cited.
bring it over to the United States for a bit. There's a fear among researchers and other experts that artificial intelligence could turbocharge misinformation and disinformation. And recently, you as well as some other tech executives had said that disinformation on platforms right now, even amid the rise of ChatGPT, isn't as bad as expected. What sorts of changes is Meta making to its algorithms and products to ensure that it's not caught off guard ahead of the 2024 election?
Yeah, so this is an adversarial space, right? So people who want to, but by the way, just to be sort of tediously semantic, we draw a distinction, just to be clear, between misinformation, which is where you're saying stuff that is partly false or slightly false, or it's deliberately designed to mislead, or it's accidentally designed to lead to disinformation, which is the much more deliberate use, usually of fake accounts to interfere from outside into domestic elections. The key thing is when misinformation goes viral, and we have a number of increasingly sophisticated tripwires which say, this seems to be going viral. You might want to have a look at this, and then it's for independent fact checkers to decide.
Is it too late by then? Would it be better to catch them before it gets spread?
Well, how do you do? You can't vet what someone posts before it's posted. So the speed at which you do it is crucial, and that's my point. AI has allowed us to become faster and faster and faster. At flag or identifying potential viral content which might need to be scrutinized, and of course that's our job. And that's why we've invested $16 billion, I think, over the last 5 years. We have thousands of people working on this. I keep reading about, oh gosh, we're letting our guard down. No way. We are putting a huge amount of time and effort into preparing for these rash of elections we have next year. India, UK, possibly US, Mexico, and so on. I think 2 billion people or thereabouts are going to voting booths next year. But the point is, our systems, in a sense, our systems shouldn't care about whether something is produced by AI or it's produced by a human being. If it's misinformation, it's misinformation. But I think it's right to anticipate that all of that will happen more quickly. I think that is a reasonable expectation. It's one we're sort of trying to plan for.
Layoffs in the tech sector really rattle trust and safety teams, which includes a lot of the content moderators that deal with disinformation online. How has this affected the teams at Meta that are charged with ensuring Meta's AI models are in fact developed responsibly?
So we continue to have, I honestly don't know what the precise tally is. Of course it varies over. We have around 40,000 people working on safety and integrity in our company. But crucially, the answer to your question is yes, absolutely. We want as much as possible to have new AI tools to facilitate the way in which we keep our users safe and the way in which we enforce our policies and ensure that content that violates our policies is acted against. Because it doesn't matter if we employed 400,000 or 4 million. It still would never, and you can't solve this problem by just employing more people. And I would strongly urge people not to regard this as just as a sort of headcount issue. Honestly, a few hundred or even a few thousand people here or there is not the issue. The issue is one of technology. We won't always be perfect. There will always be parts of the system that don't operate as they should. But is the answer in the long run AI-fueled technology rather than, a few extra people here or there? Yeah, absolutely, undoubtedly, yes.
So where does algorithmic bias factor into that? If these are, largely what the...
have to use a sort of feedback loop where when everyday users are using these AI models to make sure that bias is not creeping into the way that the systems operate. I think we've made huge advances in that.
So let me ask you, Meta and Facebook were at one point the poster child for move fast and break things. And you had a lot of technology 10 years ago, you have a lot of technology now. So how can you be confident that people can trust that you aren't still moving fast and breaking things, but with AI now?
I think transparency and accountability. I think we need to be as transparent as we realistically can be and need to be held to account for how our systems operate.
How should we hold tech companies to account, though?
Well, let me give you a very good example. We're literally the only tech company that in exactly the same cadence as our financial results, every 12 weeks, we publish exhaustively data about the 2021 categories of content which, under our community standards, we don't want to see on our platform. And we're completely open about how good we are against terrorist content, hate speech, bullying, harassment, IP fraud, you name it, all of these different categories. And we stipulate where our systems have detected that content before any human being has reported it to us. And more than that, we get it independently audited. So EY audits it, because you're not going to believe our homework. And to give you an example of the progress, exactly the issue we've just talked about, hate speech, the prevalence of hate speech now, according to the latest audited statistics that we've published, is down to 0.02%. That means for every 10,000 bits of content, if you were scrolling endlessly on Facebook, two bits of that those 10,000 bits of content would be hate speech. And that is down by about 50-60% on where it was 18-24 months ago, for one reason only: because of AI, because our AI systems have got so much better.
Well, I think that is a very optimistic point to leave this on. Nick, it's been a great pleasure. Thanks so much for taking the time to come in and talk to us today.
Thank you. Thank you.
The rise of artificial intelligence is raising fresh fears about technology's role in distorting the truth. It's setting up a test of the strength and resilience of democratic institutions across the globe.
And it comes at a time when many governments are grappling with the power of social media and its ability to stoke division.
So in an effort to sidestep mistakes of the past, lawmakers are racing to put up guardrails for a technology they don't fully understand, while AI leaders vie for a bigger role in shaping them.
Now, both camps don't exactly have a great track record here, so why would AI be any different?
In this episode of AI IRL, we'll explore what's at stake for democracy if it isn't. Congressman Ted Lieu, thank you so much for joining us. So you're a representative of California. It's home to some of the biggest companies leading the AI boom. And it's an exciting time in technology, but also a somewhat precarious chapter in society. we saw how social media undeniably played a role in eroding the public's trust in institutions. What risk do you think AI poses to democracy?
As a recovering computer science major, I am enthralled with AI. It is going to move society forward. It already has. There's already some big risks that we also see, and we have to mitigate those risks while reaping the benefits. So in terms of democracy, AI is very good at doing fake videos, fake voices. If you give an AI algorithm half an hour's worth of your voice, it will sound just like you, Jackie. If you give it 2 hours worth of your voice, your family members can't tell the difference. And then you can see how that could be quite disruptive to democracy and just to regular scammers in everyday life where people might get tricked by AI.
How worried are you?
I'm somewhat worried because when social media first came out, people were fascinated by it, they took it seriously, and then over time they realized, oh, we shouldn't trust everything we see on the internet. And that's what I want people to see with AI and the internet. They need to have some skepticism and not trust everything that they see and do some double checking.
I mean, it's not new that legislation plays catch up with technology a lot of the time. We saw that with even over the last 20 years, Napster, more recently, look at something like the Cambridge Analytica scandal with Facebook, Meta. We believe that AI can be any deal with Facebook, Meta now. And I wonder, should we believe that AI can be any different in terms of how legislation can help?
So my view is AI is like the steam engine, which was quite disruptive when society first saw it work. It's going to become a supersonic jet engine in a few years with a personality. And I don't think we're ready as a society or as a government to see all the amazing benefits of AI, but also the disruptions. For example, in terms of the labor force, AI is simply going to eliminate a number of jobs or make a number of jobs more efficient. Well, what do you do with that? Do you go to a 4-day work week? It's my vote that we do that. Or do you fire a quarter of your workforce? Or do you make them work 25% harder? These are all decisions that we have to make, and I'm not sure we're ready for that.
One of the things people are concerned about is that being able to discern the veracity of the audio or images that we see online is just going to get even more difficult as AI gets more sophisticated. Do you think AI has the potential to decide the 2024 election?
I don't think so. I honestly think it's going to be decided on one issue, abortion, and I don't think the Republicans are going to be able to overcome that issue. But AI can be disruptive in putting out fake videos and making people think that, for example, Joe Biden said something that he didn't, or that Donald Trump said something that he didn't. And again, I want people just to be somewhat skeptical when they see videos, especially political videos.
When it comes to reining in AI, you and some lawmakers have proposed that a national commission take a deeper look into what actually needs to be regulated before actual regulation is written. Talk to us about your thinking there.
So I've introduced bipartisan legislation that will create a national bipartisan blue ribbon commission to make recommendations to Congress as to what kinds of AI we might want to regulate and how we might want to do that. There's precedent for this. In the DoD military side, there was an AI commission that did quite well, made some good recommendations. This is the same for the civilian sector. And when we look at AI, because it's so massive and so broad, I think we need a commission that is transparent, that can narrow down the issues we have to focus on, and then give us some recommendations on how to go forward.
But is there a risk that we miss the window to regulate it because we're busy creating a group to structure that regulation where AI is just, it's going to keep going?
So the intent of this commission is not to delay regulation. It's pretty quick. If it becomes law, it requires a report within 6 months and a second report within a year. And then in the meantime, you can continue to pass legislation. So there's certain elements of AI that you don't need a commission to talk to you about. For example, AI that can destroy the world. So right now,
How do you even start there?
So there are these weapons in Department of Defense known as autonomous weapons, weapons that launch automatically. So I've introduced bipartisan legislation that basically says, no matter how amazing AI ever gets, it can never launch a nuclear weapon by itself. There's got to be a human in the loop. So that can proceed and become law, and other sorts of bills can become law while this commission looks at the broader pictures of AI.
You've talked about tapping experts to help you kind of develop some of that understanding. And Congress people have invited people like Sam Altman and other tech leaders on the Hill to really talk about their view on how this technology should be regulated. But do you think that lawmakers have gotten too cozy with some of these tech leaders?
That is always a risk. So I worked with the vice chair of the Republican caucus. I'm the vice chair of the Democratic caucus, and we brought in Sam Altman for a bipartisan dinner. It was a terrific dinner. He was very instructive, and I thought it was very helpful. I also made a point to bring in other civil society experts who had different views of AI risks and AI bias, to make sure that members were getting both sides of AI.
This AI National Commission bill that you put forward, it's a bipartisan effort, but I'm curious what your thoughts are on how a Republican administration would regulate AI.
I think the best way to think about AI is it's not a human being, it's not sentient, it's a tool. And tools can be used for good purposes or bad purposes. So there's nothing particularly partisan to me about AI or about technology in general. And that's why I think if you look at Congress, we've done a number of bipartisan bills, for example, on cybersecurity. And to me, AI is in a similar realm where it's not really a partisan issue. It's how do we want to make sure that we reap the benefits and mitigate the harms.
Do you think it's a unifying issue in some ways?
It could be. So, we don't want, AI to destroy the world. So hopefully we can unify on that.
Do you think that AI can help with some grassroots campaigning?
Right, like write me a fundraising email in the style of a Taylor Swift song.
Yeah.
Or something silly.
Would pay attention to.
AI could totally do that. And so I am assuming both political parties are going to be using AI, not only in this election, but in every upcoming election. But when you mentioned Taylor Swift, that was interesting because part of their problem with AI is how do you monetize what is happening? You have these large language models that are scouring the entire internet to train themselves. Part of the internet are copyrighted Taylor Swift works. Do you compensate her for the training of AI? I don't know. Then the second question is, well, if this AI algorithm generates things that sound like Taylor Swift lyrics, do you compensate Taylor Swift? I don't know.
Well, on the topic of kind of the relationship that the technology industry has with Washington, it's undeniably going to have to be much more intertwined, given everyone is still ramping up their understanding of what AI is actually capable of doing. Do you think leaders like Sam Altman are in some ways more powerful than lawmakers themselves?
I don't. I think he's helpful in providing information and providing insights into how these large language models work. And I think it might be good to sort of step back and give you my view of how I look at AI as a lawmaker. And to me, the best analogy is sort of two bodies of water. You have this large ocean of AI and then this small lake. So large ocean of AI is all the AI we don't care about as lawmakers. So if your smart toaster has a preference for bagels over wheat toast, we don't care. But in this small lake are the AI aspects that we care about. So one of them would be destroying the whole world. Second bucket would be AI that isn't going to destroy the world but can kill you individually. So there's a lot of AI, for example, in automated cars. And if your cell phone malfunctions, it's not going 40 miles per hour. But if an automated vehicle and AI malfunctions, it can kill you. It's killed people. And there's a lot of AI in moving things, planes, trains, automobiles. And my view is we need to have more federal regulators more attuned to unique aspects of AI to deal with those specific issues. And the last bucket is the hardest, which is AI algorithms have some sort of bias that's harmful to society or harmful to individuals, whether it's hiring algorithms or algorithms that deal with bank risks and credit risks. That we have to grapple with, and that's much more complicated.
Moving forward, do you think artificial intelligence will fortify democratic institutions or erode them?
I have no idea. And I think...
I love an honest answer. I really love an honest answer.
That's a great question. I don't think anyone predicted how social media was going to look like decades later. I do know that most people aren't particularly happy with how it turned out, which is why I think you have more of a movement in Congress to try to regulate AI, because no one wants AI to look like social media decades later.
So you definitely think some regulations should be in place before the 2024 election?
I do. So for example, one of those is disclosure. I support legislation requiring disclosure of who pays for social media ads. If you watch a federal TV commercial, at some point if I do a commercial, it's going to say, I'm Ted Lieu and I approve this message. Well, in social media ads, you have no idea who paid for it. So for example, now if Russia is going to pay for an ad supporting Donald Trump, at some point it's going to have to say paid for by the Kremlin. And so people will know, oh, that ad was paid for by this organization or this country.
Nandira Simbuli, thank you so much for joining us. So you're a policy analyst and a researcher studying the impact technology has on institutions, diplomacy, media, entrepreneurship, culture, all of it. And you have a particular expertise in Africa. Could you tell us a little bit about how you're seeing AI play out in the region?
Thanks for having me. AI is playing out in both the good and bad, I guess the double-edged sword way that we'd expect. On the good side, we are seeing exciting innovations in use of voice in Rwanda, in Kenya, in Uganda, where we're seeing local languages being captured in voice databases that are then being used for service provision. In the case of Rwanda, I've heard from the government that they're using that voice that has been recorded through AI projects with civil society to expand service provision to local communities, which is exciting. On the other side, we have the usual markers. Disinformation is propagated faster by technologies that are able to be, co-opted for such purposes. In Kenya, for example, during our last election, we had a very familiar situation where obviously bots or disinformation for hire accounts were proliferating and actually sullying the information environment.
Are there any specific countries, you mentioned Kenya, for example, are there any other kind of country level examples that you can give us around how AI makes its way into democratic institutions?
I think writ large, any country on the continent that is leveraging social media is the first entry point. So Kenya, Nigeria, South Africa, practically most countries on the continent do not face wanton internet shutdowns during moments like elections. We have seen a variation of these tools sort of being leveraged either by politicians or other groups that have been interested in trying to sully the information environment. And it hasn't just been tied to elections. We have seen anti-LGBTQ messaging really proliferate. We have seen messaging against or trying to sort of intimidate, pro-rights groups. We've seen, and some of that has also not just been from the continent. We've seen, I think there's a case of in Kenya and a few other countries, Spanish-affiliated right-wing groups that were leading these anti-abortion messagings that were proliferating everywhere. Then we have the case where it's particularly, very prevalent on the continent, and I think across all countries, with what we call dark social. So groups like WhatsApp, where these messages are then taken and we can't see the effect of that. And I think the most interesting one was even just the speculation of use of AI in Gabon during the 2019 elections there, where there was a rumor that there was a deepfake video of a president who hadn't been seen in public. He had issued an address to the country. And that in itself, the speculation around whether it was a deepfake or not, led to a coup attempt then.
So, I mean, of the countries in Africa that are using AI, which are equitable?
Equitable AI, the elusive search for equitable AI. That's hard to tell because I guess it depends on how we're gauging that. Is AI being deployed by governments, say for service provision? We're starting to see signals towards that. So some countries like Rwanda, Mauritius, and others are signaling AI strategies. A country like mine, Kenya, there has been a program run by the government that we didn't even know about that is trying to use automated decision-making to allocate affordable housing. So on that level, we're starting to see that how transparent, how accountable, how equitable these systems are in administering what they're supposed to do remains an urgent task for us to sort of audit. When do you audit? Do you audit after the effect? Do you audit before it's deployed, during? All these are mechanisms that we have to develop in real time and have very contextual conversations around. In the space of social media, obviously, it's not equitable because many of these companies, I think actually all of them are not equitable, they're not accountable to our regions. In Kenya, for example, one of the most interesting cases that you wouldn't think to tie to the AI discourse as we have it, but is very tied to, is very relevant to it actually, is the case of the labor force that has trained ChatGPT and other AI systems to actually label this data. So the workers who have been employed by a third party that had been contracted by OpenAI, Meta, have been taking those companies to court for the adverse labor practices, and everything from what has been human trafficking has been mentioned, PTSD, lack of care considerations, just precarious labor working environments have been mentioned. So that, in that regard, obviously, that is not equitable.
Take a step back because you make a good point in kind of illuminating these different examples that are proliferating across countries in Africa. And we often take such a US-centric standpoint because that's really where a lot of these companies who are creating AI technology are based. And you've said that Africa's digital transformation is really a frontier for the geopolitics of digital technologies broadly. How are you seeing this play out with AI, and what can the U.S. learn from it that perhaps we're just underestimating?
Africa and perhaps Asia and Latin America currently are in an interesting position where everybody, that is the US and China writ large, are trying to get them to fashion their transformation pathways to their image. So you have either the kinds of technologies you're told you can use. I think Huawei was familiar in the US context, being banned in US. That argument to African countries is moot because that company and Chinese technology has been the backbone of the infrastructure that has connected us today. But at the same time, while they have the hardware element locked, the social media, the application layer is predominantly US companies that we're leveraging, and then the entry of TikTok. So those geopolitics of decoupling then tend to be moot in our context with AI. But what that translates into practice remains to be seen, because a lot of this tends to follow a cut and paste model, erase Europe, add Africa in there, and then launch it, shake hands, and we call it a strategy. But is it representative of not just the governments, but other stakeholders who are supposed to buy into it and be guided by that in AI adoption? So there's a lot of that wrestling and jostling, I should say, that informs a lot of what is called African digital policy making. But I think what has been emerging more and more from African policymakers is that for them, the most urgent task is how to leverage digital to deliver dividends, addressing jobs, addressing climate change. We have a climate summit going on in Kenya right now. The big question would be, if you say AI, what does that have to do with the climate urgency that we have to do? So those practical questions still color and bring an interesting pushback to the typical geopolitical conversation on technologies.
There's one interesting thing one thing I find particularly interesting about Africa as a continent is the number of languages and regional dialects that are spoken by people, often by groups that aren't very large. And although we sort of briefly touched on this at one point, I wonder if you think AI could help either bridge the gaps between communities or languages spoken, whether that's to help spread information or just, in general, help people feel better informed about what's going on around them.
More represented.
Yeah, exactly.
Oh, absolutely. That's where I can definitely, smile and give a positive outlook, because the diversity of languages also means diversity of knowledge, wisdom that hasn't been, captured, that can help us, reorder the world. AI technologies like the Common Voice project that Mozilla and others have been running can help us capture that knowledge, again, with the conditions that this is not just for extracted for some company somewhere to go and sell some intellectual property limited sort of like, bounded instrument, but will actually help us build a new commons that is more representative of the world and representative of a majority of a people who have not informed how the world is ordered today.
To shift it back to the United States for a bit, one of the fears swirling around AI right now is that it could further erode the public's trust in institutions here, especially as we have a democratic or an election coming up in 2024. Do you think in some of the countries you spoke about, do you think that AI can actually help empower people to participate in the political process?
I think it can, but again, it's not just about the technology itself. I think AI is just the latest iteration of technologies showing us that the intrinsic motivation driving their use, their adoption, and their iteration is what determines that outcome. So, for example, it turns out that, the popular chatbots, ChatGPT, Bard, and others are so easily hackable to actually drive a different agenda from what is bounded as a response mechanism. If we tell people rely on, a chatbot to let you know about the electoral process, if that is hacked and it feeds them misinformation, you sort of fed them to the wolves. And, working that back could be, it could be difficult, and oftentimes we don't.
Do you think it's the democracy that needs to change or technology?
Both.
Both.
They both need to change. The challenge we're having, and this decade is really laying it bare for the continent, is the tick box has always been elections, and we're seeing that the more and more other, countries are having elections, the less and less democracy dividends are being delivered. Nigeria just had its own moment. In fact, just today, as we're speaking, they're waiting to find out the rulings from a tribunal that was set up to assess whether it was a free, fair election. And we're seeing a lot more of that. Western Central Africa, we're seeing coups happening post electoral processes or democratic processes. There's a lot of, grievance there, and we need to listen to and argue that as a young people who are discontent with the way the world is ordered, there's a valid point there that we need to assess. Not to talk down to, but to really understand where these grievances are. I like to say, when we think about the world today, for a younger generation on this continent, they're living in an age where many cans have been kicked down the road and they're starting to face them even before they've found their way in the world. Will technology help them make sense of it, or will it actually aggravate and give power holders more tools to control them? These depend a lot on how we order the society. So both things have to be thought of in parallel. And I like to say, we can walk and chew gum at the same time.
I mean, very last point then from me is we have seen, as you say, a number of military coups in Africa in recent times. Is AI something that's playing a central or even a peripheral role in those, whether for good or to counter them?
Well, certainly where bots and disinformation for hire accounts exist, they have been used to pass certain messages or seed certain messages in certain communities. I mentioned Gabon, where there was even the illusion of a deep fake. It was analyzed later and found not to be a deep fake, but that was after a coup attempt had happened because it was believed to be so. That message had already spread.
So it was too late.
It was too late. I mean, now that, that we can fact check after the fact, but if people were willing, there was a readiness to believe that speaks to other, discontentments that, the perfect opportunity arose to feed that. I wouldn't want to make it a causality, but there's absolutely something there that speaks to the fact that the way AI works is delivering in the way that society is already primed for it to operate.
Artificial intelligence has been used in Hollywood for years, but the recent boom in generative AI has sparked one of the biggest upheavals the film and television industry has ever seen.
The latest technology can generate scripts and replicate faces and voices of actors without them ever stepping foot on set. It's raised alarm among creatives who are concerned about how their work will be used and whether AI will render them obsolete.
Proponents argue AI can bolster creativity, not diminish it, by automating mundane filmmaking tasks that require more time and money when left to humans.
So on this episode of AI IRL, we'll hear from experts across the industry who have different visions of how artificial intelligence will transform entertainment and where that leaves human ingenuity.
If there's one thing everyone can agree on, it's that AI-generated films and TV will hit the red carpet sooner or later. The question will be, who gets the credit? Duncan Crabtree, Ireland, thank you so much for coming on the show.
It's a pleasure. Thanks for having me.
You're the National Executive Director and the Chief Negotiator for the Screen Actors Guild. AI has emerged as a key issue among Hollywood actors and other creatives, but it's been used in the industry for years. What is it about generative AI that poses such a threat?
Well, I think really it's the fact that the capabilities of generative AI really haven't even been tapped. The surface hasn't been scratched yet on them. And the idea that, that there could be an AI tool that could help do traditional editing a little more efficiently or provide some additional capabilities there is one thing. The idea that you could have an AI tool that's used to create digital replicas of performers and then actually convincingly create performances that appear as if they did them when they had nothing to do with them whatsoever, that is a sea change in the capability of this type of technology. And it's one that our members are hugely worried about, and rightly so. And frankly, all of us in this society should be worried about this kind of capability.
I mean, just to be super clear, just for anyone who's not aware of the technical requirements of doing something like this is the idea of essentially capturing an actor's likeness, potentially their performance style and their voice, and then saying, well, we've got that now, that's in the system. We can just essentially reuse that for whatever we want in future.
That's exactly right. And in fact, lest anyone think that this is some sort of, overwrought concern or something that is just speculation, the studios and streamers literally proposed that they should have the right to do that in this negotiation. On July 11th, they gave us proposals in writing that said that background actors they should be able to engage them to work for one day, pay them for one day's work, create a digital replica of them by scanning them, and then have the right to use that digital replica forever with no further consent and no further compensation. And they made a similar proposal for principal performers, that's like speaking part performers, for any kind of franchise.
Well, how about Indiana Jones, where Harrison Ford was de-aged using AI? What role should artificial intelligence play in Hollywood going forward?
When we came into this negotiation, we could have proposed just a ban on the use of AI as it relates to performers. We did not do that. We came in with 4 very complex and nuanced proposals that were designed to really let the industry use AI as long as it was being done with informed consent on the part of the performers affected and fair compensation for whatever's being done. So when we talk about things like de-aging, other types of uses, that's absolutely fine if it's done with the consent of the performer. And that's something that certainly, if using that example for the Indiana Jones movie, obviously they planned that out. That wasn't some sort of last minute surprise that they were going to use de-aging technology for that. And from what I understand, that was discussed with and approved by Harrison Ford. So, the kind of use of these technologies, when done with the informed consent of the performer, it can be helpful to production. And it's not something that we're opposing. What we're opposing is companies feeling like they have the right to just do that without getting any kind of informed consent.
And are these, as far as negotiations on deals and things are concerned, are these non-negotiables from your standpoint? And what other non-negotiables are there?
Well, I mean, the principle is non-negotiable. The principle that actors need to have informed consent over the creation of a digital replica and the use of that digital replica and fair compensation, that's not negotiable, clearly. I mean, those are basic principles that need to be enshrined. The mechanism by which those would be carried out, absolutely is negotiable. We negotiated over it for 35 days with the companies. We would have been negotiating over it more since then if the companies would have come back to the table instead of having us be out on strike for 75 days with no discussions over these things. So, we don't come to negotiations saying their conditions on these negotiations or this and that are non-negotiable. Having said that, if the principles we're talking about are enshrined, we are very open to discussing the mechanism by which that happens. And we have been.
In terms of like the history of technological impacts on cinema and Hollywood, where does AI in this current debate sit in terms of severity? Is it unprecedented?
So these are, in our view, existential issues, and they're issues that we really have to address now, because given the developments in generative AI over the last 12, 18 months, we certainly can't wait another 3-year contract cycle to address them. We can't even wait a year to address them. I had 14-year-olds come up to me on the picket line at Disney saying how concerned they were about not being able to have a career as an actor because they felt like AI was going to take away their jobs. I mean, when 14-year-old performers are saying this to you, you really have to listen.
Unprecedented times, Jackie.
Definitely. Do you think AI will continue to be a sticking point in negotiations going forward?
We did make some progress during the first part of negotiations, but as I mentioned before, there were proposals put out right at the end of our negotiating period that were really inconsistent with the idea of informed consent and fair compensation. And so the only AI deal that we're going to agree to is an AI deal that reflects those principles. How it's implemented, still some bargaining to do, but those principles must be enshrined in the contract.
Do you think we're going to get replaced, Jackie?
I hope not.
Yeah, me too. Well, Duncan, thanks ever so much for joining us.
Thank you.
Absolutely. It's my pleasure. Thank you for having me.
Tim Weber, it's great to have an Oscar winner on the show today. So thank you very much for coming in.
Pleasure.
You're a visual effects supervisor, chief creative officer at Framestore, which people will remember from Harry Potter, Gravity, of course, the Avatar films. You've been behind a huge number of blockbusters over the years. So let's start big. What has the generative AI boom done for the visual effects industry?
I think the first thing it did is worry a lot of people initially, because everyone looked at it and it could do such amazing things that were so impressive in short clips, in demos, that we all thought, it's, our jobs are going. But quite quickly, we looked at it and realized there were lots and lots of limitations, and it wasn't going to totally revolutionize the world immediately, but it is still going to have a big evolutionary effect, almost revolutionary effect, I'd say. It has a lot of potential in a lot of different areas, and when it does when it does apply to a certain process, it makes a big change. It, it typically can speed certain things up by factors of 1,000.
Yeah. So what are some examples of things that we might have seen on screen that has used some of the more advanced AI tools?
I mean, there's the obvious stuff where faces have been replaced with someone else. A stuntman has an actor's face put on them using the deep face technology that we're all quite familiar with. But it is used, we developed a piece of AI technology that enabled us to, when we build a virtual creature or a virtual human being, we build them from the inside out. We build skeletons and then muscles and then skin, and the animator will move the skeleton and the computer will work out how the muscles move and how the skin slides on top of that and how the light reacts to it. Now, the process of doing that could take sort of 40 seconds. You make one move of the skeleton, it could take 40 seconds to update all of that. But we were able to accelerate that process to make it almost immediate. And what that meant was an animator could move a character in some way, and they could see a genuine representative of how it was going to look in the final image, because all of the subtle details would change too.
Where does AI play a more intensive role, and where does it have more of a potential to kind of take off some of the more labor-intensive tasks?
Where it is taking off now, I would say, is in the early stages of working out. At the very beginning of a project, for example, we do concept design and we draw up how the director wants it to look. Now, tools like Midjourney can create images very, very quickly from scratch. But even there, they're not good enough to create our final image, but good enough for people to go, I like that bit and I don't like that bit, or I want it a little bit like this.
The initial inspiration.
The initial inspiration, yeah.
Thought provocation.
Thought provocation, yeah. We used to do it by searching the internet for existing images, and it was hard to find something even close. So AI in that space gets us quite a bit closer, but still a long way from what the concept artist can do when they can, juggle something into exactly what the director is after.
Hollywood actors and writers have been in intense negotiations with studios, and artificial intelligence has emerged as a key point of contention, specifically because they're afraid that their work, their image and likeness might be used to eventually put them out of work. Does a similar threat or concern exist among visual effects artists?
I think it will, as a lot of people in our industry worried that they're going to be out of a job, and I think the job market will change, but it won't put people out of a job. And I personally, I believe the same is true in writing and acting. I think it changes the way things are done a little bit, but you can't currently. The more I look into it, the less I worry that it is going to replace us. It so still needs the human input.
One of the things I always think back at when I think of like examples of amazing technological moments in film is Toy Story, back in 1996. Is there a feeling that we're at a similar point now, or is the hype kind of getting away from us?
Well, I think it'll be interesting. One of the amazing things about Toy Story is they took technology that was still quite nascent and they created a new form of films, computer animated movies. At the moment, there is no Toy Story equivalent for AI, and I think it might take a while and it may never happen, because one of the things about AI is it is used, as I've sort of described, in a number of different areas to help speed up little bits here and there. It's not like a whole new way. I mean, if we get generative video where you can do voice prompts and you can control the video and it will look sufficiently good quality, possibly there may be something new out of that, but I think that's a long way away.
In the case of visual effects, will it always kind of require this additional layer of technical expertise?
I think, and I'm talking about visual effects at the high end, where we work is right at the high end. I don't see that can happen at the high end. You want to be led by a master storyteller, by a Steven Spielberg, and it takes them, years and teams of experts to help them craft their movie. The movie that will be crafted out of AI, and look at what ChatGPT creates. It assembles all the words from the internet and spews out something that is plausible and is often useful and often correct, but not always correct, but is often very useful. But for it to, that is different to being a perfectly crafted, original piece.
Using your imagination a bit, what are you most excited about when it comes to artificial intelligence and its potential to transform VFX?
I think there's a number of things to be excited about, but one of the big ones to me is how it can bring VFX to wider areas. It can, because you can render very quickly, it could allow us to create what I'm going to call a volumetric movie. So, say you're watching a movie, but one where it's like a 3D movie, but it's more genuinely 3D. It can encompass you, and as you move your head, there's three-dimensionality to it. It's not just stereoscopic vision. So that would be a whole new way of showing movies. It would be all the more powerful.
As an Oscar winner, someone who's received an Academy Award, do you think there's a future where an artificial intelligence and I'll say itself, could be worthy of winning the award rather than a human being?
I mean, I think there's significantly far into the future, there is all sorts of possibilities. If we get to the point where an artificial intelligence could be winning the Oscar, we're also at the point where an artificial intelligence could be the Prime Minister or the President or doing all sorts of other things, at which point I think we'll have an awful lot to worry about, and it may be great, but there'll be a lot to worry about.
Tim, thank you so much for joining us.
A pleasure. Thank you.
Edward Saatchi, thanks for coming on the show.
Yeah, thank you.
So you're the CEO of Fable, a company that's used artificial intelligence to create original South Park episodes. It was something as a proof of concept, but still pretty cool. You did it with a tool called AI Showrunner. Could you walk us through how that works?
Yeah, so, we've been in AI for about 5 years, and every single year, other than this year, we've always felt AI just isn't good enough to be funny, to really make a work of art. And this year, it really did change. And so we were still reading, articles and people saying, "Oh well, of course it's never going to be funny. It's never going to really work." And we thought, well, actually, that's not what we're seeing, and we should maybe illustrate what we're seeing. And so we thought that creating the AI showrunner would be a good way to kind of wake people up to just how good AI has become. So we used as an example South Park, which is obviously an incredible television show, and very funny and very anarchic and irreverent, and not sort of an AI telling thing, really quite sophisticated in its comedy. And I guess you have to have a lot of understanding of like world events and like what's going on and the satire of it. And so we thought that we'd create a tool to make infinite South Park episodes, just for our own research. And we created, I think, maybe 10 or 15 just to kind of illustrate the point and release them. We also worked with journalists so that the journalists could come up with their own story in a sentence, and also put themselves in that story, just to illustrate that you can do whatever you want. And yeah, I think people were both very angry that we did this during the strike, and very shocked that they laughed.
You mentioned the writer's strike just now, but before we talk about that more, do you know if Trey Parker and Matt Stone, the creators of South Park, saw any of the episodes that were made?
No, I don't. And we're huge fans of theirs. But I do think that the episodes were hopefully helpful to the conversation around the strike, so that more controls can be put in place around AI.
Right. And do you think they were then? Do you think that something like what you did was helpful in moving this debate forward?
Well, I think in any negotiation, more information is better, because you can negotiate not in a fog of war, but in a real sense of understanding. And the timing of the strike meant that it was happening at a moment when there was a lot of fog of war around what is AI going to be used for. There were reports of studios literally scanning extras and then saying, we now have the rights to your scan forever, which is completely disgusting and insane. And so there was a lot of worry. And also there was some complacency around, well, of course, AI can't write anything good. And so I do think that giving more information means a stronger hand for the negotiators to say, we want to have AI only used with the permission of the artists, and not producers saying, okay, well, why don't we get rid of everyone? It'll just be us, the producers, talking to our computers, and we'll be so profitable. We've got to make sure that that doesn't happen.
Okay, but the South Park episode wasn't just a stunt. You're actually producing an AI-generated TV show called Thistle Gulch, and it's sort of like set in a simulation of a Western town where AI characters are exploring the Wild West. What kind of effort does a project like that really take when you're using AI?
Yeah, our goal is to make AI people. And so that's why we build simulations. And in the process of building that, we realized that actually having a sort of reality TV of what's going on in this simulation, a little bit like the Truman Show, would be really cool, and that you'd get great results. So we didn't just create the ability to make episodes of South Park. We actually made a simulation of the town of South Park. And those episodes represented things that were happening in South Park. And then with Thistle Gulch and with some of the other simulations that we're building, you'll be able to see both inside the simulation and also get reality TV episodes of what's going on with your AIs. Just as in the Truman Show, you got those episodes coming out of that fake world that Truman lived in.
Let's talk about the profits behind making an AI-generated television show versus if you were doing it the traditional way?
Yeah, obviously the costs are much lower. I think the exciting thing for us with Showrunner and allowing people to make new episodes of simulated shows is that creators could actually start to earn money. That's our key metric: is how do we get the top creators, so the top 5% who create really good new episodes of shows? How do we make sure that this is financially good for them?
It makes me think about those that go to school to study film and how to make TV shows, and whether AI will just render that obsolete. And brings me to the question of, like, what is the creative element? Where's the human component in creating shows if AI is making it super easy? Where do you see that going in the future?
Yeah, I think the area that I'm the most excited about is AI movies. So feature films entirely made by one person. And Orson Welles, maybe the greatest filmmaker of all time, said, I've chosen a terrible life in that I spend 99% of my life hustling to make money or to get money from the money men and women. I have to be nice to all these people that I hate. And it's not a life. I get to do 1% of my time doing something that I love. And I'm very excited for films, the making of films, to become more like the making of novels, more like the making of paintings, where one visionary, a kind of writer-director who's got a vision in his or her head, can, with AI, actually bring that to life.
Sorry, guys, all these people behind the cameras here, like, we don't need you anymore. Apologies. Me and Jackie are going to do this on our own.
Artificial intelligence is ushering in a new era of scientific research. From biology to physics, AI-driven tools and techniques are poised to expand our understanding of the world.
Forms of artificial intelligence have been used in science for years, but the rise of generative AI is unlocking greater speed and accuracy.
AI-driven simulations have the potential to streamline the search for new drugs. And in genomics, algorithms can sift through genetic information, identifying patterns and disease markers that would have otherwise taken years to uncover through human efforts.
And it can help with hypothesis generation by analyzing papers, suggesting new research directions, and even predicting potential outcomes.
So in this episode of AI IRL, we'll explore what having an AI assistant in the lab will look like, and what science moonshots AI will bring closer within our reach. Sam Rodriguez, thanks so much for coming on the show.
Of course, yeah. Great to be here.
So you're a scientist and an entrepreneur that's spent his career developing new technologies that help neuroscientists better understand the brain. You also just started a new organization called Future House that's backed by ex-Google CEO Eric Schmidt that's dedicated to science moonshots using AI. Why don't you talk to us about some of the breakthroughs you're hoping to achieve?
What we're interested in doing is building an AI scientist. Okay. And, essentially what that means to us is building an AI to which you can delegate some of like the tasks of science as scientists. So I'm a scientist, right? Like you said, I've been a neuroscientist, a bioengineer. I actually started out originally as a physicist. Throughout all these different areas of science, basically, you encounter situations like, for example, maybe you have an idea, and you really want to know, like, has anyone done this before, right? Has anyone studied this before? Has anyone tried, building this device or like conducting this experiment or whatever? And, you literally like cannot go and read the entire literature on your own, right? Or like, another example, you collect some data set and you have like 100 different ideas for how to analyze it. And you literally don't have enough capacity as one person to go and like analyze your data set in all the different ways that you could imagine doing it. Science is like really bottlenecked by like, our ability to go and do these tasks. And so our idea is that actually we're getting to the point where we're going to be able to build AIs that can like do science themselves, that can assist us with tasks like analyzing data, like going and searching the literature, et cetera. And that this will lead to a major speed up in the pace of research throughout science. And so we're really focused on biology, but I think that the impacts here will be everywhere from like, physics, chemistry, like climate, energy, like basically all areas of science are going to be touched by the AI scientists that we're trying to build.
Future House is a nonprofit organization. Is there a reason you didn't want to do this as a private company?
Our 10-year mission is to accelerate the pace of discovery and to make access to cutting edge scientific expertise like available worldwide. That is not a mission that will necessarily yield a profit in the next 10 or even 20 years. It might, but it might not. If we were for profit, we would get pushed into making a drug really, really fast, so that we could provide returns to our investors. And obviously drugs are important, but we think we can have way more impact if we pursue this longer term vision. And we're lucky enough to be backed by people who want to support us in doing that.
So let's say I'm a scientist. I have my AI companion helping me crunch some of the numbers. Where do I fall in the scientific process? Where do humans' role come in?
At the end of the day, AI is a tool that like allows us to do the things that we want to do better. The fundamental thing that humans will always do is decide what they want. Right. So if I'm a scientist, I will be saying, hey, I would like to investigate this. I would like to study, for example, how neurons are connected to each other in the brain. And I want to test like specifically these hypotheses. And then you'll have your AI assistants or the AI scientists that you're working with that will go off, and you'll be able to direct them in particular directions to go and come up with hypotheses or go through the literature and come up with experiments, like plan out those experiments, execute those experiments, et cetera. But like the humans at the end of the day are going to be like the directors, right? The orchestrators. They're going to be the ones who are deciding what needs to be done, evaluating the evidence and figuring out basically where they want to put their resources.
Talk to us about some of the limitations and also the risks of using AI in science, because I know ChatGPT is only one example, but it's still fairly, in the early stages, and it's inaccurate sometimes. The stakes are much higher when it comes to things like drug discovery.
Oh yeah, and I think that the inaccuracies that you need to worry about, it's like whether these tools can be used for like, antisocial purposes, right? Whether people can use them to come up with bioweapons and things like that. Huge, like really serious risks here. And these are things that we think about a lot. And so I think the main thing is making sure that you have partnerships and dedicate a lot of resources whenever you build a new AI powered tool to testing how it can be used nefarious or otherwise ill purposes, making sure that you put safeguards in place so that it cannot be used in those ways.
When it comes to bioweapons, that sounds terrifying. How big of a threat is it right now with AI in its current form?
It's difficult to make bioweapons for like the same reason it's difficult to make drugs, actually, that like we really don't understand human physiology. We lack a lot of basic information about human physiology. And so therefore it's like very hard to cure disease. It's also like very hard to develop like targeted weapons that can like mess with your body. So I'm not meaning to minimize the risk, but I think that like, this is not something that I am personally like acutely worried about in the near term.
So it's not like someone in his garage has the potential of building a biological weapon.
Yeah, I think at the moment that is highly unlikely. We have a long way to go before we're at the point where someone could use the AI to build a biological weapon in their garage in a way that they could not do without the AI, right? So like already, I mean, you can search Google and you can, try to figure out how to make a biological weapon in your garage. And people could do that before they had ChatGPT. And there are people studying right now whether ChatGPT makes it easier or not. I think that there's a long way to go before it becomes like really, easy enough that it's really scary.
And I think that's really useful because you help us paint that picture that this isn't about throwing an AI at a problem and suddenly solving a question that we couldn't solve before, but it is about speeding up the process that is involved in trying to answer that question. And I think that's really useful to keep in mind, right? And that's what we're talking about almost with the bioweapons. Like it's all part of that same argument that we have so much to do. AI just helps us get through some of that stuff, not actually solve the problems.
It helps us get through it, and it will help us get through it much faster. Building an AI scientist will not just help science, it will help AI also.
What is the next frontier?
The next frontier after the AI scientist.
Yeah, after you solve all this AI scientist related stuff, which sounds like a walk in the park. So
yeah, we'll be, check back in a few days. We'll probably have finished it, right? Accelerating discovery research, after we have access to an AI scientist that will make science move much faster, we need to understand how fundamental biology works so that we can cure diseases. And, I'm hopeful that there are many, many diseases that we currently struggle with that we will have treatments for or cures for in our lifetimes by virtue of the acceleration that will come from, from combining AI, from bringing AI into science. So that's thing number one. And then thing number two is on the other side, once we have an AI scientist and people are able to benefit from access to that expertise, I really hope that the quality of medical care, for example, will get much, much better worldwide.
Sam, thank you so much for joining us.
Thank you. This was great.
joining us.
Great to be here with both of you.
So you're President Biden's scientific advisor, and you also lead the Office of Science and Technology. You also spent a lot of time at DARPA, which is the federal agency that developed technology like GPS and the foundations of the internet. Many people don't know that. And that's because government today isn't exactly known for being at the cutting edge of technology. Can the rise in AI mark a change in that, where government plays a bigger role in driving innovation versus playing catch up to the private companies that are developing it?
Well, AI is changing a lot of things right now, and that's why President Biden's been extremely clear that it's one of the greatest opportunities of our times, and it's going to come with risks that we have to manage. And the work that's underway, the White House has been driving a lot of forward action here in this area. That work is about managing risks, but it's also about seizing the opportunities. And some of those big opportunities from AI are about the research that continues to be funded by the federal government.
So do you think that government can be a driver of innovation in this new age of AI versus just relying on private tech companies to come up with that technology?
Well, we're seeing a surge, and we're very happy that that surge in AI technology has come from American companies. It builds on the shoulders of many, many, many decades of publicly funded R&D, and now what the companies are doing on top of that. So I very much see it as a system where all the pieces have to work together. I spent half of my professional life in public service, but the other half in commercial technology, and every big thing this country has ever done has taken all of us, and that's certainly going to be true for seizing these opportunities from AI as well.
What are some of the moonshots that the U.S. government is currently working on that could incorporate AI in advancing them?
President Biden likes to talk about this being the only country in the world that can be defined in a single word, and that word is possibilities, and that's what science and technology is all about. So I'll mention a couple of areas. One very important area of focus is changing health outcomes. And in this area, the President and the First Lady last year reignited their cancer moonshot. It set an extremely aggressive goal of cutting the age-adjusted cancer death rate by half over the next 25 years. That's about double the rate of progress that we've been making on cancer. The other goal that went with that is to change the experience of people and their caregivers and their families as they are all going through this cancer experience. And if you think about it, who isn't touched by cancer? This is one of the most foundational things, and an area where everyone in this country can pull together for a moonshot goal that really, really matters. Well, how are we going to do that? Well, to do that, we need to prevent more cancers. We need to detect more cancers quickly so that they can be caught. And we need better treatments for when cancer does move forward. And in every one of those areas, from public health to developing new drugs to tailoring clinical care for an individual, every one of those is an opportunity for AI to help accelerate progress in some very dramatic ways. So that's one huge example. I could tell you a similar story about dealing with all the effects of climate change as they're coming, modeling extreme weather and helping the country be more prepared for resilience.
Could you expand a little bit on your outlook on how that could be achieved?
Well, let's step back for a minute. What these AI systems are so powerful that they can seem magical, but really what they are doing is statistics at an extraordinary scale. So large language models that led to chatbots are about training these systems on human language so that they can build statistical estimates of answers to your prompts. When you're thinking about something like weather, that's another very, very, very complex system. Think about how huge the atmosphere is that surrounds the world. Think about how complex the calculations are when we run simulations to try to estimate how the weather will progress in the short term. And then think about how hard that problem is when we're thinking about climate effects over many years and many decades. That is the complexity that AI helps wrangle because of this new approach of training a computer on a lot of data so that it can build better estimates of what could happen in the future. And harnessing that power is going to lead to some very practical advances, we think, in both understanding weather better, but also understanding long-term climate effects. That's what's going to help us be more prepared and more able to deal with what's coming.
And obviously, the US is a huge key driver in developing AI technologies. But I'm curious, as a non-US citizen, who do you see elsewhere in the world doing interesting things?
Well, this is a global technology. First of all, again, AI, it seems like magic, but it really is human beings and corporations that are building compute, that are training it on data. They're using algorithms that are developed in research communities and widely shared. And so the ability to build AI of various sorts, it happens around the world. And in fact, I think that's good because there's so many applications globally that we'll want to pursue. But of course, it does mean that it really comes back to the question of what kind of a future we're going to build. And, if you think about it, it's such a powerful force right now. Every country around the world is using AI to build a future that expresses their own values. And I think this is why it is so important that like-minded countries with democratic values and norms come together and agree about how we're going to build the rules of the road for AI.
You're advising President Biden on this new age of artificial intelligence. How is the Biden-Harris administration thinking about AI?
The starting point for this administration is what the president talks about every time he talks about AI. He sees its power and its potential. And every time he talks about it, you can hear his optimism about all the things that it's going to bring. And he's very clear-eyed that that doesn't come for free and that managing its risks has to go hand in hand with it. President Biden frequently talks about the fact that we're at a pivotal moment in history in which the choices that we make in the next few years are going to shape many, many decades ahead. AI for him is very much part of this moment. And that's why you've seen this administration move out so actively with urgency, starting by listening to all kinds of communities. We talked about the work that we've done with industry, but also we've had very active engagement with civil society.
Dr. Prabhakar, thank you so much for joining us.
It was a pleasure. Thanks for having me.
And Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
I mean, one thing that we're working on heavily is the ART2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine scale features of cloud turbulence, what's responsible for hurricanes, for instance, how would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall, what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I mean, I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand, and AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we are doing will help towards this because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now? Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years' time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you. It's
Thank you,
been
Maud.
fascinating. Yeah. Thank you for taking the time.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source and the academic literature and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy. We're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
In 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted galenium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Like, do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, a little to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the U.S. really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, U.S. policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is just very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case, and people think that's the case. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's That's not right. The case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
The Israeli attack that took place today on Qatari soil can only be described as state terrorism carried out by someone like Netanyahu.
Unprecedented attack. Israel targets Hamas's leadership in Qatar, with Doha calling it a flagrant violation of international law. U.S. President Donald Trump says he's very unhappy about the strike. A judge has temporarily blocked Trump from removing Fed Governor Lisa Cook, allowing her to remain on the job. And fresh tariff threats. Trump is said to be willing to impose new tariffs on India and China to push Russia into negotiations with Ukraine. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersechi in Dubai. Well, our top story this morning from the region, an unprecedented attack on Doha in the late afternoon yesterday, carried out by Israel, targeting key Hamas officials. What happens next? Very strong condemnation coming through from Qatari leadership, in addition to other Arab states and from other voices around the world. We will be discussing this story at length throughout the course of this show, especially on what happens next. But as for markets, what we saw yesterday was another record high for the the S&P. Today, this morning, futures leaning towards the green as well, up 0.2%. All eyes, as we've been talking about, is going to be on that inflation data that's coming on Thursday as the market continues to price in a more aggressive Fed easing cycle. 3 rate cuts priced in by the end of this year. 10-year yields moved a little bit higher yesterday, so we moved a couple of basis points higher throughout the course of the day. Of note, the downward revisions to the jobs growth data, a downward revision of more than 900,000 for 2025, so really speaks to some of the weakness that's propping up in the labor market. USD slipping a little bit this morning, and then Brent taking note, of course, of the geopolitical developments in this part of the world. We are up 0.9% this morning. But the news doesn't stop there. We also had some developments out of France with the President Macron appointing a new prime minister. Fairly quick turnaround of events there. And also, as well, we've been talking about the market impact that all of these political developments in France have been having on OATs. Yesterday, OAT, 10-year OATs pretty much converged with 10-year BTPs, which is a lower rated sovereign credit. So quite a remarkable development there. In the sense that investors are shying away from buying and holding on to these 10-year French bonds in anticipation of further fiscal slippage. So that is a big topic of conversation in Europe. We'll talk more about that later on the show as well. Okay, let's check in on how markets in Asia are faring. David Inglis joins us from Hong Kong. And David, one thing I forgot to mention in my recap, of course, was the Apple effect. And we've seen a bit of a muted reaction in that stock in after hours. How are things playing out in Asia this morning?
Yeah, you know what? We were actually looking at the Apple effect because certainly there is a key element of the supply chain in the Asia Pacific, and certainly in terms of index constituency, that does tend to move more often than not. In today's case, though, it's still in tech, still in hardware, by the way, but it's not so much the Apple story that's really playing out. But again, as we were pointing out, right, the Oracle story from overnight on cloud revenue really giving the AI bulls more to run with, really. And you can see that with TSMC. Alibaba, of course, is separate, but that's also now an Alibaba play. We closed 2% higher in the morning session. We were up as much as over 3% at one point, so we did come off highs, 4-year highs on that stock itself. The other thing we're tracking is CATL. That's the big lithium producer in China, and reports there that it might be able to get one of its mines back online earlier. More supply coming to the market. Lithium plays are actually to the downside. Right. Back to the tech theme, though, as Giovanni, you're pointing out, and let me take an equity overlay on the fixed income story. There is an equity case to be made, really, when you look at many of the benchmarks in the region here. I'll get to the benchmark in a moment, but the Kospi index, case in point, 2 more hours of trade, and if things stay the way they're trading at the moment, we're set for a record close on that specific benchmark. The Hang Seng Tech, of course, which is indicative of this flow of money going into tech plays. We're now looking at 9 days of inflows coming into this. Now, on the note I was just making on the Asia Pacific benchmark, record in Korea, I'll end on this. We're a good day away from taking out the 2021 peak on their Asia Pacific benchmark, which means by the weekend, if things continue, we could actually see a fresh record high on Asia Pacific. I'll leave you with that fairly optimistic note at this point in time. Back to you.
We need a bit of optimism in these times. David Inglis in Hong Kong, thank you so much. Israel has conducted an unprecedented strike against senior Hamas leaders in the Qatari capital, Doha. It is a move that is widely seen as escalating an already tense standoff between the country and Arab nations over its war in Gaza. This attack against Hamas in Qatar also drew rare public criticism from the U.S. President Donald Trump, who said he learned of the attack too late to stop it.
I'm not thrilled about the whole situation. It's not a good situation. But I will say this, we want the hostages back, but we are not thrilled about the way that went down today.
Did he notify you in advance? Did the President of Israel tell you in advance? No. So you were caught by surprise, sir?
I'm never surprised by anything, especially when it comes to the Middle East.
A rebuke of sorts coming through from President Trump there. The White House to release a full statement later today on the developments in Qatar. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. An unprecedented attack, very strong words coming through from the Qatari Prime Minister late last night. He called it an attack of state terror. Dan, what has been the reaction specifically within Israel, especially the families of those hostages still held in captivity, and from the broader Middle East region?
This attack indeed unprecedented in terms of the site, not operationally. It's worth remembering that Israel has carried out a number of decapitation strikes against its enemies on the various fronts of this war, this almost two-year-old war. We saw that repeatedly in the Gaza Strip. We saw it in Lebanon with Hezbollah the summer of 2024, and we saw it this summer in Iran. This would not in itself be unusual. What's unusual, as you noted, is the site, Qatar, a U.S. ally. And I think it's fair to say that there's a great deal of indecision in Israel as to what this all means. First of all, because it's not at all clear that this attack was a success on Israel's terms. It may have targeted the leadership of Hamas abroad. It's not clear that it got the people it was meant to get, that the people meant to have been killed were indeed killed. In fact, that's been denied by Hamas. And as you noted, this war is almost 2 years old. 48 hostages remain, 20 of them alive. And there's a great deal of concern that this will distant any prospect of a safe return of those 20 live hostages and a resolution of this war in a manner that many Israelis would consider satisfactory. In fact, some have worried that Hamas may retaliate by executing some of those hostages. Throughout the war, there have been at times threats by Hamas to execute them. So right now, I think the Israelis are waiting to see, A, what indeed were the results of the strike, B, where do things really stand with the United States, whether it really was blindsided by this, or whether a transactional Trump presidency will be happier if it finds out that the strike was a success and contributes to the end of the war. That's the argument that the Prime Minister here, Netanyahu, made last night, that a successful removal of the Hamas leadership would bring a successful end to the war. In fact, peace in Gaza closer. And third of all, what this means for prospects of recovering those hostages alive and well, at least those believed to have survived so far.
Dan, thank you very much. We're going to pick up the conversation. Bloomberg's Dan Williams in Jerusalem. Let's now bring in William Roebuck, Executive Vice President at the Arab Gulf States Institute and former U.S. Ambassador to Bahrain. I want to pick up on what my colleague Dan was referring to, particularly the hopes of a breakthrough on the U.S. ceasefire proposal that was put forward last week. We understand that Steve Witkoff himself actually presented it to Doha, to the mediators in Doha. What hope is there of a breakthrough when both the negotiating team and the country that is hosting the mediation talks have been targeted?
It's a good question. I think right now there's very little hope. I mean, in the short term, just a few hours ago, I understand the Qataris have informed the U.S. administration that they are temporarily putting their mediation efforts on hold. They've done that before when there's been an incident of some kind. This is a much more serious incident from their perspective. But let's see what it looks like in a few days or a week. My assessment is that they will eventually be willing to continue playing the mediation role that they and the Egyptians have played in the past in this conflict. We'll see. But right now, the situation is running hot. The feelings in Doha and in other Gulf and broader Arab capitals is quite heated. Deep condemnation of what Israel has done. So I don't see prospects for the negotiations to start up again. And I also, on the Israeli side, just assessing the way they have responded to the negotiation proposal, I don't see a lot of strong interest on their side yet in that proposal from President Trump.
Yesterday, the Israeli Prime Minister Netanyahu made some comments. I believe he was at the U.S. Embassy, and he said that they had actually agreed to the terms of the U.S. ceasefire proposal. What do you think Hamas do from here? Also, with the knowledge that Israel unsuccessfully tried to take out Khalil al-Hayya, the chief negotiator for Hamas, who was in Doha at the time yesterday. Hamas are very much fighting an existential fight of existence within Gaza as the Gaza offensive continues and as international condemnation on Israel and on the war, which is going on for 2 years, keeps piling. What do you think they do from here with their backs up against the wall?
They definitely want a ceasefire. They want to get eventually, as a part of that ceasefire negotiation, get the Israeli troops out of Gaza. So they have a strong interest in seeing these negotiations move forward. I think in a few days, in the short term, a few days to a week, you will begin to see some signs of renewed interest on their side and on the mediator's side, the U.S. side, to restart these efforts. We'll see where it goes, but I think they have a strong interest in seeing the negotiations move forward. They want a ceasefire. They're clearly, I think, disturbed by these attacks on them, but they have a long history of having been attacked, and I don't think that's going to dissuade them from engaging in these negotiations.
I think it was about 10 days ago where the Israeli military chief had warned that they would go after Hamas officials everywhere, not specific to within Palestinian territories. And perhaps that warning wasn't heeded seriously enough. But this is part and parcel of a series of more perhaps brazen actions taken by Israel. In this case, and in Doha, but a couple of weeks ago, they assassinated the Houthi prime minister, turning a lot more forthright with some of their actions, taking down their adversaries in the region. Where is the U.S. in all of this? Because the U.S. were apparently given a heads up that this attack was going to take place, but it was too late for them to do anything.
Right. I think, I mean, the information is a bit conflicting about how much of a heads up the United States got. Apparently, the U.S. military got some indications and relayed it to the White House, but it was too late to have any impact. The bombs were already dropping. I think the United States is a strong ally with Israel. They're going to be supportive of Israel's efforts to defend themselves. They're going to also try to protect wider U.S. interests in the region. I think that's why you saw President Trump, in a relatively nuanced way, in his own way, convey some unhappiness with Israel, because he thinks, I believe, that this is disruptive of the process, and it's disruptive of an initiative he supported for negotiations. So we'll see how things go moving forward. I think he will maybe take the Qataris' position for a few days and then begin a push again to see if they can get these things back on track.
What do you think this does to GCC relations with the U.S.? And for the better part of the last 4 or 5 decades, there's been an implicit pact between these nations and the U.S. Petrodollars in exchange for security guarantees. Where were the security guarantees? They did not stand up and were not proven to be resilient or even present over the course of the last couple of months. What does this do to the relationship between GCC Gulf nations and the United States here?
I think there are some questions. I mean, this is not the first time. Of course, the circumstances on this attack yesterday were special, in that the U.S. really didn't have, as far as we know, advance warning. But there have been other attacks. There was an attack on Saudi oil facilities a few years ago, and the U.S. did not respond. So there is some nervousness, I think, in Gulf capitals about security guarantees, or just a sense of security that the United States provides with its presence in a lot of these countries. It has military presence in these many of these countries, and the implicit bargain is that in exchange for the presence, they keep these countries more secure. I think they're, as I said, I think they're nervous and concerned, and I think they will be talking to American officials and trying to get some reassurance that these types of actions in the future that the U.S. will push back more strongly to try to prevent them from being attacked in this way and to protect them.
Yeah. William Roebuck, thank you so much for joining us today, Executive Vice President at the Arab Gulf States Institute and former U.S. Ambassador to Bahrain. Thank you. Well, still ahead, we speak with Julius Baer's Yves Bonzon as geopolitical risks from France to the Middle East weigh on markets. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. A judge has temporarily blocked President Donald Trump from removing Federal Reserve Governor Lisa Cook. The decision allows her to remain on the job as she challenges the president's efforts to oust her over allegations of mortgage fraud. Joining us now is Yves Monzon, Jules Baer, CIO, to discuss so many things that are going on around the world. Maybe actually let's just start with this Lisa Cook story, because a couple of weeks ago there was a lot of concern in the market about the Trump administration's interference with the Feds. And now the institutional framework seems to be holding up, a judge temporarily ruling that Trump cannot actually fire Lisa Cook. Should this have any knock-on effects on markets, investors, how they perceive U.S. risk here?
I don't think it does in the short term, but I think this chapter is part of a much bigger story, which is the erosion in the trust in the integrity of U.S. capital markets, who historically have been the gold standard of rule of law application and guarantees for investor of fair treatments and a balance in the system. So I think that erosion of the institutional pillar is an ongoing process, will continue, and that has important consequences, you know. One of which is investors' relative preference, for instance, for credit relative to treasuries.
Yeah. So do you think that that is actually going to have a long-term effect on U.S. financial assets as this process continues to unfold in coming years?
Oh, absolutely. And the main victim is likely to be the U.S. dollar, as we've seen this year. That's the prime target when it comes to the adjustment variable.
When your investors are looking to buy U.S. equities, are they looking to hedge out the dollar exposure then? Because, you know, it's almost like you've got two stories in the U.S. right now. You've got AI, and anything to do with AI seems to be doing very well, but then you have a very weak USD. What are you advising your clients if they want to get exposure?
What we've tried to do this year is actually to keep our U.S. allocation focused on what is truly exceptional to the U.S. And obviously the AI cycle immediately comes to mind. Because actually, if you look at the structure of the U.S. markets, there are plenty of assets in the U.S. where you find substitutes in markets abroad that better diversify a portfolio. So our advice to our clients has been to actually focus U.S. allocation on what's truly unique to the United States.
The U.S. data is very obviously slowing down, and we had those huge downward revisions to jobs growth yesterday, really significant, 911,000 fewer jobs than we thought throughout the course of 2025 by the BLS. How much of a slowdown are you expecting? What is the House view? Is this a recession, or is it just a mild slowdown?
At this stage, we believe it's still a mid-cycle slowdown, and you have a sort of two-tier economy right now because you have everything slowing down except, again, technology, AI. We see a record contribution from infrastructure building, data centers at the forefront. So you have this tension in the U.S. cycle, and when it comes to the consequences for Fed and monetary policy, you wonder the extent to which there's urgency to cut rates, because if you look at market-based signals, whether it's credit spread, whether it's the S&P 500, the case for rate cuts is actually not that straightforward.
So you're not in the 50 jumbo cut camp?
For sure not.
Okay.
For sure not. Rather than 25 and let's watch the data and proceed FOMC by FOMC.
Okay. So that's the U.S. I want to park that for a moment because I also want to talk about Europe and everything that's been happening in France. And there's something interesting. You've got the pressure on French spreads, but at the same time, the euro keeps climbing higher. It's almost as though the rest of the Eurozone as a whole has been completely dissociated from everything that's happening within France. Is that valid?
That's true. And to some extent, I would argue the situation in France is not a concern until it is a concern, you know. And I think...
But we're there now, though.
Yeah, well, that's where we are. But, I mean, at some point, the market may realize, if you look at the G7 currencies, you know, there's not really a strong case for one against the other. All these countries in the Western world have become addicted to fiscal deficits. Briefly, at the beginning of the year, the U.S. administration, when they took office, was arguing that the U.S. economy had become addicted to fiscal stimulus and was in urgent need of a so-called fiscal detox. They quickly abandoned the idea.
No one talks about Doge anymore.
No, absolutely, it's history. And we have the same situation in Europe. As far as French government bonds are concerned, you know, the maturity profile of the French debt is such that there's no immediate concern in terms of rolling over that debt. But certainly the political situation is such that there will continue to be these tensions building. And so do you really want to trade the dollar for euros? I would challenge that. I think investor, irrespective of whether they're euro-based or dollar-based, they need to protect against fiat currency debasement, and that involves focusing fixed income allocations on the highest yielding segments, as well as emphasizing real or semi-real assets.
Yeah. What about the selective equity performance in European markets this year? Defense stocks have had a great run. Financials have also had a great run. Do you get the sense that your clients think that this momentum can continue, or have those trades fully run their course now?
I think these trades are probably due for a pause. Banks and defense are a different story. I mean, the broader story of European equities as an asset class is an asset class where the pricing structure 18, 24 months ago was one of a bond of an equity market underpinning a regions in lingering disinflation, borderline deflation, sort of Japanification in a nutshell of the region. The U-turn on fiscal policy and government spending by Germany has completely redistributed the cards. And bond-like equities, which were the place where investors were hiding in European equities, because there was hardly any flow into the asset class, and those who have to have an allocation to European equities were hiding in these bond-like type of very high dividends, high quality balance sheet, you know, high return on capital, very defensive type of names. And actually, the whole trade into defense and banks, driven by completely different drivers, but has been to a large extent funded primarily by rotation. That's why we've seen this massive derating of the quality stocks in Europe. And we've seen an unprecedented divergence in growth versus value. Growth has continued to significantly outperform in the US, whereas the exact opposite has happened in Europe. So I think that trade is quite mature. There might be a pause. And the next steps, as far as banks are concerned, is AI implication on the cost-income ratio of the banking sector.
Yeah. So interesting, and big themes that we can pick up the next time. Yves Bonzon, Julius Baer, CIO, with us. Now, Poland has scrambled military jets and shut a major airport in its capital as it engaged Russian strike drones that it says have repeatedly violated its airspace. The military says an operation is underway to identify and neutralize the objects and urge residents to stay at home. The U.S. Federal Aviation Administration says Warsaw's international airport has been closed due to unplanned military activity. And coming up, we discuss tech and the AI boom that's fueling a rally in Asia with our next guest. Also, a deeper dive into Apple results. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Unprecedented attack. Israel targets Hamas's leadership in Qatar, with Doha calling it a flagrant violation of international law. U.S. President Donald Trump says he's very unhappy about the strike. A judge has temporarily blocked Trump from removing Fed Governor Lisa Cook, allowing her to remain on the job. And fresh tariff threats. Trump is said to be willing to impose new tariffs on India and China to push Russia into negotiations with Ukraine. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Geopolitical premium being priced in, at least into oil markets. Not so much the case for U.S. equity markets. Wall Street inching closer once again, another record high. And of course, attention now turns to that inflation data that's coming through on Thursday as the market continues to price in a more aggressive Fed easing cycle. 3 rate cuts priced in for this year. 10-year yields, we moved a couple of basis points higher yesterday. Of note, the BLS downward revision to jobs, 911,000 lower throughout the course of 2025, speaking to weakness of the U.S. labor market here. USD slipping a little bit today in trade, down 7 basis points, a continuation of that theme. The greenback is getting sold. And then, of course, Brent is up 0.9% today as we speak about the unprecedented attack on Doha last night by Israel. No impact, of course, on oil or energy infrastructure, but just elevates some of the geopolitical risks coming out of the region. We'll recap that story in a short moment. I also want to turn to the political developments in France and the fact that President Macron has actually appointed a new prime minister. But of note yesterday as well is you had 10-year OATs, those are French bond yields, almost converge with 10-year BTPs. So those are Italian yields. Even though Italy is rated lower as a sovereign credit, we are now seeing convergence of those spreads, which tells you that investors have been shying away from buying French fixed income because of concerns about the fiscal outlook. So very notable there as well, and a key metric that European fixed income watchers have been looking at. Now, back to our top story for today. A dangerous escalation in an already volatile Middle East. Israel has struck Qatar's capital, Doha, targeting leaders of Hamas, and what marks a significant escalation in the regional conflict. But Qatar's Al Jazeera is reporting Hamas leaders, headed by Khalil al-Hayya, have survived the attack. This unprecedented attack on a U.S. ally sent shockwaves through the region, and it's likely to further anger Arab nations.
The Israeli attack that took place today on Qatari soil can only be described as state terrorism carried out by someone like Netanyahu, within the context of these systematic policies and his ongoing attempts to destabilize regional security and stability. This is a clear message to the entire region. The message says there is a rogue player in this region, ongoing political recklessness, and violations of state sovereignty. Netanyahu himself declared he wanted to reshape the Middle East. Is this his message, that he intends to reshape the Gulf as well?
I convened the heads of Israel's security organizations and authorized a surgical precision strike on the terrorist chiefs of Hamas. Israel acted wholly independently, and we take full responsibility for this action. And this action can open the door to an end of the war.
Major development in the Middle East in the last 24 hours, the condemnations coming through from many Arab states as well. Big questions remain as to what happens with those mediation efforts and whether there can actually be progress on the ceasefire proposal that the U.S. put forward a week ago. So some of the big lingering questions over here in the region. Now let's turn to the tech space. Apple fell after debuting the latest versions of its iPhone, Watch, and AirPods in California on Tuesday. That's as analysts saw no major surprises from the event. The tech giant has introduced its thinnest ever iPhone and new Pro versions with enhanced cameras and more battery life. Bloomberg tech anchor Ed Ludlow has more.
The iPhone 17 Air, the ultra-thin variant of the latest generation handset, represents the most substantive hardware innovation that we've seen from Apple on the iPhone for some time. Then very quickly, the conversation looks to pricing. The base model 17, $799, the Air, $999, and then the Pro, $1,099, $100 higher than its prior generation counterpart, but with a starting price that represents twice the storage. And there was a lot of focus on what Apple would or wouldn't do with pricing, with the backdrops of higher tariffs, costs in supply. CEO Tim Cook from this administration to ensure more of the supply chain in the United States. That's just one factor. The timing's also interesting. We're right in the middle of the fiscal fourth quarter for Apple, and these handsets will go on sale within that period. But next quarter is the holiday season. Is the capability of the iPhone 17 generation, particularly at the Pro and Pro Max end, enough to drive sales? Perhaps some of the biggest surprises came very early on in the presentation. We saw the stock pair most of its declines briefly turn positive as they demonstrated AirPods Pro 3. Simultaneous translation. That got the market moving and talking. Interesting because it's an area of technology that Apple might be actually a slow mover in. Meta has already looked at simultaneous translation through the partnership with Ray-Ban and smart glasses. You saw other OEMs like Google focus on simultaneous translation earlier in the year. It was really fascinating to see names like Duolingo have their shares fall rapidly and sharply as that news unfolded. It gives you a sense of the new areas that Apple wants to push into, similarly with health tech.
Well, joining us now to discuss more is Nirgunan Tirachelvam, head of consumer and internet at Altea Capital. Really good to have you with us on the show. Look, it's always exciting. These Apple reveals are always fun, you know, from a consumer standpoint. But the reaction in after hours was pretty underwhelming. The stock was down 1.5%. What is your read across how impactful the new product launch was yesterday out of Apple?
You need to look at it from a broader perspective, Jumana. There are two things about the launch which are very appropriate for our understanding of e-commerce and fintech. One is relative price stability. There's been lots of speculation about the entire smartphone industry, about how the tariffs are going to affect the pricing of this product, but it appears that there is a modicum of price stability. The second factor is that there seems to be stronger moves to integrate the smartphone universe with fintech, and that's a very important factor as we look at the impact of these developments on fintech and e-commerce.
So let me pick you up on the first point regarding pricing and the fact that there wasn't a significant price increase for the latest Pro model. Does that set the tone for other companies in this space as well, for other consumer electronics? If iPhone prices are not going up, what does that mean for the broader ecosystem?
It would certainly mean that emerging markets would remain at the fulcrum of the growth of fintech and e-commerce. Let's take fintech, for example. Over the last 5 years, the growth in TPV in emerging markets has been 29%. This is more than twice what it has been in developed markets. So lots of the things that we take for granted in emerging markets are actually not available in places like Australia, Canada, and the US. For example, here in Singapore, because of the wide availability of iPhones, as well as the integration with the fintech universe, you can pay, let's say, a gig worker like a plumber using something like Pay Now. This sort of convenience is not available in some of the advanced markets. So you could continue to see, with these developments in the smartphone industry, continuing growth in emerging market fintech developments.
What about the Apple's role in the AI space? I mean, they seem to be focused a lot more on product development and AI applications as opposed to coming up with innovative or innovations in artificial intelligence. What do you think investors' takeaway is from all of that in terms of Apple and its relative standing amongst the other big mega cap stocks in the US right now in AI?
We are still at the very early stages of the AI investment cycle. It's only been 3 years since the launch of ChatGPT. Many of the tech majors are at varying stages in their investment cycle for this life-changing investment theme, so to speak. Hence, it's very difficult for us to put our finger on which one of the players is on the right track. But you need to identify larger themes that would benefit from AI. Fintech and e-commerce are becoming much more accessible, and what we see among some of the players in this sphere, among our coverage, is that AI will significantly reduce the operating expenses, and that would lead to efficiency gains.
Yeah. How do you see the opportunity set specifically in Asia? Big theme for my colleagues out in Asia has been talking about the competition, the heavy competition in China among some of these e-commerce firms. But at the same time, you had the huge outperformance of Alibaba over the last week. So how are you picking winners when it comes to Asian tech and e-commerce firms?
You need to look at 3 factors. First, you need to zone in on which one of these players has a window of opportunity from their free cash flow generation. To what extent are they going to continue to generate free cash flow, which is a vital variable in this industry? The second, you need to look at the degree to which they're integrated with the other services that are associated with the tech, the consumer tech universe, so to speak. So the apps which are integrated that have claims to be super apps would probably outperform the rest. And finally, you need to look at the user base. To what extent are the young consumers gravitating towards the winners? That is a vital indicator of the sustainability of these platforms.
Yeah, so interesting. Thank you for breaking it down for us. Nirgunan Tiruchelvam, head of Consumer and Internet at Altia Capital. Thanks. Now for a look at some of the other stories we're following today. Iran and the International Atomic Energy Agency have signed an agreement to pave the way for resuming cooperation, including efforts to relaunch inspections of Iran's nuclear facilities. The announcement followed a meeting in Cairo amongst the Egyptian Foreign Minister Badr Abdelati and his Iranian counterpart Abbas Araghchi and the agency's Director General Rafael Grossi. Grossi described the agreement as a step in the right direction. And coming up, the bets on Dubai continue. We get the details of an investment into platform Property Finder next. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The bets on Dubai continue. Permira and Blackstone have invested $525 million in real estate platform Property Finder. The private capital firms have acquired a minority stake, with this transaction marking Permira's first investment in the Middle East. Meanwhile, General Atlantic, which invested in Property Finder in 2018, sold part of its holding, not all of it. For more on this, we're joined by Bloomberg's Nicolas Parisi. So interesting to see, well, first of all, Permira, its first investment into the region, alongside Blackstone, General Atlantic holding onto their position in Property Finder, but significant also in terms of scale. It's quite a big deal.
In many ways, it's a significant deal. It's sizable indeed. I mean, Property Finder was this company founded about 2 decades ago when Dubai first opened its real estate market to foreign investors. It's one of those homegrown successes that are increasingly attracting foreign capital. So from that perspective, it's an interesting deal. You also have these 2 fairly large and well-known private equity firms coming in. As you pointed out, it's not the first time that they've had private equity interest. General Atlantic invested in 2018. They will retain a stake. And this is a company that also in the next few years might consider an IPO here as well. So want to keep an eye on.
Yes, definitely want to keep an eye on. But what does it tell you about the ability for some of these homegrown UAE companies to attract international investor interest from PE firms?
Yeah, I mean, it's a sign that they're maturing, that this market is obviously increasing, and not only the real estate market, But obviously, the real estate market is a good example. We've seen the influx of these millionaires. That with it brings more banks and financial firms setting up here. You have more opportunities for these companies to grow. Property Finder itself is expanding in the region, and that in itself is then attracting these big players from abroad.
But what are the main segments that PE firms have been looking at over here in the region?
Lots of consumer-driven companies, obviously. I think the other thing to note with private equity is that they've always been here in the region for many years, but what we're seeing is a shift from them regarding this region as a source of capital and to extract capital from as a place to deploy more and more. We've seen that last year with the GEMS education deal. So that was education again, consumer driven, all a play on Dubai continuing to grow, and perhaps also Dubai getting past this boom and bust reputation, especially again in the real estate sector.
Is there increasing competition between the homegrown PE firms, like the PE firms from the region, versus the international firms who have started to take note?
They're here, but I don't think they have the same firepower as a foreign firm. So it's clear that also with this deal, that the Brookfields and the CVCs certainly have an advantage vis-a-vis the local PE firms. So we're going to see more of these in the near future.
Yeah,
for sure.
So interesting. Nicolas, thank you so much for bringing the story to us. That was Bloomberg's Nicolas Parisi. Now for a look at some of the other stories we're following today. Revolut is planning to launch its services in the UAE after securing initial approval from the country's central bank. The fintech behemoth now plans to ramp up its hiring efforts in the country over the coming months. Bloomberg has learned Revolut plans to continue expanding across the Gulf and is considering applying for a license in Saudi Arabia as its next move. And Saudi Arabia's gourmet food producer and restaurant chain Batil International is exploring an IPO. Bloomberg has learned that the company is working with Morgan Stanley on a potential listing in Riyadh. Batil has approached local lenders about roles in the transaction, and discussions are at an early stage. Saudi Arabia's sovereign wealth fund plans to unveil a new long-term strategy to boost investment returns and drive efforts to diversify away from oil. PIF Governor Yasir Al-Rumayyan says the fund will prioritize domestic investments to create jobs, build new sectors, and expand local sourcing. The fund will also seek co-investments with global partners that channel money back into Saudi Arabia. Coming up, Africa's biggest climate resilience program is looking to the private sector to fill the gap left by Western nations as they slash funding. Details next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, South Africa is on the verge of appointing a new ambassador to the United States. President Cyril Ramaphosa says the new envoy will know the American market extremely well. The post has been vacant since March, during which President Donald Trump has criticized Pretoria's black empowerment and foreign policies and imposed punitive tariffs on its imports. Nigeria says it has no plans to revive its dormant fuel tax. Finance Minister Wale Edun says the government won't impose the 5% levy on gasoline and diesel when new tax laws take effect in January. He said no order is being prepared given soaring inflation and the public's economic strain. And Africa's biggest climate resilience initiative is doubling down on its ambitions despite waning support from traditional donors. The Africa Adaptation Acceleration Program is widening its focus and plans to work with private companies to boost funding. The European Commission's Teresa Ribera recently highlighted the importance of strategic partnerships on climate action.
It is particularly important right now when there may be others that feel the temptation to break alliance partnerships to build on their own in an isolated manner, or to challenge the multilateral system or the basis of cooperation.
For more, Bloomberg's Ndiro Gangan joins us now from Kigali, Rwanda. Ndiro, the world increasingly with the Trump administration has taken on varied approaches to tackling climate change, various speeds. Where does the African continent stand in all of this?
Hi, Jumana. They're caught in a limbo where most of the international partners are scaling back on aid. You mentioned President Donald Trump. The U.S. has always been a very significant partner to Africa when it comes to climate change financing, but we've also seen them take a big step back, particularly with the demise of USAID. 98% of programs that were supporting climate change on the African continent disappeared. And it's not just the US. Europe and some European nations have expressed interest also in scaling back their support for climate change programs on the African continent. And you have the Africa Adaptation and Acceleration Program saying that the UK and also the Netherlands have told them that they'll not be supporting the program, and now they have to rely on countries like Norway, Denmark, and the Gates Foundation. And this impact is beginning to unfold. If you look at funding from overseas in 2023, it was $213 billion. In 2024, $198 billion. And it's expected to keep going down. And that's why the continent will be casting wider its net. It will look at alternative markets, China, Japan, Middle East, but also tap into the private sector. If you look at funding flowing into the private sector for climate change, particularly in markets like Asia, 38%. Africa Development Bank, Afri-Exim Ecobank, Afri-Exim Ecobank pledging to raise $100 billion to go into green investment, because again, on the continent, only 3% of that investment comes here. The continent holds 60% potential in terms of wind, solar, geothermal. So the continent is beginning to realize that homegrown solutions are the way forward.
Yeah, and at the same time, you see increasing impact of climate change on Africa with floods, with droughts. Where is that showing up the most, Ndiro?
Jumana, we are beginning to see significant increase on the impact on infrastructure. For example, if you look at the annual loss of climate change to infrastructure, $12.7 billion, and this impact is expected to increase by 27%. Some of the countries that have been heavily affected include Nigeria, South Africa, Algeria, and this impact on smaller economies is even, once you take a country like Lesotho, about 1.5% of their GDP. And also you look at just traditional sectors like agriculture, heavily impacted. You had the president of Somalia saying one of the worst droughts in the country has affected half of the population. And it's not just in East Africa. Down in South Africa, Zambia had to declare a national state of emergency due to drought. So these are some of the issues that came up during the Africa Climate Summit. And what they're talking about is the Nairobi Summit was the first one, and they made declarations. Now with this Addis Summit, they want to start seeing tangible steps that takes them a little bit closer to not only mitigating, but also adapting to climate change.
Bloomberg's Ndiro Aganga in Kigali, Rwanda. Thank you so much. Well, rounding up the show, and just a reminder, recap of our top story today, Israel launched an unprecedented attack on Doha, targeting key Hamas officials, including the chief negotiator, Khalil al-Hayya. Per the latest reports from Hamas quoted in Al Jazeera, Khalil al-Hayya was not actually successfully assassinated, but 5 others were, including a Qatari security official as well. The condemnation has come through very strong from the Qatari PM and from other UAE nations as well as Saudi Arabia, all of the Arab states in the region expressing their solidarity with Qatar. But one of the major questions here is what knock-on effect this is going to have for the ceasefire process and whether at this point there can be any progress to speak of in terms of getting that proposal across the line. Here's a look at market futures. U.S. futures leaning towards the green, European markets as well up 0.2%. That's it for Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lapo in Sintra, Portugal, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Oracle's Cloud9, the database company, stuns Wall Street with an aggressive outlook for cloud revenues. Investors send shares soaring, adding $190 billion to the company's value. President Trump says he is unhappy with Israel after it carried out airstrikes on Hamas leaders in the Qatari capital, Doha. This as Poland condemns a Russian drone incursion into its airspace as an act of aggression. Plus, new PM, same old problem. Sébastien Lecornu is set to become France's 5th Prime Minister in just 2 years. His first task, another attempt at unpopular budget reforms. Good morning, happy Wednesday. So geopolitics front and centre, but for the markets, the focus once again on the catalyst that is the tech story, with Oracle and the forward guidance on that demand really blowing through expectations and lifting, of course, in extended trading Oracle, but lifting the broader tech space as well. That filtering through to the European space. You've had 2 straight days of gains for European stocks and looking to build on that today with European futures up 0.2%. Here in the UK, the FTSE 100 looking to add 14 points. S&P futures, after punching through a fresh record high, more than 20 now so far year to date. Another record toppling yesterday in the US, looking to build on that today with S&P futures pointing to gains of 0.3%. Part of that, the Fed story, of course, with pricing of more aggressive cuts from the Federal Reserve on a weaker jobs market. NASDAQ 100 futures looking to add 47 points. Let's flip the board and have a look cross-asset then. The focus, of course, on treasuries, but also on gold and oil, given the geopolitics. Let's start on the 10-year, which is currently unchanged in the session at 4.08 for the 10-year. Euro-dollar at 117, a little stronger on dollar weakness for the single currency. Brent popping again in terms of prices, up 1.1% so far, of course, on the Middle East tensions and that unprecedented attack on Doha by Israel. $67 a barrel on Brent. Gold getting a lift as well on that geopolitical risk sentiment, currently up 0.5% on the yellow metal at 3,643 and close to those record highs again for gold. The Asian session has been lifted as well by the tech story, but concerns once again about the lack of inflation, deflationary pressures over in China. Let's bring in Asia equities reporter Winnie Su. Winnie.
Morning, Tom. So again, another happy day for Asia here. We are right now just about 1% away from hitting that record high for MSCI Asia. And that's really that strong risk appetite that we're seeing ahead of the key U.S. inflation data that is likely to provide a bit more evidence for the Fed's easing path going forward. And like you said, driving that rally are the tech stocks here. After the strong outlook around cloud business from Oracle, we're really seeing that translating to the positives in Asia tech shares with TSMC up, SoftBank as well, and also Kospi, the heavy tech weight Korean benchmark, also near its record high. So that overall sentiment for AI remains quite strong, and we're really seeing that spillover effect. And within tech, I'd like to just also highlight Alibaba here. Also, a very different story here. We see the stock actually touched a 4-year high earlier today after it rolled out some more stimulus for its new its very popular navigation app. So a lot of kind of stories on the China front. But when you take a step back and look at the overall China picture, cross asset, we're seeing not too much moves on the onshore stocks or the yuan, even after we saw some of the key data from China. CPI actually a little bit weaker than expected, and that continues to show that the deflationary pressure is still here in China. However, that might potentially point to further policy support from the policymakers, and also goes to tell how the current rally is not really driven by lots of fundamentals.
Bloomberg's Asia Equities reporter, Winnie Su, thank you very much indeed on the Asian session and some of the positivity that's coming through, even as there are concerns remaining around the deflation challenges over in China. A redhead crossing the terminal right now. This is Novo Nordisk to cut 9,000 jobs to save around 8 billion Danish kroner by the end of 2026. Of course, the maker of obesity and weight loss drugs, Novo Nordisk, has been under pressure as a result of the competitive challenges from the likes of Eli Lilly. Novo Nordisk then set to cut 9,000 jobs, and we've reported on how closely this company is now tied to the Danish economy. We'll get you the latest and keep across that story for you, but that is a stock to watch at 8 a.m. UK time. Now to tech, where Oracle shares surging, meanwhile, to a record high in extended trading after the company posted a major increase in bookings and gave an aggressive outlook for its cloud infrastructure business. Known for its database software, the company is on track to add about $190 billion to its market value if the stock's gains continue in today's session, in a single session. And for Larry Ellison, a payday of about $70 billion in a single day. For more, let's bring in our tech reporter, Newly Pernell. Massive moves then around Oracle. What is tied into this?
Yeah, Tom, huge figures they're reporting. The one that jumps out to me, $455 billion they're saying for the quarter in bookings. And really, this points to what investors are probably responding to is the global AI infrastructure build-out, right? So Oracle, they're known for their database software, but they've also been expanding into cloud services. And so cloud services, are used with these chips for AI accelerators to build out the infrastructure that's powering this revolution. And there had been doubts and some studies about how much enterprises were actually using some of these services. So some had started to speculate, well, is this huge spending on CapEx really going to bear out? Our company is going to continue to spend money, and these numbers from Oracle indicating that yes, they are.
So the forecast for future growth are solid. It's that pipeline really that analysts seem to be zeroing in on.
Yeah, exactly. And as I said, Oracle is known for their database software, but they've been moving into cloud, and they gave a projection of 77% growth that they foresee in that unit alone. So, they work with some big players like ByteDance, TikTok, ChatGPT, OpenAI. So the suggestion would be not only are they seeing a lot of bookings in the quarter, but a lot are going to come. And so investors, you see some other similar stocks responding in turn to this suggestion that all the money that companies are continuing to pour into building out this huge AI infrastructure for this next generation technology is going to continue.
Newly, Apple also in focus, of course, yesterday, unveiling more products and its biggest upgrade, really, in the last 12 months. The iPhone Air drawing a lot of attention. Just what, 5.6 millimeters thick? Is that right? 5.6 millimeters thick? Is that enough to kind of keep customers engaged with Apple as it still lags on AI?
Yeah, I think it would be about a third thinner than some of the current phones. As our colleague Mark Gurman has noted, this is really part of the playbook for what Apple has done in the past, where they introduce products, Air products, thinner, lighter products that have compromises but might set the stage for future products. So for example, if you're going to make a phone that's small, you're going to have to see cutbacks. And so this one, you're going to have to see reductions in what it can do, capabilities. So for example, the battery will be smaller, so you'll get less performance. Fewer cameras, so one camera instead of the three, which Apple has said, well, they have updates to their software that make it equivalent. And then audio, it will have fewer speakers. So the question is whether consumers will, as we head into the holiday season, are they going to look and say, I really want a skinnier phone? I don't know. I assume that there are a lot of people who love lots of Apple's products who will be willing to shell out. But again, I would say look for what this means probably for the future roadmap for Apple's products.
Bloomberg Tech reporter Newly Purnell, thank you very much indeed, walking us through what's happening with Oracle, the lift coming through for the markets there, and Apple's new products. Newly, thank you. Don't forget, the next episode, by the way, of Bloomberg Tech Europe this Friday, 6:30 a.m. London time. We're going to be looking at how AI is changing the way we fight disease, including an exclusive interview with Demis Hassabis, the CEO of Isomorphic Labs and Google DeepMind. Now, a judge has temporarily blocked President Trump from removing Federal Reserve Governor Lisa Cook. The move allows her to remain in the job as she challenges the president's efforts to oust her over allegations of mortgage fraud. Let's bring in Bloomberg's Valerie Teitel right now. Val, what else do we know about this ruling?
Well, it was really interesting to read the judge's opinion on why he decided to keep Lisa Cook as a Federal Reserve governor while they consider the merits of the case. He said in his opinion that it's only Cook's conduct on the job that's grounds for removal. And given the alleged mortgage fraud actually took place a year before she was a sitting Fed governor, he's ruling essentially that Trump likely does not have cause for her dismissal. But this is a really important case to follow, Tom, because this is the first time a president has sought to remove someone at the Fed. And given the law written into the Federal Reserve Act, the president can remove somebody for cause, but it's very vague on what cause actually entails. And this ruling really can have lasting effects on clarifying what is justified as cause in this scenario. But it sets up a very high-stakes appeals court battle that is likely to end at the Supreme Court on their desks in a quick fashion. But I do want to also mention, while we're talking about the Supreme Court, they've also decided to fast track the case against Trump's tariffs, and we'll be beginning hearings on it in November, which is a very aggressive schedule for the Supreme Court, but kind of just highlights how important it is for them to get the merits of this case weighed.
Okay, so November is the month to watch when it comes to the tariff story in the Supreme Court, and the spotlight there, and the legal wrangles clearly between Lisa Cook and the US President continue, but she will be there for that meeting and for that decision on September the 17th and 18th. What about the revisions on the latest data when it comes to US payrolls? How significant is that?
Well, look, it was significant because it was the largest on record going all the way back to 2000. They wiped off over 900,000 jobs off of last year up into March 2025. It's just another sign.
900,000 fewer jobs.
900,000 fewer jobs taken off the U.S. economy. Now, this is something they do on a yearly basis, but because we've been able to trust the data in the past, these revisions haven't been that large. But take a look the last 2 years. Last summer was over 800,000 wiped off. This time around, it's over 900,000. And again, this really does play more into the Trump administration's hands here in arguing that the BLS data, especially when it comes to this establishment survey, the payroll survey, the survey needs to be modernized. The responses need to be better tracked. It needs to get into the hands of the Federal Reserve quicker, because you could definitely argue the world might look completely different if the Fed had this right information in their back pocket when making policy decisions last year. But the market did really take this in stride. I think this was well telegraphed this time around. We actually saw yields rise in the end of the session, breaking a 4-day rally when it comes to the Treasury market, and the S&P 500 hit record highs. But still, there's a lot of hot takes on what this data means moving forward. We heard from JP Morgan's Jamie Dimon. He is voicing some concerns about the slowing of the U.S. economy. And then Scott Bessent, Treasury Secretary, said the Fed is choking off growth with high interest rates, and he was using the new BLS data in order to argue that point.
Okay, the Trump administration pointing the blame at the Fed for the slowing economy. Bloomberg's Valerie Teitel, thank you very much indeed. Here's what else to think about in the day ahead then. 6:30 a.m. UK time. We're going to get a touch on the retail space with Inditex earnings, the parent company, of course, of Zara. So we'll bring those to you. 1:30 p.m. UK time. Meanwhile, it is the first of 2 batches of inflation data out of the US that will be scrutinized by the markets, with producer prices dropping at 1:30 p.m. UK time. CPI, of course, is tomorrow, and at 6 p.m. UK time today, US 10-year Treasury auction. So we'll see to what extent that is absorbed by the markets, with the Fed, of course, firmly in focus. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. And China, India, and the threat by President Trump to put more sanctions on both of those countries in response to Russia's aggression in Ukraine is front and center. Coming up, a strike by Israel targets Hamas leaders in Qatar, drawing rare criticism from the US president. We will have the details next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, Israel has conducted an unprecedented strike against senior Hamas leaders in the Qatari capital, Doha. The move is widely seen as escalating an already tense standoff between the country and Arab nations over its war in Gaza. The attack drawing rare public criticism from US President Donald Trump, who said he learned of the attack too late to stop it.
I'm not thrilled about the whole situation. It's not a good situation. But I will say this, we want the hostages back, but we are not thrilled about the way that went down today.
Did you in advance, Mr. President? Did Israel tell you in advance? No. So you were caught by surprise, sir?
I'm never surprised by anything, especially when it comes to the Middle East.
Well, let's bring in Jumana Basechi now, Horizon's Middle East and Africa anchor out of Dubai, of course. Jumana, talk us through how this unprecedented attack on the city of Doha unfolded.
Well, we just heard remarks there from President Trump saying that he's not surprised by anything, especially in the Middle East. What I will tell you is that this was very surprising. It was unprecedented in nature. Around 4 p.m. in the afternoon local time, smoke was seen rising from a residential area in Doha. It was unclear what exactly had happened, whether it was an explosion or a targeted attack. But shortly afterwards, which actually breaks the tradition of the typical time frame that it would take for IDF to claim responsibility, the IDF did put out a statement saying that it was Israel who had conducted a strike on Doha, targeting senior Hamas officials, including the negotiation team who had been conducting discussions around putting forward the U.S. ceasefire proposal that Steve Witkoff had presented in Doha a couple of days before. Now, a couple of hours later, Hamas officials also confirmed to Al Jazeera that the senior negotiator, Khalil al-Hayya, was not actually killed in the attack, but 5 other officials were, including as well a Qatari security official too, who was one of the casualties of the attack. The response from Qatar came very quickly. Condemnation, the Qatari PM, in a very angry press conference yesterday said that this was a brazen attack on Qatar's sovereignty and that this would have really broad repercussions for the region, and Saudi Arabia as well joining in on the chorus of those countries condemning from around the region, calling it a criminal act. UAE of note as well, because they obviously signed on to the Abraham Accords 5 years ago, also weighed in saying that this could have extremely dangerous repercussions for regional security. We later heard from the UN Secretary General Antonio Guterres saying that this was a flagrant violation of sovereignty and the territorial integrity of Qatar, but that all parties must work towards achieving a permanent ceasefire and not destroying it. Now, in the introduction to this, we heard from President Trump. He said that he's not thrilled with what happened, but at the same time, he does believe that the goal of eliminating Hamas is a worthy goal. He's also said that the U.S. will be releasing a full statement today on the latest developments. So an extremely anxious time in the region.
Yeah, I mean, absolutely. And those US allies in the region must be questioning to what extent the US has their back at this point. Do we assume, Jumana, that the ceasefire conversations, because there had been those conversations ongoing, it was a US proposal, Gaza, or at least Hamas were looking at it, Israel was looking at it. Do we assume that that is now closed, that door is now firmly closed?
We had comments from the Israeli Prime Minister Benjamin Netanyahu yesterday. He was speaking at the U.S. Embassy, and he actually said that this would further the goal of achieving a ceasefire agreement, and that the Israeli side had actually signed on to the terms of the ceasefire deal. But of course, their actual attempted assassination of the Hamas negotiators was unsuccessful yesterday, because the negotiators actually did survive. But from this point onwards, it is unclear whether Qatar actually do want to continue with these mediation efforts, given their country, the host country itself, was targeted. The Prime Minister yesterday saying that one of the unwritten rules of diplomacy is you don't target the negotiating team, that beyond this being a flagrant violation of sovereignty, this is also a moral violation as well. And therefore, the questions about whether the momentum towards getting this U.S. ceasefire proposal across the line are absolutely valid here, in addition to how Hamas are going to respond. Now, the ceasefire deal itself actually stipulated the release of the 48 captives, both deceased and alive, in exchange for 3,000 Palestinian prisoners. But it also stipulated that Israel withdraw from Gaza in a series of a phased withdrawal out, especially with the mounting offensive into Gaza City. And it's interesting that the Israeli Prime Minister has said that they have signed on to it, but we have not yet had an official response from Hamas, and unlikely to see them really signing on to this in the face of what happened last night.
Horizons Middle East and Africa anchor Jemana Pasechi, thank you for that important update. Coming up, another Prime Minister in France. Meanwhile, we're going to profile Sébastien Lecornu, who he is, what his background is, and what his challenges are, of course. That is next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. Rubenstein, join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, French President Emmanuel Macron has named longtime ally Sébastien Lecornu to be the country's new Prime Minister. Lecornu will become the country's fifth Prime Minister in 2 years and will be tasked with steering a budget through a divided Parliament. Let's get more with Bloomberg's Caroline Gonat in Paris, of course, has been following all of this for us. Caroline, who then is Lecornu and what has been the reaction so far politically to his nomination?
Sébastien Lecornu, 39-year-old, quite young, and he has been really one of the closest allies of Emmanuel Macron since the very beginning. He was part of every single government of President Macron since he was elected for his first term back in 2017. In fact, Macron wanted to choose him back in December to succeed Michel Barnier, but then François Bayrou managed to convince him to choose him instead. We saw how that went on Monday. Le Cornu has grown to become a respected armed forces minister. He's been the architect of France's rearmament strategy, boosting the defense budget, especially since the war in Ukraine. Before that, he started as a local Republican in Normandy and also worked with the former finance minister Bruno Le Maire. Of course, his nomination has been seen as a provocation by opposition parties because of his proximity with President Macron. The Socialist Party reacted last night with a statement saying none of their lawmakers will actually join this Le Cornu government. One socialist, Philippe Brun, even saying this was like a slap in the face for Parliament and for French voters. Now, Le Cornu, however, is considered a good listener, a good negotiator, which may actually help to talk to the various sensibilities in the fragmented Parliament. He's even been having dinner with, reportedly, with Marine Le Pen and Jordan Bardella last spring. That doesn't mean, however, that the National Rally will necessarily support him. Marine Le Pen, again, last night calling for new snap elections. We'll see how these negotiations go. The Macron only took 24 hours to name a new prime minister. The government, however, will take a while because Le Cornu wants to meet with every single party before forming his government.
OK, Bloomberg's Caroline Gonin in Paris. Thank you very much indeed. With that update, a new prime minister, at least prime minister in waiting, being appointed by the French president, of course, Emmanuel Macron. Some of the challenges that he will face in the days and weeks ahead. Let's switch focus now to South Korea, which has sent a chartered and will be sending a chartered plane to the US later today to bring home as many as 300 workers detained in a US immigration raid on a Hyundai factory. The operation could be the country's biggest evacuation mission since it airlifted some 700 citizens from China early in the COVID crisis. Last week's raid at the construction site of an EV battery plant jolted South Korea, a staunch ally, of course, of the US. Coming up, Poland scrambles military jets and shuts Warsaw Airport in response to Russian drones entering its airspace. We have the details next. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. President Trump says he is unhappy with Israel after it carried out airstrikes on Hamas leaders in the Qatari capital, Doha. This as Poland condemns a Russian drone incursion into its airspace as an act of aggression. New PM, same old problems. Sébastien Lecornu is set to become France's 5th Prime Minister in 2 years. His first task, another attempt at unpopular budget reforms. Plus, Oracle's Cloud9, the database company, stuns Wall Street with an aggressive outlook for cloud revenues. Investors send shares soaring, adding $190 billion to the company's value. We'll get to the market check shortly, but we've got some breaking lines coming through from Inditex. The stock is down a little over 10% year to date. The line's crossing right now. Sales at a constant FX between August the 1st and September the 8th are up 9%. In the first half, net sales coming in as a miss for Inditex, the parent company of Zara. First half net sales coming in at 18.36 billion euros, slightly below the estimates. In terms of the earnings before interest and tax, that is essentially in line with the estimates at 3.57 billion euros. The margin in the first half slightly stronger than the estimates. 19.5% is the margin in the first half. The redhead right now then, Inditex first half earnings before interest and tax, 3.57 billion euros, a smidge above the estimates. So that's a stock for you to watch at the open. Let's get to the broader markets right now. We've had the tech impulse coming through with that significant upgrade in the outlook for Oracle, the huge pipeline in orders and the question marks around whether they can deliver. But nonetheless, the stock's soaring then in extended trading, and you're seeing that impulse rippling through the Asian session as well. European futures pointing high by 0.2%, looking to build on the modest gains that came through yesterday. FTSE 100 currently looking to add 14 points. S&P futures after a fresh record high, another record for the S&P 500 notched yesterday and looking to build on that today, pointing high by 0.2. Nasdaq 100 futures looking to add 42 points. Let's flip the board and have a look cross asset. The focus, of course, continues to be on the Treasury curve, given pricing around Fed as we build up to that decision on September the 17th. Fully priced in, of course, 25 basis points. Some expecting maybe more than that. 408 on the 10-year, euro dollar at 117, Brent higher on geopolitical risks up 1%, and gold gaining 0.5% in the session. Let's continue the market's focus right now and bring in our next guest for a conversation around how to position. Lale Okona, eToro's global market analyst. Lale, good morning. Thanks for joining us. The focus then on geopolitics today, but the focus as well for the markets on tech. To what extent does that remain the catalyst for US equities in the quarters ahead?
Look, it's quite positive. The AI cloud revenue of Oracle is set to soar around 144 billion. We are saying that although we are seeing some softening, some derating in NVIDIA, so there's still concentration risk, if you will, Tom, and that might create some volatility and some repositioning coming from both institutional and retail investors. However, we are still saying that, look, the policy mix that is upcoming in the next few quarters is actually quite positive, and it's adequate to prevent recession. So we are still risk on in this moderate inflation, moderate growth environment, especially in the US, given the fact that the fiscal bill is coming into effect now. The rate cutting cycle is full on. We're thinking 2 rate cuts this year. Another 3 next year is quite possible, and that will have an impact on markets as well.
Okay, so two rate cuts this year from the Fed, 3 in 2026. You are risk on. The counter to that, arguably, would be that this is a Fed that is cutting into a slowing US economy with a weakening labor market. In that context, Fed cuts are still supportive for these equity markets. Is that the case you're making?
I do think so. I mean, we forget that the tax bill has obviously passed. The first, again, positive is that more than 150 billion of incremental consumer aid is coming in the new tax season, Tom. So that's a positive, and actually consumer discretionary stocks are pricing that in right now. We have obviously business incentives coming from the tax bill into effect, and we expect that to accelerate in 2026. Let's not forget that tariffs are brought down from 700 billion to around 370 billion. And we actually think that both fiscal and monetary policy can bridge that gap. So we're thinking that soft landing is still odds on. There could be some volatility in terms of, obviously, some of these policies will come into effect with a lag. And a softening in data, especially coming from labor market, is still possible. But again, overall, structurally speaking, 2026 will be especially more positive in terms of the macro backdrop.
Lale, given that context then, what is your preference in terms of large caps versus small caps in the US market?
We like small caps at the moment, Tom, given that they are obviously coming from behind in terms of performance. When you look at their performance, historical performance, they actually perform very well further into the Fed easing cycle, especially when it's around 200 basis points of Fed easing cycle of rate cuts. So we do expect this re-rating that we're seeing in small caps to continue in 2026. And they do rely on short-term debt and therefore very sensitive to interest rate cuts that is going to come in the next few quarters. In terms of the sectors that we like, I would say home builders, banks, we like regional banks, we like consumer discretionary, and we like mid-cap R&D intensive firms that are going to benefit again from that 100% R&D expanding coming from the tax bill.
To the European picture then, Lale, as we look again at France, we have a new prime minister, at least a prime minister in waiting. Are the challenges around the French equity space on the political risk, is that a buying opportunity? How do you factor that into your European view?
Look, in terms of French bonds, obviously investors will continue to require a risk premium to hold these bonds. I think that is intact, and the market is largely seeing this new official as not more than a placeholder, if you will. But what we're looking for is, again, the magnitude and the pace of increase in yields in France. And that would tell us if the pace and the magnitude of an increase in yields is going to continue even after this change in administration. We do think that that could spill over to other regional indices as well. That's not our base case scenario, but if that happens, there will be some dislocations that will be happening, and then we will take, we will buy those opportunities.
Okay, Lale Akona, global market analyst at eToro, with a preference for small caps in the US and possibly a buying opportunity in European equities if that risk spreads beyond France, with the focus, of course, on any potential further sell-off in the sovereign debt of France on political risk. Lale, thank you very much indeed, of eToro, global market analyst. Let's get to geopolitics right now, where Poland has condemned a Russian drone incursion as an act of aggression, saying its military shot down some of the objects that entered its airspace from neighbouring Ukraine. The Polish military called it a, quote, unprecedented violation of Polish airspace by drone-type objects. For more, let's bring in Bloomberg's Oliver Crook. Ollie, what exactly happened over the Ukraine-Poland border? How significant is this?
So it's significant, Tom, because the unprecedented part of what the Polish are referring to there is that this is the first time that the sort of any NATO ally has engaged directly with Russian material hardware, in this case, shooting down actively over a Polish airspace what appear to be drones. They're currently out there trying to recover them. Of course, there have been other instances of missiles either overshooting, other things going into Polish airspace. And you'll remember in the very early stages of the war, Tom, when a missile overshot its target and landed into Poland, it began to provoke a lot of questions about, does this trigger Article 5? People were really, really on edge about these sorts of things. And now we're trying to figure out sort of what does this mean, this further escalation in this conversation. We have not yet had a reaction from the White House. We're awaiting what Donald Trump's commentary is. Remember, he just met with the Polish president, I believe it was just last week, and really was sort of touting very high ties with Poland and actually willing to commit more American troops within Poland in order to make it feel more secure. We've heard from Dick Durbin, one of the senators out from the United States, saying that this is a test of the resolve of NATO to protect its eastern flank. We heard from another representative, Joe Wilson, calling it an act of war. But I think that regardless, when we take a step back and we think about what this means for the potential future of any kind of conflict, is this Vladimir Putin deliberately testing, or is this Vladimir Putin feeling bolder and a little bit indifferent to these sorts of things and willing to sort of push up against that line? And that is going to be what the Western sort of allies have to assess and what their response is going to be to this latest incursion.
Okay, so we wait to listen to see what the response is from President Trump, who, of course, had come into office pledging that he would wrap up these conflicts, both in Ukraine and the Middle East, in terms of Israel and Gaza, very, very swiftly. In the case of Ukraine, 24 hours. In fact, on some metrics, these conflicts have only become more severe. And this at a time when he is threatening the president, apparently, to impose additional tariffs on China and India to squeeze Russia. How real is that, Ollie?
Well, listen, Tom, if I could answer that question, I think I could make a lot of money somewhere. But I think that what is very interesting is he's putting the Europeans in an intensely uncomfortable position. So the context of what he is suggesting here is he was in a meeting with the European policymakers in Washington, D.C., with D.C. policymakers, talking about other ways that they could impose tariffs on Russia and sort of other sanctions that they could impose to try to bring Putin to the table. Apparently, then, Trump dialed into the call and basically floated this idea. He says that the United States will do this only if Europe goes first, and he's talking about adding tariffs on China and India by the European Union first, and then the United States would follow in order to try to constrict their buying of Russian crude oil. So remember, these are the sort of biggest customers for Russia right now. They're sort of the biggest, basically effective funders of the Russian war machine in their purchases of Russian crude oil. But basically, Trump is saying, hey, EU, if you're serious about sort of restricting the cash flows that the Russians have, well, then you need to put sanctions and tariffs on China and India. Now, what the Europeans will do as a consequence of that, I think, is another question. I think that there is a big question about how reliable an ally Donald Trump is. I think what the Europeans would say is, listen, we see eye to eye on a number of things, particularly with China. If we had from the very beginning gone with a more coherent, coordinated trade policy between the United States, the EU, and the G7, as has been the sort of historic case, then maybe there was something to do. I think it's very unlikely, though, that being said, that the Europeans are just going to sort of jump onto this Trumpian win and then potentially torch their relationships with China and India, but it certainly presents an interesting dilemma for the Europeans.
Okay, Bloomberg's Oliver Crook, thank you very much indeed for that update. Coming up, sticking on the topic of defence and military tensions, German defence giant Rheinmetall pushing to become a one-stop shop for Europe's defence needs. More from our interview with the company's CEO. That is next. This is Bloomberg.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Shares in German defence giant Rheinmetall have surged over the past years, of course, thanks to a pivot in Europe to invest more in defence as war continues in Ukraine. I spoke with Rheinmetall's CEO, Armin Papperger, who says the firm plans to sell its civilian business and stress the push for higher artillery output and greater automation.
At the moment, the Western world has a capacity of about 2 million rounds. President Zelensky told me that we need, during war, 4.5 million rounds only for Ukraine. So we need much, much more for Europe and the States if we combine that. But I think at the end of the day, we need also the money for that, because it's a huge amount of billions that we have to spend. And I believe that if we grow up the capacity to 3 million rounds per year, we are well prepared for a conflict. And the reason is that our ammunition, the precision of our ammunition is much higher than the precision of the Russian ammunition. So, and if you need only 50% fire to hit the same target, yes, it's positive.
Talk to me about your partnership with Lockheed. You've talked about it as being very fruitful. How does that partnership look in 2-3 years' time? What are you able to do with that partnership beyond what you're doing right now?
We started 2 years ago with the F-35 partnership. So this is very, very fruitful. I'm very grateful that Lockheed and Northrop Grumman are working so good and fruitful together with us. So we built it up in 16, 17 months, the production line of the fuselage of F-35. Which is a record time, absolutely a record time. So the first 3 fuselages are in production at the moment here in Germany, and the US government is also very happy. Then we started the missile side. On the missile side, I said, how can we enlarge the capacity from the Western world? Because at the moment, the United States has not enough capacity for missiles. Sometimes you have to wait 5 years or longer to get a missile. And if we have a war, it's not fast enough. So therefore I said, okay, we build up a rocket motor production, and we invest at the moment about 150 million euro in a rocket motor production. And the first missile that we want to produce in a joint venture together with Lockheed is the ATACMS. And the second one is what you see here. This is the Hellfire. And for the Hellfire, we have now also the launcher that we equip into European vehicles, and so it's a win-win situation for the United States of America and for Europe, because 40% of the value from European money is going to the United States. So we make America great again.
To be clear, you will be building ATACMS, producing ATACMS and Lockheed Hellfires in your German factories?
Yes.
And when does that start?
In 12 months we are ready with the rocket motors. And let me say, maybe we need another 3-4 months to implement the assembly line. So in 15, 16 months' time, we are ready to produce ATACMS here in Europe.
You've talked about the German government wanting around 400 coordination combat aircraft, CCAs,
yes,
or essentially unmanned aircraft that align and join with manned aircraft. You're looking, we know from reporting, you're looking at Lockheed, you're looking at Boeing, you're looking potentially at Anduril. Have you narrowed that list down, and why only look to partner with US companies on that?
I think that it's very important that the F-35 and the unmanned planes have to fit together. At the moment, I believe that the biggest hit probability to get the contract very clear has Lockheed Martin. The second point is that we and Rheinmetall have such a good relationship, and we have the data management of the US government. We have all the protected data, which is in our factory in Weeze in Germany. The US government, the Pentagon, takes care about all that data. So it's a win-win situation to be fast And at the end of the day, Europe needs the products now. We don't need it in 10 years. So they are ready, nearly ready on the development side. So we are very near to that to make it happen.
Who's the front runner right now? Is it Anduril, Lockheed, Boeing?
I think it's Lockheed.
It's Lockheed at the moment.
Yeah.
When it comes to the civilian business, can you give us an update in terms of the potential sale of that? Whether you've had more interest? Are you closer to a point where you're able to sell that part of the business?
We will take the civilian business out of the top line in the next quarter. And I think that we can, in the first quarter, sell the business. This is our plan, and this is what we want to do. And we want to focus on defense.
Okay, the CEO of Rheinmetall speaking to me in London. In other news, Klarna's market debut is set to bring a multi-billion-dollar windfall to its largest investor, Sequoia Capital. That's after the Swedish company priced its IPO at $40 a share for an implied market value of just over $15 billion. That gives Sequoia's stake a value of $3.2 billion at the time Klarna's shares priced yesterday. Shares in the buy now, pay later company start trading in New York later today. Plenty more coming up. We're going to talk about the job cuts at Novo Nordisk and reflect on the outlook for Oracle. That's coming up. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
What made you go back to politics?
Putin. I'll be very frank with you. Had Russia not attacked Ukraine, I would not have run for president of Finland. This was built in the 1800s later when the Tsar took over the palace. And this is mirroring the Winter Palace in St. Petersburg, but it's called the Hall of Mirrors, so we have the mirrors on the side.
So do you ever get used to it, or do you sometimes just walk in and think, wow, this is...
Every morning, wow, this is.
Have a seat. Talk to me about resilience.
It's something I think we in Finland know something about, actually. It's one of our key words. It's sisu, which is resilience, perseverance, grit, stamina. So you never give up. You just have to keep on pushing and grinding through the tough stuff. And I think a lot of Finns have that ingrained into the system, because remember, we're a poor country. First we were under Sweden for 700 years, then under Russia for a little bit over 100. And when we gained independence in 1917, we were basically a poor developing country. And I think then this sort of idea of resilience, let's try to overcome, let's work hard, came very much a part of Finnish DNA. And I think I'm still part of that generation.
And you can watch the full interview with the Finnish president on Friday. You can also watch it on the Bloomberg website and on the terminal. And the Finnish president was talking, of course, about what motivated him to get back into politics. He named Vladimir Putin, and we are reminded, of course, of Russia's risks today with that apparent incursion into Polish airspace. And also President Trump suggesting that he could look to put further measures on both India and China to pressure them on Russia. This is a reflection in terms of the level of sanctions that have already been implied by the US and its allies in Europe on Russia, as they look maybe at other elements that they could put pressure on Putin, whether it's the dark fleet, the banking sector, or the oil majors. The sanctions are firmly in place. The economy has been more resilient than many have expected, though there are cracks now showing up in that Russian economy. Let's flip the board and have a look at a very different story. This is the corporate that is Novo Nordisk, and the announcement that it's cutting 9,000 jobs, 11% of its workforce, to save $1.3 billion as it faces that competition from the likes of Eli Lilly around obesity and diabetes. Many would suggest that Eli Lilly has taken the lead on the obesity drug story. This is potentially very significant. Watch the space around this. The new CEO cutting costs and forecasting a lower profit level than had been expected just back in February. Oracle, this is the catalyst on the tech story. This pipeline for Oracle is remarkable around its data center and cloud business. $455 billion, that is up 306% year on year, up 360%. That is 4 times the pipeline that Google has, and that is the catalyst when it comes to the tech impetus and that demand around AI playing into the markets today. Open trade is up next. This is Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Good morning from London. I'm Anna Edwards alongside Guy Johnson and Lizzie Burden. We're an hour away from the opening trade. Here's what you need to know. Polish officials hold an emergency cabinet meeting to discuss the violation of its airspace by Russian drones. The country condemns the move by Russia as an act of aggression. President Trump says he's unhappy with Israel after it carried out airstrikes on Hamas leaders in the Qatari capital of Doha. Plus, Oracle's outlook fuels AI optimism. The database company stuns Wall Street with an aggressive outlook for its cloud revenues. Investors send shares soaring, adding $190 billion to the company's value.
Well, Anna, today's the day that we look at the inflation side of the ledger, stateside. The jobs numbers have fueled the Fed cut bets, pushing stocks to near all-time highs and futures pointing even higher, both in the US and in Europe today. We've got euro-dollar at a 117 handle with a new prime minister named in France, and oil higher today as we keep geopolitics in focus. We have to watch what's happened in Qatar, Israel striking Hamas. We have to watch what has happened in Poland with the Russian drone incursion. That could keep a lid on European sentiment today. The countdown to the opening trade starts right now.
Wednesday morning, good morning. Normally, the lead story is quite straightforward on this show. It's fairly easy to spot. Today, I think there could be 6 or 7 of them. There is a lot going on out there. You've got geopolitical news, Lizzie's just talked about it. You've got Fed news, Lisa Cook, what's happening there, what the story is when it comes to the data is also going to be a big factor in today's session. And you've got corporate news, you've got Synopsys, you've got Oracle, you've got Novo Nordisk, you've got Inditex, all stories that we could talk about this morning. So there's a lot going on. Which way the market looks, I think, is still to be determined. But let's start with this Polish story, because as Lizzie says, I think this could keep a lid on sentiment today. Just brings it a little bit closer, the Ukrainian war, to the European narrative.
Yes, and to the NATO narrative as well, crucially, doesn't it? So let's start with Poland. And we start with it because of all the reasons you described there, Guy, but also because a cabinet meeting has been called in Poland, and that is set to take place now, to start right now. So right now they're scrambling to get the cabinet together. Last night they were scrambling jets to fend off drones from Russia. Now, whether these were deliberately sent into Poland or this was some effect of what was taking place in Ukraine is yet to be understood. We haven't heard from Russia on that. And no White House response on this. It's been so busy over the last 24 hours, probably, in geopolitical news flow, that we haven't managed to get any White House response yet on this one. But Poland calling it an act of aggression, shooting down some of the drones. Prime Minister Tusk says, crucially, that he is in contact with Mark Rutte over at NATO, because let's remember, Poland is not Ukraine. This would raise the stakes.
Yeah, so he says that Putin's testing Poland's resolve here, and you have to take this seriously, obviously, given all of the carnage in Ukraine. It really puts the pressure on Ursula von der Leyen today. She's giving her State of the Union address. You've got not only, France in chaos, not only the European Union kind of left out of the talks between Russia and the US when it comes to Ukraine, but just a weaker Europe overall. She needs to push this message militarily, and what a day to be doing it, given these strikes in Poland.
Probably an accident, but as you say, that doesn't matter. The level of attacks that are going into Ukraine probably suggests that at some point errors are going to be made. But conflicts start with errors. And miscalculations can be a big factor in the way that conflicts evolve. You've certainly seen that throughout the history of Europe. Or you could take the view that this is a test. I don't know is the honest answer. But as you say, Lizzie, you have to take it seriously. Does this change anything on the ground at this point? I doubt it. Does it change the narrative in terms of defence spending? I doubt it, but it just reinforces what is already starting to take place in Europe, and that is that Europe needs to rearm. Poland is on the front line. This just reinforces that narrative once again.
And we've had report after report of Russia messing with aviation, wayfinding technology. Now, this is they had to close Warsaw Airport as a result of this, as you'd expect, because of the drone attacks. So this is it just increasingly at the margin affecting what's happening in Europe as well. And then you think about what reaction function we're going to see from the US administration here, and we already heard, we had some reporting that predated these events in Poland that suggested that President Trump is coming more round to the idea that if Europe is stepping up sanctions on Russia, then on secondary sanctions, sorry, on those who buy Russian products, then he is prepared to follow suit, and that means India and China.
Yeah, and he's saying EU nations have to do the same, but it puts the likes of Hungary in the spotlight because they're perhaps not going to be willing to do this. And remember that the deadline for Putin to have this bilateral with Zelensky has come and gone. So it speaks to the weakness of Donald Trump here, which takes us on to what's happened in Qatar, because the frustration emanating from Washington that they didn't get enough warning of the fact that Israel was going to be striking the Hamas leadership in Qatar to stop it.
In some ways, there's a parallel between these two events. You've had Russia striking potentially Poland, and you've got Israel striking Qatar. Now, whether or not both were deliberate, I don't know, but clearly one was deliberate. The Israelis striking Doha. You lived in Doha. Can you imagine being in Doha when this was happening?
Yeah, it's petrifying,
Absolutely petrifying. So
and as much as you understand that it is targeted at specific individuals, is still... It's enough to frighten and to provoke serious response from the government of Qatar and the governments of the other nations around, some of whom have Abraham Accords with the United States.
Precisely. So you think about, if you, this is not a one-for-one, but Abraham Accords, kind of the relationship with the United States, what happens in Europe with NATO and Article 5, and the kind of the parallels, I think, are fairly clear. Israel has made that decision that it is going to strike Doha, which I think is a huge move in terms of changing the narrative around what happens in Gaza and the relationship between the Gulf states and Israel. And you wonder kind of what the motivation was, because this is such an obvious and clear escalation. The Russian escalation is sort of clouded in mystery a little bit. Did they, didn't they? Is this deliberate? Is this not deliberate? This is blatant and obvious and is a clear escalation. What follows, I think, is really difficult to call, because I think it also changes the narrative around the Gulf states, who are seeing increasingly the conflict with Iran becoming closer to them, the conflict in Gaza and Israel increasingly coming towards them. How do they respond?
Yeah.
That they rely on the fact that they don't get caught up. Can you imagine this happening in Dubai? Can you imagine this happening in Doha? This is... There's no reflection in Dubai house prices that there is any concern here, but it's getting closer and closer.
It is, and Emmanuel Macron and the European response reflecting some of that concern about the regional spread of conflict. And Emmanuel Macron making that very point that we should not allow tensions with Israel and between Israel and others to spread more regionally.
But this is exactly why you've had such an enraged response from the UAE as well as from Doha, because of the idea that expats will now be awake, very awake to the worries about their safety being here. You know, the US airbase in Doha is the biggest in the Middle East. You know, there is a deal with the devil, as it is put, that Doha has this relationship with US security. If they cannot rely on the US to prevent things like that, it completely changes
and this
the game.
has been a location for some time where groups that some governments around the world deem to be terror organisations can go to negotiate. So we've seen it most recently with Hamas. And so the role that Qatar can play in that mediation story is certainly in focus. There's so much going on geopolitically. It's amazing to see that European futures are up a little this morning. Does it put a lid on them, as you've rightly been saying? Oil prices did spike on this Middle East tension yesterday, then retreated, now up again 0.9%.
But we have to talk about the tech story, because that is also what has powered global stocks to these near record highs. They're on the front foot for another 6th day today, and this comes back to Oracle. So the share's hitting a record, up 28% in extended trading on this aggressive outlook for its cloud business. It's pulled all the AI-related stocks higher, not just also in the Asian session as well. We look out for the ripple effects into the European session, but the bottom line here is, you know, post the ChatGPT global AI infrastructure boom, it seems to be carrying on, building out.
Can I speak? When I saw the Oracle numbers last night, the first thing that crosses is the revenue lines. Oracle numbers missed. They missed expectations. And then they produced this shiny kind of forward
Bookings
guidance. Wow, it's going to be amazing. Don't look over here, look over here. You just there's a little bit of that narrative, I think, in the numbers this morning, and I think it is going to ripple into Europe. I just want to flag as well that Synopsys, which is a chip stock, was out with numbers last night. It is heavily down. So that I do wonder whether or not there is some ripple effect of that into Europe as well. So it's going to be interesting to see how the Synopsys Oracle story kind of balance themselves out.
And then TSMC August sales up 34%.
Yeah.
Another sign, though, of that solid AI demand.
Yes, and some people are convinced. I mean, some of the analysts on the call yesterday with Oracle apparently were so shocked they could barely speak. We're all in shock, said the Deutsche Bank analyst on the investor call with the management. I mean, that's not usually the kind of flattery that you get on those kind of those challenging venues. But I will just say, Oracle's share price performance after hours, if that is justified, or if that follows through rather into day trading today, it'll be the largest single day surge since when? 1999. And I don't need to finish that thought, perhaps. Do I?
A good year. The end.
Yes, that was a good year.
Yeah.
What game wasn't? Camilla Astaborga is going to be joining us in a moment. Senior Portfolio Manager, EFG Asset Management. And Nabil Melali is a Portfolio Manager, Edmund de Rothschild, Asset Management. Joining us later, Maria Manucci, Fund Manager at M&G Investments, joining us. And Ali Redison, former advisor to the UK Business and Trade Secretary and Director of SEC Newgate. Joining us to talk about what we're going to hear from the President of the European Commission and what VDL is going to say today and how important this speech is. That starts in 49 minutes. We'll bring you some of that speech as well live.
Elsewhere on the agenda today, we've got at 12:45 p.m. a speech from the SNB's Martin Schlegel. Interesting to listen to him because he said that there's a high bar to cut into negative territory because of the impact on savers and pension funds. So we gauge that against the 39% US tariffs, of course. Then at 1:30 p.m., as I've said, we've got the US PPI numbers expected to have dropped from 0.9% to 0.3% in August. This, of course, ahead of the CPI data tomorrow. And then at 6 p.m., I should say, we have US 10-year note auction coming as well. $39 billion worth of that. But really the focus turning to inflation today.
Is it? Do I care? Why do I care? 25 basis points is nailed down.
Trying to care about the inflation data. We might.
We might. I'm trying to, though. But I can't see how. Lisa Cook doesn't change the agenda when it comes to the Fed, it seems. Like she's going to vote. She's going to be there. She's going to vote. All that sort of 25 basis points still looks like it's locked in. How big would the number need to be on inflation over the next couple of days to change the narrative around?
But it could really shine a light on the dilemma.
Maybe.
If that was one, and there's a couple of the elements of the PPI that filter through into the PCE, which is the one, of course, that the Fed really looks at: portfolio management fees, hospital costs. Both of those are going to be closely watched because both of those are expected to go higher. So if that pushes PCE higher, then there you go.
Maybe the PPI and the CPI numbers don't change the size of the cut or the fact that they get a cut in September. But maybe it changes the language around that cut and the pace of cuts beyond it.
The hawkish or dovish nature of it, perhaps.
Maybe. It doesn't feel like that at the moment.
I think we failed.
I think the Fed is going to cut. It's like the AI trade is still on. The Fed is going to cut. Basically, these stocks have got what they need to continue to go higher. And I think that is the overall narrative here. Does this change the bond market? Maybe a little bit at the margin. The US clearly needs nominal growth. It needs some inflation, quite a lot of inflation given the debt loads, and it needs stocks to continue going higher. All of those kind of pieces in the puzzle are in place.
Yeah, you square that with the deteriorating labour market picture, which was really emphasised yesterday. That's got Jamie Dimon saying, look, the economy is weakening. Is it weakening to a recession? I don't know, but it is certainly weakening. And you set that next to some of the positives.
This data was so long ago.
Yeah.
It was, but it completely changes the narrative about the Trump inheritance. It is important politically. And what a number, 911,000. Okay, yeah. It's significant, that.
If you're a portfolio manager and sitting down this morning, how does it change what you are doing, is my question.
I've seen two different arguments. Some say, as you say, the inheritance was worse, the jobs picture is worse, that means more cuts. Others saying, and Anna Wong was saying this ahead of the numbers yesterday, you can make the argument that maybe you're through the job cuts more quickly and that the worst is over, which is a different story.
The economy is reaccelerating, new cycle, positive. Yeah. You could read this positively quite easily, I think.
All of these numbers will just change how much panic there is when the Fed actually cuts in the stock market.
Panic?
Well, is there panic or not?
Depending on, or maybe we've already priced it in and maybe actually there is therefore panic that you need to deal with other things. What else do you need to know this Wednesday morning? As I say, there's a lot going on. The French President Emmanuel Macron has named long-time ally Sébastien Lecornu to be the country's new Prime Minister. Lecornu will become the country's 5th Prime Minister in 2 years and will be tasked with steering the budget cuts through a divided Parliament. A judge has temporarily blocked President Trump from removing Federal Reserve Governor Lisa Cook. The ruling allows her to remain in her job as she challenges the president's efforts to oust her over allegations of mortgage fraud. And Novo Nordisk, this is new news this morning, says it will cut 9,000 jobs globally by the end of the year. The Danish pharma giant aims to save $1.3 billion with a company-wide transformation. Novo also made a third cut to its profit forecast for the year. Essentially, that GLP-1 bubble has definitely burst. You look at the fact that it is increasingly a commoditized product, that Novo Nordisk struggled because of its inability to produce early on in that story, to stamp its authority on that market.
It's a fine example of that bubble being completely coming at a completely different time to the demand. I mean, there's no sense that demand will dry up for these products, but as you say, commoditized US generics, that competition.
Yeah, 5,000 of these 9,000 jobs are going to come. Job cuts are going to come in Denmark.
Yeah.
Just a reminder of how crucial this company is to that economy and the risks of relying on one corporate champion.
Coming up on the programme then, France's new Premier, Sébastien Lecornu, faces mass protests on his first day in office, underscoring the daunting task that awaits him. We'll have the latest from Paris. Plus, President Trump tells European officials he's willing to impose new tariffs on India and China to push President Putin to the negotiating table with Ukraine, but only if EU nations do the same. Up next, Jamie Dimon says the US economy is weakening after the record jobs data revision. We'll have more on what it all signals for the future of Fed policy. Lots of that conversation coming up. If you want to get in touch with us, please use IB plus BBTV Go, those functions on the Bloomberg terminal. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
40 minutes to the opening trade here in Europe this morning. Obviously, a little less for the bond markets. We'll be touching on that in just a moment. But there is a lot going on this morning. Let's turn to what is happening in the fixed income universe. Donald Trump has been blocked from blocking Fed Governor Lisa Cook from voting at the September meeting. She's fighting allegations of mortgage fraud. Let's figure out why this is significant. Does it change the narrative on the September Fed meeting? I'm not sure. Valerie Totel, what's your view?
Look, I thought it was very interesting, given the reasons why the Fed is, or why the judge is allowing Lisa Cook to stay on as sitting governor. He was ruling, in his opinion, that it's only her conduct on the job that matters. And given that these mortgage fraud allegations happened a year before she became a sitting Fed governor, he's essentially arguing that Trump does not have cause to remove her. Now, this is a very important case, Guy, not just for Lisa Cook, but also for the broader narrative around Fed independence. Federal Reserve Act back in 1913 does give the sitting president the power to remove the Fed governor for cause, but there's still a lot of questions, a lot of ambiguity about what actually justifies the cause. We'll be paying a lot of attention to that court case, likely to land on the Supreme Court's desk sometime soon. We also had quite a stunning revision downwards of the non-farm payroll survey from the Bureau of Labor Statistics, as you guys were mentioning, the biggest on record. But I thought it was interesting to hear what Scott Bessent had to say after these revisions, telling Fox Business essentially this is upping the ante for his call of an audit of the Federal Reserve, given the central bank claims they're data dependent and the data they're depending on is this poor. Is that really the way we want to be conducting monetary policy? He also said that this data, this revision shows that maybe perhaps the Fed size of that rate cut next week needs to be recalibrated. So he came very close to calling for a 50 basis point rate cut yesterday, talking to Fox Business. But again, he also said that this is choking off the U.S. economy. But the one thing clearly, Guy, that is not choking off is this AI trade with Oracle absolutely stunning Wall Street, leaving analysts speechless on their guidance for cloud revenue, surging 28% in after-hours trade. Guy, you can argue that maybe higher rates are choking off some part of the U.S. economy, but is not denting the AI trade.
Can they deliver that? Like, is there enough electricity? Is there enough water? Is there enough stuff to build all of the data centers that are going to require? Just amazing. The numbers are absolutely eye-popping. Valerie, thank you very much indeed. Joining us now, Camilla Astabaroga, Senior Portfolio Manager at EFG Asset Management. Good morning.
Good morning. Thanks for having me.
Nice to see you. There's a lot. It's a really busy day today, and there's an awful lot going on. But a number of things have remained the same. Equity markets are at record highs. Gold's at highs, which strikes me as being a little bit odd. Spreads are still super tight. All of these things are still constant. Nothing seems to knock any of these off course. Can you see anything that does? Are we at anywhere near an inflection point?
I mean, it is crazy. The complacency of the market is usually you cannot see equity being so high and gold being so high. They don't make sense. You know, they should not move on the same side. I do believe this is a pivotal moment, honestly. It does feel like back from school, loads of news. I think people are struggling to absorb all this news and sometimes are not together and seeing what is more important, what is less. So in fixed income, people are still usually looking at yields rather than spreads, and they still feel comfortable relatively with yields, especially because the Fed and other central banks have space to move. So still like restrictive, so they feel okay. And the data is not awful, so they're like, well, this can continue for a long time. But for me, like the marginal compensation for risk is so tight at the moment, at the lowest ever, that why would you take the risk? You know, we have seen it in the past in 2010 when bonds, the 10-year bonds of all European countries were trading at the same level, despite their actual affordability of debt, despite their capacity of debt. In emerging markets has happened the same, and this is because of how the benchmarks are composed, because of preference of the markets, because of liquidity.
Okay.
But then when something happens, then you see that divergence between fundamentals.
Yes, so actual risk maybe not reflected in some of the pricing
100%.
Right now. So let me ask you about one of the other big themes of the morning, and that around the Oracle story, another reminder of the huge amount of money going into AI development and infrastructure, and the potential perhaps this might be a massive structural change, might be a huge structural change for the global economy. If it is, how does it feature in your world, Camilla? I mean, is this an inflation story, a growth story? Does it not matter because the Fed's cutting? I mean, what's the read across?
I really think this is a much needed story, because with demographics going down so much, we need someone to pick up that, that loss of potential jobs in the future. So I think that definitely is something needed for growth to continue, for productivity to continue. I see it more as a long-term trend. It's definitely something that's going to stay for a long time, and it will impact more U.S. Treasury curve. At the moment, the short part of the curve is moving, of course, on monetary policy, but the long part of the curve has actually stayed quite sticky, and this is because of more supply expected, because, of course, the massive deficits that are going on. But I think it's also because of these kind of inflationary trends that could impact on the future. Although you could also see it as a deflationary trend.
Yes, I mean, other technology has been, hasn't it? Yeah.
Well, speaking of those massive deficits, I want to bring it to Europe. Yesterday, you had French borrowing costs topping Italy's for the first time in Eurozone history.
Is France periphery now?
Yeah, that's exactly my question. Is France the new Italy?
Honestly, I don't want to sound too emerging market, but if you would just look at the data and hide the name of France, you would say, oh, this is an emerging market, 100%.
Okay, wow. For our French viewers, just switch off now.
Sorry, yeah. 4 PMs in the last 2 years, massive political issues, a lot of deficits, increase of debt. I mean, I don't see a lot of differences, really. So, sometimes we think, is debt so blind? We are so comfortable with some countries. Of course, they do have more institutionalism and other positives than other EM countries that are more reliant on external debt. But it is something problematic, and I think that people are going to start asking for more compensation for risk. I mean, they have already done it, and I think that they will continue doing so.
Yeah, Maloney's got a €13 billion windfall because of her lower yields. Yeah. Anyway, good to see you, Camilla. Camilla Astor-Baraga, Senior Portfolio Manager at EFG Asset Management. Always good to have you. Coming up on the programme, French President Emmanuel Macron has picked a new French Prime Minister, and that's Sébastien Lecornu. Who is he, and what does he mean for markets? We'll tell you next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back, everybody. This is the opening trade, 7:30 here on Wednesday, the 10th of September. There is a lot of news flow this morning, some of it of a geopolitical nature. Might that put a lid on our expectations for risk appetite for the equity markets this morning? Well, maybe it does. Don't know the counterfactual, but we're not looking to go a lot lower on that geopolitical tension. But there is a supportive factor in the shape of those tech results coming through from Oracle, so that could put some upward momentum behind some of the tech names. But there are a lot of stories in the mix this morning, Guy.
France is just France and Italy are basically kind of neck and neck at this point in terms of what we're seeing in the bond market. France is now definitely in the same territory as Italy, and I think that is probably the significant thing you need to think about. There you go, 3.477, 3.473. So we're pretty much in the same ballpark. In fact, we're almost exactly in the same ballpark. And this morning we do see a little kind of offer into French bonds. I'm assuming they are properly open now, but the situation that we now find ourselves in is that Italy and France are now basically the same. And we just heard what Camilla had to say about that subject.
France, an emerging market, apparently, according to her. Well, let's ask another expert on this, as we have French President Emmanuel Macron naming longtime ally Sébastien Lecornu to be the country's new Prime Minister. Lecornu will become the country's 5th Prime Minister in 2 years and will be tasked with steering a budget through the divided Parliament. Joining us now for more is Nabil Milali, Portfolio Manager at Edmund Rothschild Asset Management. Good morning to you, Nabil. I want to ask you about your view on this new Prime Minister, because before he was chosen, you wrote that the political equation can no longer be resolved without the Socialist Party due to the intransigence of the National Rally. Is Lecornu bound to fail to pass a new budget?
Well, here in France, we have a sense of déjà vu, because we find ourselves in exactly the same situation as 1 year ago, after the departure of former Prime Minister Michel Barnier. Sébastien Lecornu will now be the 5th Prime Minister in 3 years, which shows the level of political instability that the country has not seen since at least the 50s. What is surprising here is, like you said, we end up with the same profile as the outgoing Prime Minister François Bayrou. While some were expecting Macron to appoint someone from the left wing of the National Assembly, he decided to choose another political figure from his own camp. Of course, Sébastien Lecornu is a political figure with a lot of experience. He is from the Conservative Party originally, before joining Emmanuel Macron. He was the defense minister, but more importantly, he was one of the closest advisors to Emmanuel Macron, and he was actually the one who suggested to him this idea of a great debate following the Yellow Vest crisis, which was a series of meetings between the president and the French people that helped diffuse the crisis back then. So probably Macron is expecting him to use this experience to tackle the social movement protest that is beginning today, and whose rallying cry is to block the entire country.
Yes, we are expecting some strike activity to take place, aren't we, today and then later in the month. Nabil, that's interesting context about the role that he has played. What message do you think the bond markets are sending right now? Are bond markets saying, actually, we're not going to insist that you tighten the budget story in France, we just don't want it to slip any further? Is that one message you could read into the relative stability of the French bond market story?
Yes, so far we didn't see too much pressure from financial markets and especially from the bond market. We almost have the feeling that the financial markets and investors are resigned and can accept just some kind of slight improvement of the deficit or maybe just a stabilization of this deficit. And this is why we think that Sébastien Lecornu will still have a very difficult political equation to solve. As you said earlier, without the support of the Socialist Party, he could face another motion of no confidence, and to get their support, he will have to make huge budgetary concessions because the Socialist Party are very unlikely to accept the suppression of 2 bank holidays or the freeze on all social benefits increases or even some local spending reduction. They are asking for a 2% tax increase on the wealth of the richest households above 100 million euros, which so far is unacceptable for Emmanuel Macron and his camp. So it is very difficult to find common ground, and the main scenario is probably like I said, a slight improvement of the deficit, and maybe markets can accept this, can see the glass half full.
Nabil, is Lecornu the last prime minister before general elections? Is this the final roll of the dice? If he fails, elections are necessary.
Well, the scenario of snap elections is still low, but the probability is definitely rising, mainly because the far right, the National Rally, is putting huge pressure on Emmanuel Macron. They want him to dissolve parliament and call for new elections. Clearly, Marine Le Pen sees an opportunity to seize power right now because recent polls are in her favor, first, and second, she is facing a judicial problem because she was banned from running for elections, and she is hoping that by taking power she can change the law and be able to stand in the 2027 presidential election. So she's threatening to bring down any government, and Sébastien Lecornu's government as well, which means if we don't find any political compromise in the next weeks, and we have a deadline by early October, the new government has to present a budget to the parliament, then the probability of snap election will rise again, and it seems almost inevitable before 2027 if France stays in this political gridlock.
So is it going to take a crisis, Nabil, to get France to finally wake up and sort out its debt?
Well, that's what we saw in other countries that were facing similar budgetary problems. To go back to the public finances, the situation is not catastrophic, but it is definitely disturbing. If we start with the good news, clearly, France is not Greece. France does not have huge external vulnerabilities. When you look, for example, at its current account balance, it's close to equilibrium, whereas Greece's current account deficit was almost 15% in 2008. So, in other words, the French state has a financing problem, but the whole country does not have a financing problem. Actually, when you look at households, they have a saving rate, very high saving rate, almost 19% in the first half of 2025. So despite what some doomsayers are thinking, we don't think that there is a probability of external intervention from the IMF or the ECB. of course, there are some bad news. Clearly, when you look at the deficit, it's almost 5.5% this year. As I said, we don't think there will be a huge improvement next year. And more worrisome for France is that France is diverging from the rest of the Eurozone with high debt to GDP ratio, but also a high public spending, which represents 57% of GDP, 7% above the average of the rest of the Eurozone. But as I said, finding common solutions between political parties is very difficult because it's very politically sensitive topics like the pension system or healthcare system.
Nabil, thank you very much for your time. We do appreciate it. Nabil Malali, Portfolio Manager at Edmond de Rothschild Asset Management, talking there about the French bond market story, the French fiscal story. Let us talk about what's been going on in Poland. We've seen that the Polish government has scrambled together a cabinet meeting, and we're hearing from the Prime Minister, Donald Tusk. He says there were no casualties in the drone incursion, but he does say that this was probably a, quote, large-scale provocation. So I wonder if that is interesting, that there's no attempt to perhaps play this down. Prime Minister Tusk also saying there's no need for any restrictions for citizens for now because they had been told to stay at home. Let us rewind and get the backstory to this. Russian airstrikes, Poland has had to scramble jets overnight to take down drones that were believed to be Russian. What exactly they were doing in Polish airspace is unclear. Poland has called this unprecedented and an act of aggression. Let us talk to Bloomberg's Oliver Crook, who joins us now. So what happened over the Ukraine-Poland border, Ollie, shrouded in a little bit of mystery, perhaps?
Indeed, and the sort of unprecedented dimension of this, Anna, because we have seen this happen before. We have seen projectiles, missiles, drones, and things cross into Polish airspace. So remember, in the early months of the war, there was a missile that overshot its target, landed in Polish territory, and that really provoked a lot of very sort of scary conversations in our newsroom and really across Europe about, does this trigger Article 5? And, it was sort of evaluated that it did not. But these were very sort of touchy subjects back at that period of time. The reason this is unprecedented is because it's the first time that a NATO ally has directly engaged with any sort of Russian military hardware. This was done over Polish airspace. They're currently now recovering what it is. They assume that it was drones. But again, this is going to be a very big question in terms of what the calculus was here. As we just heard from Donald Tusk, the Prime Minister of Poland, suggesting that this is sort of a deliberate provocation. We've heard from a couple U.S. lawmakers, including Dick Durbin, saying that this is a test of resolve to see whether or not basically NATO is willing to protect its eastern flank. We heard from Joe Wilson, a House Republican, calling it an act of war. And I think that there's a degree to which, whether this is a deliberate act by Putin to sort of test the boundaries, or this is just sort of indifference to kind of the sensitivities over Article 5, they both communicate the same thing, that this is a much bolder Russia, a Russia that over the last few weeks has done countless and sort of ramped up all of the attacks within Ukraine, targeting civilians. And the question is going to be, how do the Europeans respond? And critically, how does Donald Trump and the White House respond? Remember, he just met with the Polish president a couple of weeks ago and basically said that he was willing to commit more U.S. troops to Poland to sort of deter and safeguard Poland if that's what they wanted. And of course, coming in the context in just about 15 minutes time, we'll be hearing from Ursula von der Leyen, the State of the Union. Really, the message she's going to send is a Europe alone, a Europe that needs to take care of its own security. And we'll hear a lot more news on sort of the European plans on defense.
It's interesting. Volodymyr Zelensky saying that Russia launched 415 drones and 40 missiles at Ukraine. Just to kind of put this in context to kind of what we're talking about here in terms of the scale of what is happening in Ukraine right now. The possibility that this was an error kind of hangs there, but we don't know, and that's kind of the modus operandi, you could maybe argue, of the Russians over decades. Ollie Crook in Berlin, thank you very much indeed. You can draw a direct line, it seems, between what is happening in Europe right now and what has just happened between Israel and Qatar. Israel conducting an unprecedented strike against senior Hamas leaders in the Qatari capital of Doha. It's a move that is widely seen as escalating an already tense standoff between the country and Arab nations over the Israeli war in Gaza. Jemana Basetchi, Horizon's Middle East and Africa anchor in Dubai, joining us. Qatar has been working with the US to broker some sort of a ceasefire between Israel and the Palestinians in Gaza and Hamas. Where are these talks now? How does this change the narrative of the role that Qatar plays? What is the tone in Doha this morning as a result of the attacks that we've seen?
Well, it is a major diplomatic setback. State terror is the language that the Qatari Prime Minister Sheikh Mohammed used in a press conference yesterday. He was visibly angry and called it a violation, the attack on Doha, a violation of their sovereignty, a violation of international law. And he went one step further and said it's also a violation of moral standards because it is unprecedented and also an unwritten rule in diplomacy that you do not attack negotiating groups and you do not attack the mediator or the host country in the middle of negotiations. So a very clear escalation, very angry response from the Qataris. Now, they did go on to say that they are inclined to continue with their mediation efforts, but they're also speaking to the U.S. to ensure that an attack like this doesn't happen again. Of note here is that Israel had been targeting the chief negotiator from Hamas, Khalil al-Hayya, but they were unsuccessful. He survived the attack. What is to prevent a repeated attack from happening again? And this is the question I think that not just Qatar is grappling with, but other states, Arab states in the region are asking themselves as well. What is the value of hosting these talks? And also, what is the value of those so-called U.S. security guarantees if the U.S. were indeed given a heads up before the fact, but did not notify Qatar in time? All of these big questions. Meanwhile, the U.S. administration has been pushing to get their ceasefire proposal across the line. The Israeli Prime Minister yesterday said that they're willing to agree to the terms. We've not yet heard from Hamas.
Yeah, and if Donald Trump can't control Benjamin Netanyahu, where's next? Maybe he goes for the Hamas leadership in Turkey. Horizons Middle East and Africa anchor Jemana Basechi, we thank you so much for that rundown from the Middle East. But coming up on the programme, we'll turn to Novo Nordisk, saying that it's going to slash 9,000 jobs globally, cutting its profit forecast for the third time this year. We'll get to you that and some other stocks to watch. This is Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back, 7:48 here in London, and we have a positive picture for us for European equities. This is partly being driven by technology and the Oracle news overnight, perhaps. We certainly have some geopolitical headwinds, but they're not knocking risk appetite entirely this morning. And let us talk to our Markets Live executive editor, Mark Cudmore, who joins us this morning. There is a huge amount of news flow this morning, Mark, but let's start by looking ahead to one of the big data points of the day. We're going to be looking at inflation in the form of PPI. Now, you do think this is a data point that matters. Give us what you're watching for.
Yeah, good morning, Anna. Normally, PPI gets released after CPI and largely gets dismissed. CPI is the more important component, and since PPI comes after it, it's kind of, well, we've already got the bigger signal. But this is one of the few times a year that PPI comes out ahead of CPI. And as some work from Brent Donnelly by Spectrum Markets has highlighted, if you have misses in the PPI, both on the core and the headline in one direction, that does have a generally statistically significant signal on where the CPI will miss. So we do need to pay attention to PPI today, because that'll give us a possible directional signal for CPI. That is the big data point we're waiting for to Fed next week. All that said, I think I'm someone who thinks that the inflation risk is being underestimated. I think that's going to be a big theme over the next year. That said, I do think that we'll move beyond the CPI and PPI data points quite quickly because the Fed is really the decider. And I don't think we can trade any inflation theme till after the Fed. So I think they'll only provide a short-term 24-hour window shock. And then we'll go back into focusing on the fact that this Fed meeting next week will be dovish. That's supporting stocks, supporting bonds.
Mark, we've got futures racing ahead here in Europe this morning. Do you not think that the Russian drone incursion into Poland is going to weigh on sentiment at all this morning?
It was a really weird one, Lizzie, because we got a lot of chatter about that on social media. We're kind of keeping an eye. It took a bit of time to kind of get official confirmation of what was going on. But even then, there's been very little reaction there. Now, there was meant to be a big military exercise at the end of this week in Belarus and combined with Russia, which is why Poland was already expected to be closing its border. I don't know whether it's an advance wave of that. But this is a story that's so far been dismissed. We're keeping an eye on it, but it's not really driving markets at the moment. Yes, the news flow in Europe and geopolitical side seems very negative, but the backdrop at the moment is still relatively supportive for stocks. We've had positive earnings, and again, I reiterate, we've got that dovish Fed coming up next week, which is the really big anchor at the moment for both stocks and bonds.
Mark, what happens if stocks go down in America? And I'm not talking about kind of a 2-week blip that allows people to buy the dip. What happens if stocks go down properly? And is that something that is in any way feasible? Is it allowable that stocks go down at this point? If you're running an administration in Washington, can you afford to see stocks go down?
It's a great question. I think that the supposed administration put on the stock market is a lot farther away than people think. I think we both saw this in the first administration under Donald Trump. The supposed Trump put wasn't pulled until stock market had fallen almost 20%. And again, we saw a version of it in April. So I think from the administration point of view, sure, if there's a big drawdown in the stock market, they will react. But I don't think they'll be quite as sensitive or as short-term as people think. It'll require a very large drawdown.
Is the S&P too big to fail? Mark Cudmore, we thank you so much. Bloomberg Markets Live Executive Editor. And remember, you can get analysis and insight from Mark and his team by going to MLIV Go on your terminal. Let's get to your stocks to watch now. Louise Moon is here with that. Louise.
Morning, Lizzie. So we're starting off today with the Danish giant Novo Nordisk. A host of negative news from them this morning. So first up, they say they're cutting 9,000 jobs globally. That's about 11% of their workforce, with most of that in their home market in Denmark. That's with the aim of saving about $1.3 billion by the end of 2026. So really aiming to save costs there, part of a kind of wider turnaround for the company. As well as that, they've cut their profit forecast for the third time this year. So they're seeing about 10% growth. They had seen about 27% growth. So a lot of negative news. Would expect that to weigh on them this morning. Next up, we're also looking at tech and software companies. That's after Oracle's update overnight. Really aggressive outlook from them. Surprised Wall Street, had an impact on Asian stocks. So we're seeing if this will play through into Europe this morning. The likes of SAP, ST Micro, Infineon, been a mixed picture for them so far this year, but we'll have to see if this plays through into Europe on hopes of a good future for AI on the back of Oracle overnight. And then lastly, we're looking at Inditex, ending on a bit of fashion, the owner of Zara. They've had a rough year to date, down about 14% into the reds. They had their first half earnings this morning, but the thing that people are really focusing on is sales are starting to tick up into the third quarter, so pointing to a bit of resilience. There's been a lot of worries for the wider sector, consumer sentiment, trade tensions, poor weather, all weighing on the sector, but Inditex seems to be resilient in the face of that, so potentially providing a bit of a boost for them at open.
Louise, thank you very much. Louise Moon, our equities reporter. We'll also keep an eye on AB Foods. Disappointing numbers, it seems, out of Primark could weigh. But really, the tech sector is going to be front and centre, isn't it? Any read across into European tech names. And cloud is something that Europe does do from that Oracle picture.
Just don't ignore the synopsis story. A big, in the chip space, that could read into Europe this morning, so just pay attention to that. I wonder if Wiz moves as well on the back of what we've seen.
We've seen their planes taking off, landing.
I've been watching the live shot, so yeah, they have been, but it just kind of raises a little bit of a red flag. Anyway, the opening trade is almost upon us. Futures are positive. We'll deal with the details next. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Wednesday morning, good morning. There is a lot going on this Wednesday morning. However, there is one story from a market point of view that seems to be cutting through the most, and that is what is happening with Oracle. Came late in the day, obviously, in the United States. The US markets, Europe went out here, US market rallies towards the close. That's one positive reason for stocks in Europe to be higher this morning and the futures picture to be higher. But the other one is Oracle. There's a lot going on. But that blowout outlook from Oracle seems to be, Lizzie, what's cutting through to futures this morning.
Yeah, look, there is a lot going on geopolitically on the Polish situation, this Russian drone incursion there. Kaja Kallas, the EU foreign policy chief, says that it was intentional. Donald Tusk says that the situation is under control. But look, no sign that this is going to impact European sentiment at the open. It's green across the screen. As you say, Guy, it looks like that tech sentiment, the optimism on Fed cuts is what is going to power this session today, Anna.
Let's talk about some of the individual stocks and sectors that could be in focus then, Lizzie. And let us start with what is going on in the pharma space. Novo Nordisk in focus, cutting 11% of their global workforce, cutting their expectations for the year, downgrading their performance for the year for the third time. So that's certainly something we'll be watching at the start of trade. AB Foods in focus. They own the Primark brand, of course, as well as other things. Like-for-like sales at Primark look to have disappointed some, and so as a result, that one could be a little bit weaker at the start of trade. But back to that tech theme, SAP could be in focus. This is all about cloud. The Oracle story has at least been all about cloud, and that sent the Oracle share price up by more than 20% in after-hours trade. So we'll look to see what read across there is into the likes of SAP. Temenos could also be on the move. Sage could be on the move as a result of some of this read across in the tech space then, Guy.
Absolutely. Fold in the synopsis story, it gets a little bit more interesting. But yeah, this looks like it's going to be a session brought to you by Oracle, basically. And we'll watch the data a little bit later on. Does PPI really change the narrative? Anyway, here we go. European market session is upon us. It is time for the opening trade. FTSE 100 is out of the gate. Wait and see exactly how names like AB Foods trade this morning. Tough day for the G's over at the Western family. We'll watch what happens there with that narrative. Stock 600 up by 0.2%. We'll see how tech performs. The IBEX is up by 9/10%. Strong performance coming out of Spain. We'll look for what's driving that in just a moment. CAC 40 will wait. Obviously, we've got a new Prime Minister taking over today. I'm not sure that's going to have much of an effect. We've also got demonstrations. I'm not sure that's going to have much of an effect either. The DAX and the SMI, there's plenty of names in the DAX that could be affected by the Oracle story. So look for names like SAP to be directly impacted by that. We'll see how that trades in just a moment. But at the moment, feels like a very front foot session, particularly, it seems, for the Spanish market. Lizzie, what's going on?
Well, let's break it down by sector, okay? So we've got half in positive territory, just under. Basic resources and energy leading the gains. So here you can see the geopolitical story feeding through. We've got oil higher, energy as a sector up 1.2%. But just diving into some of those individual names that you'd flagged, look, Novo shares down more than 1%. Inditex off to a flying start, up 5.8% off the back of those earnings. Louise was talking about this pickup at the start of the third quarter when it comes to Zara's sales. You had flagged as well that we needed to watch the tech names. You've got the likes of SAP, actually, we're waiting for S&P, but Temenos up 0.6%, Sage Group up 0.4%, so catching a bit of the mood music from the Oracle earnings as well. But look, when you look across the continent, as you say, it is a pretty tepid start, but green across the screen.
Yeah, I mean, most sectors in positive territory, though. Oh, well, that's how we started. Now some of them more fading into the red. But let's just linger on retail, because that's real outperformance from Inditex. And I apologise to everybody watching for not making more of this earlier on. But at first glance, some of the numbers looked kind of, you know, they were in line with estimates. They didn't look terribly exciting. But the guidance around August, and this is part post results, the guidance around August, the like-for-like pickup in sales that they've seen there seems to have ignited the market, and that stock is up really strongly this morning. So we'll certainly keep an eye on that one.
So that's why the Spanish market's outperforming.
Yes.
Again, I'm remiss in not noticing that too. But if you look at the points gains this morning, Schneider, what does Schneider do? It basically provides a lot of the kit that goes into data centers. What is Oracle talking about? Data centers. What does ASML do? ASML provides the lithography equipment, but builds a lot of the chips that go into data centers. It's up pretty strongly this morning. Those are the two biggest points gainers, eclipsing Inditex, which is the third biggest point gainer. So Inditex is up by 6%, but is the third biggest points gainer. It just tells you that the tech story, in terms of just the weight that it is adding this morning to the upside, is there. ABB is a similar story as well. Then you get into the banks, but then you get into some of the defense names, actually, which is interesting as well, which are also trading high. I wonder whether there's a defense narrative on the back of the Poland story this morning. That's where the gains are this morning. But SAP has just opened. It is now the biggest points gainer. So it is tech that is adding the weight to the upside. There are some idiosyncratic stories around Europe, like Inditex, that are doing well, but it is the Oracle story that is driving European performance this morning.
Yeah, and something like SAP, which is so attached to that cloud narrative, not perhaps up as much as one might have thought, up by 1.4% this morning, but it is, as you say, broadly the tech space leading us higher. And in points terms, that is a big business, so it matters. Let's talk to Maria Manici, multi-asset fund manager at M&G Investment Management. Maria, thank you so much for joining us. Let's start with the tech theme, because we've got plenty of geopolitics to talk about. We can get into that or leave it to one side, but let's talk about what's going on in the global economy around AI. Such enthusiasm. Oracle out with numbers last night that stunned analysts on the call, it seems. This structural change, how far through this structural change? How are you playing this structural change in the global economy?
I think what we're seeing happening in AI has really been the soundtrack of the last couple of years, really. It is a very important level of capital investment into AI that's really driven some of the sentiment around overall equity markets. And I think this is one of the reasons why we have seen markets remaining very resilient, even in the face of some very important challenges, both from a macroeconomic standpoint, as we see some of the labor market data in the US, for example, weakening, as well as political and geopolitical standpoint. But there is certainly this part of the market that is AI focused, that is continuing to be a source of good news, a source of relief for investors, and the reason to continue to believe that markets can continue to go up.
Yes.
However, I think at this stage, especially in some areas of the market, we need to start being a little bit cautious.
Yeah. Do you start questioning the gains that we're seeing in some areas of US tech?
Well, I think in US tech you have a story that is around capital investment and the potential that might lead to in terms of future earnings. And some of the valuations are not too stretched, but there are some other parts of US market outside the tech space that have been having a good time because of what's happening, in the tech space and the good news coming from that.
So like energy, those kind of businesses.
And the Russell 2000 in general. But if you look down at the earnings and earnings trends and earnings expectations, they're not actually that great. So you have a danger there that, if those companies outside the tech space, outside the big investors, don't realize a pickup in earnings, you might have some disappointment.
So you're shifting towards non-US equities. It sounds like you're expecting a maybe correction in the S&P. We were talking about whether it's too big to fail. When does it come? How big could it be? How long could it last?
Well, I think you have an important distinction between the S&P and the Russell 2000, for example. You have some very different companies represented in these two indices, and therefore the outcome you're going to get is very different. You look at the S&P 500 today, earnings expectations have picked up much higher again, while in the Russell 2000 you have a very different picture. So I think it's about really looking under the bonnet and trying to identify for those companies that still have some very strong potential ahead, and the others that maybe have just jumped on the bandwagon and leverage on this positive sentiment around tech and investment and what AI can bring. But then when reality kicks in, you really have to look at what the earnings are doing. And so far on some of those companies, the earnings expectations not match the valuation and the price you're seeing on some of those companies. So we're cautious on that area, and we find better opportunities elsewhere within equities.
But also, you're looking outside the US, right? And it was interesting that you moved some of your exposure from the UK to Japan. That was at the end of July.
Yes.
That's before what we saw with the Prime Minister. Does that change your outlook for Japan when it comes to equities?
Well, I think when we look at Japan, there is a very long-term story there of change in corporates and the way they look at providing for shareholders. And that is a long-term story. In particular, throughout this year, Japan had lagged also from a price performance relatively to the other markets. And so we did see an opportunity earlier this summer to switch some of the capital back into Japan. And that proved to be quite an interesting call, because then since then we've seen actually Japan performing very, very well. So it's a long-term story that we like in terms of the earnings expectation we see for, again, some of the companies in Japan. We're selective and in this exposure, but the price performance this year have provided us with some opportunities in summer.
Isn't there an argument that says that the more worried you get about the US market, the less worried you should be? And the logic here is that this is too big to fail, to Lizzie's point. And if there's a problem with the stock market, the Fed's going to be there. And the Fed's got some room to cut right now. And whether or not the Fed should be cutting right now is is a question that we should maybe be addressing. But if you assume that the stock market can't go down a long way because of the wealth effect that it will create for the US economy, can you just assume that the stock market is just going to continue to rise? We're up at the moment on the idea that the Fed's going to cut. Now, if the stock market dropped by 30%, 20%, 10%, I'm assuming that the Fed would be there as well. As an investment case, does that hold water?
I think it's a very fair point, and it's one of the reasons why I think today in multi-asset portfolios you could potentially allow yourself to take a little bit more risk, because you might have this extra cushion coming from government bonds, which at this moment they're trading at quite elevated yields, and where you might get some benefits and decorrelation at some point when you enter, if you enter a real risk environment. But for the time being, I think the point is also that investors are not exuberant about their views in US markets, but at the same time, you're still seeing some investors.
What would exuberant look like? What would do we need to go up another 10%, another 20%? Kind of, if the earnings don't match, at the moment, the multiples on tech look okay.
Yeah, that's exactly it. I think you're still seeing some very strong earnings. And, that makes the valuation not excessive and make the argument for remaining invested quite strong. But elsewhere, outside these large caps, then the picture is a little bit different in the US.
Okay.
So this is where, to me, it's important to be a little bit more cautious, while at the same time, being very adamant about what are the inputs we're having from the macro data. I think the labor market shift that we're seeing right now and the data we're getting from the labor market are quite important, because they're telling us quite a lot about what's been happening in the US, potentially outside the large tech companies.
Yes. And what bearing does that have on the Fed? What bearing should it have on the conversations next week then, Maria? Do you think that this changes the narrative substantially around jobs, or it tells us more about what we already knew, that the labour market is weakening? I mean, what's the story that matters, do you think, to markets?
Well, I think for the Fed, it's still very much a balancing act. They are observing the labor market weakening, but at the same time, they have a very keen eye on inflation. So the data coming out later this week will be very important for markets, and I think there will be quite a lot of eyes focused on that, because there is still a risk that, despite tariffs are not seen as a long-term inflationary force, the potential impact of pass-through of costs to the consumer might be there. And although it's normally a one-step increase in prices, it's not all going to come at the same time. So you might be seeing that diluted over several CPI readings. And that's something that the Fed is still worried about. And, Jerome Powell said it quite clearly in one of his last statements. And so the balancing act, that data dependency is still going to be there. But obviously now we know that the potential is more for interest rate cuts coming up, and the market is pricing this in.
So is there a CPI print that gives the Fed cover for 50? Is there a CPI print that derails a cut altogether? And we were discussing this before. Would 50 basis points completely panic the market?
Well, I think, we've heard from the Fed before that, and especially some people within the Fed, that they will favor bigger cuts and bigger increases over time, because that will be more impactful for markets and for the real economy as well. While, 25 bips, you need to really go on a trend in order to see some effect from that. So I think, it remains very much on the table towards the rest of the year and beginning of next year, what the path will be. Certainly what we're seeing in markets has been very, very interesting, because we have seen a very strong steepening in the US curve and also elsewhere. And that trend to us is appealing, because it makes the long end of the curve even more attractive in this phase, because the shorter end is already starting to price in some of those cuts, while the longer end has remained pretty much unchanged for quite a few months now.
Quick question on Europe. Just seen Ursula von der Leyen doing the rounds in the European Parliament. She's about to speak, giving a State of Union for Europe. What is the investment case in Europe right now? I look at what is happening in the United States. The tech story is driving everything. The defence story has been a big theme of the landscape. The banks have been a big theme of the landscape. We've just seen an incursion into Poland from Russia overnight. What is the... Is there a sort of geopolitical narrative that I can take and turn into an investment case in Europe right now? Is it the defence story? Is that what I should be watching? Where else should I be looking? Novo's down pretty hard this morning. Is that an opportunity? Where do I look in Europe to get some excitement?
Well, I think European stocks have been very interesting this year, and we started the year with a significant overweight position in European stocks. on the basis of attractive valuation and potential for re-rating. One of the areas that we really liked has been the banking sector in Europe, and we believe that there continue to be some opportunities there. Yes, valuations are not as attractive as they were, and even if you look on a longer time period relative to its own sector, European banks might not look as cheap, but they are still cheap in an absolute basis, and so we do continue to see that sector as attractive. In other areas, I think there is a little bit more difficulty of finding value, although healthcare is definitely flagging, but I think you have to go down single name opportunities there.
Great to see you. Thanks for stopping by to see us, Maria Manucci, multi-asset fund manager at M&G Investment Management. We'll come back and show you what is happening in Strasbourg in just a moment. We're about to hear from Ursula von der Leyen. The President of the European Parliament is currently giving an introduction as we watch what is happening there. We also watch what is happening with the markets. This is what the Core 6 looks like this morning. A couple of standout stories in Europe this morning, one of which is Novo Nordisk, which now looks like it is positive on the news, but tech is the standout story, as you can see. ASML up nicely, Schneider up on the data center story as well, but a lot of green out there this morning. Let's talk about some of the individual names that we are watching. Retail front and center as well. Louise Moon has the details.
Exactly, retail front and centre. First up, we're looking at Inditex, the owner of Zara. Shares up over 6%, almost 7% into the green. That's after their first half earnings. But the key focus really is a pickup in sales for the third quarter. So pointing at a bit of resilience in the retail sector for Inditex there. Next up, we're looking at tech. A host of companies. We're looking at SAP, ST Micro, Infineon. That's after Oracle's blowout outlook that's fueling AI hopes. A surprise Wall Street had an impact in Asia and really playing through into Europe now, all into the green this morning. So good news on that front for them this morning. Next up, we're looking at Vistry Group, the UK-listed home builder. So their shares are falling after their first half, failed to impress, down almost 3% into the red this morning. That's after their first half update this morning. Next up, ABF, also listed in the UK, owner of Primark, also got a huge sugar unit that they've really been struggling with, and their shares are down almost 10%. That's after they say they see a bit of profitability uptick for their sugar unit, but things are still very negative, taking about a £200 million hit on a closure of a factory to do with their sugar unit as well. And then finally, we're looking at Pug. They are, see how they're looking, they're down over 8% into the red. That's after they're seeing revenue growth at the bottom end of expectations, so failing to impress the market at open.
Louise, thank you. Louise Moon from our equities team. We are keeping a close eye on politics. Ursula von der Leyen, the President of the European Commission, has started speaking at the European Parliament in Strasbourg. Let us take a listen to what she has to say.
Because our union is fundamentally a peace project. But the truth is that the world of today is unforgiving. And we cannot varnish over the difficulties that Europeans feel every day. They can feel the ground shift beneath them. They can feel things getting harder, just as they are working harder. They can feel the impact of the global crisis, of the higher cost of living. They feel the speed of change affecting their lives and their careers. And they worry about the endless spiral of events they see on the news, from the devastating scenes in Gaza to the relentless Russian barrage on Ukraine. We simply cannot wait for this storm to pass. This summer showed us that there is simply no room or no time for nostalgia. Battle lines for a new world order based on power are being drawn right now. So yes, Europe must fight for its place in the world, in which many major powers are either ambivalent or openly hostile to Europe, a world of imperial ambitions and imperial wars, a world in which dependencies are ruthlessly weaponized. And it is for all these reasons that a new Europe must emerge. And honourable members, this must be Europe's independence moment. I believe this is our union's mission, to be able to take care of our own defense and security, to take control over the technologies and energies that will fuel our own economies, to decide what kind of society and democracy we want to live in, to be open to the world and choose partnerships with allies, old and new. Ultimately, it is about having the freedom and the power to determine our own destiny. And we know we can do it, because together we have shown what is possible when we have the same ambition, unity and urgency. I must say I've lost count of the number of times that I was told that Europe could not do this and could not do that, in the pandemic, on the recovery plan, on defense, on supporting Ukraine, on energy security, and the list goes on. Every time Europe stood united and made it. And we need to do the same now. So, honourable members, the central question for us today is a simple one. Does Europe have the stomach to fight? Do we have the unity and the sense of urgency, the political will and the political skill to compromise? Or do we just want to fight between ourselves, be paralyzed by our divisions? That is what all of us have to answer. Every member state, every member of this House, every commissioner, all of us. And in my eyes, the choice is very clear. So my pitch today is a pitch for unity. Unity between member states. Unity between European institutions. Unity between the pro-European democratic forces of this House. I'm here, and the entire college is here, ready to make this happen with you, ready to strengthen the pro-European democratic majority, because it is the only one that can deliver for Europe. Honourable members, freedom and independence are what the people of Ukraine are fighting for every day. People like Sasha and his grandmother. Sasha was only 11 years old when the Russians attacked. He and his mother sought refuge in a basement in their town in Mariupol. One morning they went out to get some food, and that's when all hell broke loose. A rain of Russian bombs on a civilian neighborhood. All became dark and Sasha felt his face burning. He had shrapnel just below his eyes. In a matter of days, Russian soldiers stormed the city. They took Sasha and his mom to what the Russians called a filtration camp. Then Sasha was taken away. They told him he didn't need his mom. He would go to Russia and have another Russian mother, a Russian passport, a Russian name. They sent him to occupy Donetsk. But Sasha did not give up. On a stop on the way, he asked to borrow a stranger's phone. And he called his grandma, Ludmila, who was living in free Ukraine. Baba, just take me home. She didn't hesitate a second. Her friends told her she was crazy to go, but Ludmila moved mountains to get to him. And with the help of the Ukrainian government, she traveled to Poland, to Lithuania, to Latvia, Russia, and finally into occupied Ukraine. She got Sasha back, and through the same long journey brought him to safety. But their hearts are still broken. Every single day they keep fighting to find Sasha's mom, stuck somewhere by Russia's brutal war. I would like to thank Sasha and Ludmila for allowing me to share their story. I'm honored that
we're listening to Ursula von der Leyen, the President of the European Commission, talking in Strasbourg, addressing the European Parliament with her State of the Union address, talking about a new world order based on power and saying that in that context, Europe must fight. Those words perhaps designed to land eastwards, perhaps designed to land westwards, talking about dependencies in this new order being ruthlessly weaponized. So certainly a host of sound bites in the early part of that address by Ursula von der Leyen, and saying the key question: does Europe have the strength to fight? So there's the geopolitics, Guy. There's plenty of it this morning.
Let's turn to some of the corporate news we are watching so carefully as well. Are now gaining this after the Danish pharma giant said it will cut 11% of its workforce by the end of next year. That's around 9,000 jobs. A lot of those will be going in Denmark. We've got a new CEO certainly making a mark on this company. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence, joining us around the table. Sam, good morning. New CEO, new plan. Is this what we should have expected? Is this enough from the new CEO at Novo to right the ship?
Morning, guys. So just the first thing to say is this is the first time that I've ever seen Novo Nordisk do anything like this in terms of job cuts. It's always been the opposite. Breakneck growth, trying to hire, hitting labor laws to the limits, right? So what we've ended up with is, if you look at the press release, there's a few things in there that are quite interesting. They want to spend more money on R&D and innovation, etc., and commercializing their drugs in a dynamic market. I think it's telling us that they're having some revisiting of what it is that they need to be doing and the cash they need to spend at the time where growth has slowed for them. They were, I think, budgeted or staffed for a massive 10, 20, 30% growth per year in an obesity market, which is still there, but not at the same pace. And the dynamics against them have been quite tough. The compounding is something that they've not been able to stop in the US. The FDA is not doing what it needs to do. It's illegal at the end of the day. And they've also got a very strong competitor in Eli Lilly with a drug that's arguably better. So we're here. What was interesting in it, though, I found also, is the comment about we need to move to a performance-based culture. Well, what was it before? I thought most companies work on a performance-based culture. I think that's a result of having needed to grow so fast. You didn't need to think about performance because the growth was just coming in.
So is this enough then to turn the tide? They're down 61% in the past 12 months. Is it enough to take on the competition?
Yeah, but if you think about what he's trying to do is trying to right the ship in terms of investing more. That would take time to come through. So there probably will be some value to gain by redirecting some of the saved cash to the way they're commercializing the drugs, more direct to consumer. That's a very different model where you had one buyer essentially dealing with you. You now have a system where you need to fulfill a very different channel. So that might be more costly, but also R&D. The R&D part will take time to come through.
Sam, going to leave it there. Thank you very much indeed for the analysis and the updates. Sam Fazeli working his way through carefully what is being said this morning, Director of Research for Global Industries and Senior Pharmaceutical Analyst for Bloomberg Intelligence. I want to take you back to the live shot that is in Strasbourg right now. As you can see, you have an ongoing speech by Ursula von der Leyen. Has she just finished? It looks like there's a standing ovation currently for that speech within the Parliament. We'll continue our analysis of what has been said. You are watching the opening trade. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session, and we've got an avalanche of news for you this morning, whether it's on the geopolitics, whether it's on tech, whether it's on the single stock stories. You've got the Inditex outlook driving gains for the Spanish IBEX this morning. It is green across the screen. Those Oracle results really powering tech. And really, it looks like we're looking through what has happened in Poland when it comes to geopolitics, Guy. Absolutely. It does seem as if that tech narrative, plus a few corporate pieces of information out of Europe this morning, are the main narrative. You can certainly see that the internals look quite positive. 423 stocks higher, lower 155. Volumes a little on the light side. There's a bunch of 52-week highs out there that are quite interesting as well. Airbus tracking at a 52-week high this morning. I think that's interesting. The stock is up by 1.2%. That's a positive kind of story, narrative for the global economy, European economy, the French economy, the European economy, I should probably say more broadly. IAG hit a 52-week high. Now just looks like it's rolling off that this morning, but is it a 52-week high? Has hit a 52-week high this morning. And the banking sector seems to be on the front foot once again in Europe, which is also, I think, quite positive as well. Santander up by 0.3%, tracking to a 52-week high, Anna.
Let's talk about some of the other stories that we need to get up to date on this morning and keep under our radar. President Emmanuel Macron has named longtime ally Sébastien Lecornu as France's new prime minister. Lecornu, a former defense minister in a previous cabinet, is set to become the country's 5th prime minister in just 2 years. The US President Donald Trump has publicly criticized Israel's decision to launch an attack on Hamas in Qatar. Trump said the strike, quote, does not advance Israel or America's goals. Qatar says it reserves the right to respond to the attack. And staying with response from the US President, Bloomberg has learned that President Trump told European officials he's willing to impose new tariffs on India and on China. This in a bid to push Vladimir Putin to the negotiating table on Ukraine. Trump added he'd only introduce the tariffs if EU member states do so as well. And that is interesting. We're still listening to Ursula von der Leyen speaking in Strasbourg with her State of the Union address, Lizzie, and she's talking about tariffs, but she's talking about further tariffs, another package on Russia. They're working on that behind the scenes, it seems, but a little bit less mentioned so far, at least, of the relationships with China and India.
Indeed, she says Europe must fight. She's called for a new Europe. She's called for this to be Europe's independence moment, Anna. A real standout speech, this from VDL. It is her first State of the Union speech of her second mandate. She's saying that Europe must take care of its own defence and security. Oliver Crook has been listening for us in Berlin. Let's go to him now. Ollie, what have you taken away as the key lines from this speech so far?
Actual news value and kind of incremental news that we've gotten from Ursula von der Leyen over the last few minutes. She's now confirmed that it was actually more than 10 drones that crossed into Polish airspace. This is something that's a late addition to the speech, obviously, because this only happened fairly recently. She's also announced a new program to help build out the Ukrainian military. This is probably in part the fruit of the conversations we had the other week in the Coalition of the Willing talks in Paris. But she also said that there will not be any touching of the Russian frozen assets. So this is a speech that really has begun and sort of framing the full conversation. But in terms of the first sort of policy issue, the first policy item that von der Leyen is front-loading is this question of defense. So in order to sort of draw the broader picture, and this is actually, I think, the key here, the most powerful lines that we got from Ursula von der Leyen, she said that the battle lines for a new world order based on power are being drawn right now. So yes, Europe must fight for its place in the world in which many powers are either ambivalent or openly hostile to Europe, and that a new Europe must be born, and that the question in this sort of new world is Europe, does it have the power to remain relevant? And the question she posed to lawmakers in Strasbourg today is, do you have the stomach to fight? Do we have the unity to support the sense of urgency? And do we have the political will, critically, the political skill to compromise, or will we just fight between ourselves? And that is, of course, the critical question. Take no other example as France, that can't even get its own government in order. Are they willing to relinquish some degree of sovereignty in order to contribute more to the big European project in order to keep the bloc relevant? That is the difficult line that von der Leyen has to walk, not just today, but for the rest of her commission, which is trying to bring a much more federated Europe into being in order to compete on the global stage.
Yes, she chose to start her speech, as no doubt she planned to do, with these big questions around security, around defence, Ollie, which was interesting. And then she did get to Poland, and she got a standing ovation from the room when she said that Europe stands in full solidarity with Poland. Tell us a little bit more about these developments overnight and how they shape our thinking around what's taking place in Ukraine right now.
Yeah, so Anna, the sort of most relevant and most recent piece of information we got from Ursula von der Leyen herself, as I just mentioned, more than 10 drones, apparently, Iranian-made drones, at least those models, cross into Polish territory. The reason that it's significant, Anna, we've had these sorts of incursions in the past. Generally, they were considered to be accidental. You'll remember in the early stages of the war, a missile hit that overshot in Ukraine, and there were some really uncomfortable, very worrying conversations about Article 5, whether or not this was triggered. Fast forward now a couple of years, the reason this is relevant is because it is the first time NATO forces have engaged with Russian military hardware, shooting this out of the skies over the Polish airspace. Polish airspace had closed for a prolonged period of time. As a consequence of this, the question is, what will the European response be? What will the American response be? What will Donald Trump's response be? We've heard from a few of the more hawkish pro-Ukrainian lawmakers in the United States saying that this is just basically a provocation, Putin trying to test NATO. That will have to wait for the appraisal of the President of the United States. Is this a test of NATO? Is this a mistake? The question is sort of irrelevant, because at this point it is clear that Putin is much more emboldened than he was even a few weeks ago.
Oliver, great stuff. Thank you very much indeed for the update and for continuing to listen to the speech and taking the key points away from it. Oliver Crook joining us from Berlin. Ali Redison, Associate Director at SEC Newgate and former advisor to the UK Business and Trade Secretary, joining us around the table this morning. Good morning.
Morning.
Ursula von der Leyen posing lots of questions. Does Europe have any answers?
I think there's a reason that she's stressing the foreign policy consideration, and part of that is because in terms of what she wants the EU to be able to do to respond, there are some sovereignty issues. There are a lot of member states that do not want to give some of that power away, whether it comes to sort of a joint sort of defence lending, sort of sovereign debt being sort of pooled and collectivized. And I think that her argument here is basically saying, this is on our borders, we need to deal with it, but you need to actually work with us member states, not just members of European Parliament. Now, on the answers part, it's interesting that she will focus on foreign policy, because I think if you look at the things that she'd committed to doing, even in the sort of hangover from her last term, domestically, integrating the single market, private sort of capital markets union, those things are going very slowly.
They are going very slowly. What has happened in Poland overnight? As we start to see maybe events pushing into European sovereign space, does that solve some of the problems she faces, though? There's nothing greater to unify than a foreign adversary. So far, Putin has not provided enough of an adversarial element to provide unity within Europe. But do you think we're getting to that point? Like, if we see more and more incursions, is that the catalyst for cohesion?
Yeah, and I think that, even though they're announcing more sort of sanctions package, we've had some Hungarian opposition, but I think her argument is really to Germany, for example, which is saying, well, we're going to stop short maybe of sort of giving you all the money that you want to do some of this joint defense sort of lending program. I do think it definitely helps make the case, and also in terms of trying to get the Americans on side, because one of the problems for Europe has been that, President Trump really wants to sort of get to this sort of peace arrangement, and is starting to see Europe as a sort of an obstacle to that. I think the more incursions you have like this, the more you can justify, if you're Ursula von der Leyen, why you need to carry on sort of doing this defense pooling and also have American support.
Ali, let me ask you about something that's come onto our news agenda because of some of our reporting, and this is the suggestion that President Trump has told European leaders that, yes, he will impose some kind of secondary sanction on China and India aimed at those who buy Russian energy, and in the view of many in the Republican Party in the United States, therefore, fuel what Putin is doing in Ukraine. Where does that idea go in Europe? Does it just sort of, does it come to anything? I mean, is there any willingness in Europe to widen the sanction conversation from not just Russia, but those that are buying energy from Russia?
Yeah, I think it's a huge challenge for the EU, because one of the things that the EU is trying to do right now is, A, kind of balance its relationship between Washington and Beijing. There was a report a year ago from Mario Draghi sort of saying we needed to take a tougher line with China. The EU's done some of that, for example, on sort of levies on solar panels. But really, I think the India question is a huge one, because they are trying to conclude a trade deal by the end of this year. That does not sit well with trying to take a tougher line on tariffs. And I think, you know, if you're a cynic, you're looking at that and saying definitely there's a lot of push from Republicans in Congress to encourage sort of secondary sanctions. But we also know that Trump has
that kind of package. I mean,
Correct.
Is there anything that can be done that has not been done yet?
I think that you could start looking at the secondary sanctions. I mean, there are some in terms of looking at how you engage with China and India. You could take a tougher line, I think, on China in particular, if you're Europe. You know, there's been there were a lot of calls to actually open sort of trade defense investigations against what China is doing. Those have not materialized. So that doesn't mean that you can't talk to China about investment, but I think the EU could be taking a tougher line on where it sees China dumping on its market, particularly in response to being effectively shut out by the US.
Ali, given your former role advising the UK Business and Trade Secretary, let me just look ahead to the UK hosting Donald Trump next week. I wonder how VDL will be looking upon that, and also what Keir Starmer should be angling for when he's already got this trade deal in the bag.
Yeah, I mean, it's interesting that the same issues that the EU is facing from the Trump administration the UK has, and that's namely around this kind of free speech argument, that basically the way in which your digital economy, your online space, the way you are regulating the internet. For the EU, it's the Digital Services Act. For the UK, it's the Online Safety Act. Trump and the Trump administration, particularly Vice President Vance, sees that as a sort of incursion against human rights, against free speech, and wants this sort of implementation of that by regulators both in Europe and the UK to sort of basically back down. And I think what Brussels will be watching very carefully is to see, does Keir Starmer make any concessions that actually the way in which our regulator, Ofcom, is implementing that, is that unfair to American companies, and does he try and pull them back?
Well, it's interesting that Starmer's just changed his Business and Trade Secretary to the former Tech Secretary, Peter Kyle. Do you think that that reflects on the shortcomings of the former Business Secretary, Johnny Reynolds? Do you think it signals a change on tech policy, trade policy, when it comes to the Starmer administration?
I think it's more of a reflection of the increasing intersection for the UK and for Europe and US trading partners of how much the US administration cares about the intersection of tech and trade policy. We have to remember that actually when this kind of framework deal outline was announced as an ambition between Starmer and Trump back in February, it was supposed to have technology at its heart, and I think this is just shoring up that position.
Ali, great to see you. Thanks for stopping by to see us. We always appreciate it. Ali Redison, Associate Director at SEC Newgate and former advisor, as we've just heard, to the UK Business and Trade Secretary. I want to take you back to what is happening in Strasbourg right now. As you can see, we had the ongoing speech of Ursula von der Leyen, talking tough but posing questions that Europe will find difficult to answer. She is currently talking about Poland. Let's take a listen to what she has to say.
But in the longer term, the only realistic peace plan is based on two states, living side by side in peace and security, with a secure Israel, a viable Palestinian Authority, and the scourge of Hamas removed. That is what Europe has always stood for, and it is time to come together and help make this happen. Honourable members, the transition is now hard. I want to speak about competitiveness. I know, but this is a State of the Union, and competitiveness is a central piece of our European Union. Europe's independence will depend on its ability to compete in today's turbulent times. We have everything it takes to thrive here in Europe, from our single market to our social market economy. But we know the economic and geopolitical headwinds are strong, and I just talked about it. And we have seen how dependency can be used against us. And this is why we will massively invest in digital and clean tech. With more to come in our Future Competitiveness Fund and a doubled horizon, our research and innovation program, and we are tackling the key bottlenecks identified by the Draghi report. That's from energy to capital, from investment to simplification. We have held strategic dialogues with key industries.
Ursula von der Leyen's State of the Union in Strasbourg. If you want to continue to monitor that, you can do on your Bloomberg terminal. We'll come back to the other news that we're monitoring, and there is plenty of it this morning. That will be next. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I am never doing that again.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Welcome back to the opening trade. 47 minutes into a session that tells an interesting story around what the market is really focused on and what it isn't. But for the European picture, for the main markets, the biggest markets around Europe, this is a story of positivity. The Oracle numbers overnight pushed tech stocks higher. That continues to be a theme here that we're seeing in Europe. Also, retail doing really well. The Inditex numbers pushing the market higher in Spain also. So we see strength, certainly, in many of the larger markets around Europe. That's not the case for Polish assets, though. We see Polish energy names and other companies listed in Poland really under pressure today, and that's very nicely represented by the red on this map to the right-hand side of Europe, as you can see there. We've also heard from the Polish president, and it's interesting to think about the Polish president saying things that you wouldn't be surprised to hear from the Polish Prime Minister, and remember, they come from different political traditions. So here we are hearing from the Polish president, Nawrocki, talking about how Poland will have full information within 48 hours about what has happened overnight. This incursion of Russian drones into Polish territory. Says the drone attack is unprecedented in NATO history, and Poland discussed the possibility of NATO Article 4. And so as a result of that, we wait to hear what the United States has to say about what has happened in Poland overnight.
So we await the latest on the geopolitical situation in Poland. We also monitored the geopolitical situation in the Middle East. Israel conducting an unprecedented strike against senior Hamas officials in the Qatari capital, Doha. Now, it's a move that's widely seen as escalating an already tense standoff between the country and Arab nations over the war in Gaza. So we can get more with Jomana Basechi now, Horizon's Middle East and Africa anchor out of Dubai. Jomana, welcome back. Is Donald Trump lost control of Benjamin Netanyahu here? Is Turkey next on Netanyahu's list?
Well, I think you're referring to the fact that another red line in the region has been crossed. And the first red line that we spoke of a couple of weeks ago was those very pointed statements put out by the UAE Ministry of Foreign Affairs stating that the potential annexation of West Bank would be deemed a red line. This takes it one step further, and you only have to look at the reaction that we got out of the Qatari Prime Minister yesterday, visibly angry, calling this an act of state terror, a violation of international law, of sovereignty, and going one step further and saying that it's also a violation of moral standards as well, because there is an implicit diplomatic understanding that you don't go after negotiating teams and you don't go after the host countries that are involved in these mediation attempts. So very strong response out of Qatar. However, they did say that they are inclined to continue with their diplomatic efforts, but have also reached out to the U.S. to ensure that an attack like this doesn't happen again. And that is key here, because Israel were targeting key Hamas negotiators. They were unsuccessful in their attempt to kill Khalil al-Hayya, who is the chief Hamas negotiator. What stops them from attempting this once again? And indeed, this morning, the Israel Defense Minister, Israel Katz, also said that there is nowhere to hide for their enemies in Hamas. Anyone who was directly or indirectly involved with October 7 has become a target. So this is a time of extreme alert for countries in the region, questions about what this all means for a potential ceasefire breakthrough. But I think it's fair to say that this has set back the diplomatic efforts substantially. And we're waiting to hear a full statement out of the U.S. later this afternoon. President Trump said that he wasn't thrilled with what happened, but at the same time, he's not against the goal, the ultimate goal of eliminating Hamas. But yet, stronger statement from the U.S. and perhaps what the GCC countries would like to hear is something more to the effect that U.S. security guarantees will still hold in case something like this pops up again.
It's interesting, you think back to the recent tour of the US president to the GCC and the impact that that had. Jomana, thank you very much indeed. Horizon's Middle East and Africa anchor Jomana Basechi joining us on the latest out of the Gulf. Let's turn our attention to European politics. And the French President Emmanuel Macron has named longtime ally Sébastien Lecornu as the country's new Prime Minister. Lecornu will become the country's 5th Prime Minister in just 2 years and will be tasked, of course, with steering a budget through a divided parliament. Will he succeed? What happens next if he doesn't? Bloomberg's Caroline Conan is in Paris with the latest. The former Defence Minister, longtime ally. We've got big protests coming up in Paris today. What has been the reaction thus far to his nomination?
He's one of the closest allies to Emmanuel Macron. In fact, he's been in every single government since Macron's first election in 2017. And in fact, Macron wanted to name him Prime Minister already back in December to succeed Michel Barnier until François Bayrou convinced him to choose him instead. Now, of course, this may seem like a provocation for the opposition parties. The socialists were quick to react last night, saying that none of their lawmakers will join this government. One socialist, Philippe Brun, even saying this was a slap in the face for the parliament and for voters. Of course, course, the Republicans, however, are pretty happy with that choice. We'll see how Le Cornu manages to pass a budget. Of course, he will still face a fragmented parliament, but he's considered a very good listener and negotiator. He's even had dinner with Marine Le Pen and Jordan Bardella, reportedly back in spring, even though that doesn't mean that Marine Le Pen will necessarily support him. She's still calling for new snap elections. Today, of course, a first big challenge for Le Cornu. There are some kind of disorganized protests planned across the country, perhaps some acts of sabotage, some roads already blocked in some regions around Lyon, Montpellier, around Normandy. Nothing too spectacular at the moment, but of course the situation may evolve in the afternoon with some radical left groups taking the streets. And of course then the next challenge for Sébastien Le Cornu will be a more structured strike next week, next Thursday on September 18, and then he'll have to pass a budget before the end of the year.
Okay, Caroline, we thank you so much. Out of Paris, Bloomberg's Caroline Gonan. As we look at the CAC 40, up to a flying start this morning, up about 0.8%. But as we look to what else is on the agenda for today, at 12:45 p.m. we hear from the S&P's Martin Schlegel. We're going to hear at 1:30 p.m. From the US's latest data. That's the US PPI numbers. And then 6 p.m. we get that US 10-year note auction. But I know that someone is very excited about this inflation data, and that is Bloomberg's Valerie Teitel. Val, how much does the PPI matter? It's unusual that it's coming before CPI. Really, though, could it change anything for the Fed?
Well, last time around, remember, PPI came in exceptionally hot, hotter than CPI has done in the last few months. And I think there is a narrative starting to build that PPI inflation could in some way creep into consumer price inflation via goods inflation. So we might get another reading that would boost that kind of argument today. And that's why some have said, I know Mark Cudmore was on here saying that he thinks all this pricing of a 50 basis point rate cut next week by the Federal Reserve is a bit exuberant, given we're likely to get some hot data prints today, starting with PPI, and then again CPI tomorrow, likely to show that core inflation is at 3.1% for a second month in a row. Above a 3% handle is something perhaps maybe the Fed isn't comfortable with. But remember, the Fed looks at forward-looking data. It's not just spot data they take into account. They also think about what's going to happen moving forward. And Jerome Powell has called this tariff-induced goods inflation just a blip in the road of the broader deflation trend.
Do the Oracle numbers tell me that I need a rate cut from the Federal Reserve?
Look, they did stun Wall Street by a huge amount. Oracle up 28% after hours. But I think it does show, again, that what the U.S. equity market is telling us could be very different from what's going on the ground of the U.S. economy. We know the AI trade has not been hampered by higher rates, and we're seeing more and more evidence of that, and with the S&P notching yet another record high yesterday ahead of this inflation numbers.
Okay, Val, we thank you so much. As we look ahead to those PPI numbers out later on today, Valerie Teitel. Well, we are continuing to monitor this speech from Ursula von der Leyen, the European Commission President, in Strasbourg. She says that they need a trade instrument to succeed the steel safeguards. That speech continuing as she says that they need to have an independent Europe in the face of the defence and security challenges facing the continent right now. That's it for the opening trade. The Pulse with Francine Lacroix is coming up next. Stay with us. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Russian escalation. Poland shoots down drones that crossed into its territory during another massive Russian airstrike on neighboring Ukraine, calling it an act of aggression. President Trump says he's unhappy with Israel after it carried out airstrikes on Hamas leaders in the Qatari capital Doha. Plus, AI optimism, Oracle stuns Wall Street with an aggressive outlook for cloud revenues. Now, first thing is first, let's check on the markets. Of course, geopolitics playing at the margins into a little bit of this, but actually U.S. stocks set to notch fresh highs. Again, traders bet that actually a pair of inflation reports will not derail expectations on what the Fed will do this month. So the picture is S&P futures gaining 0.3%, always a U.S. 10-year yield. The first thing we look at when we wake up in the morning, if you're in the markets, 407.98, and then gold 3,644. Let's also take a look at the European markets map. Now, there is a lot of defense ministers actually here in the UK. We look at defense stocks and then the DAX and the CAC 40 France with a new prime minister getting some 0.8%. Oracle shares surging pre-market. This is after the company posted a major increase in bookings and gave an aggressive outlook for its cloud infrastructure business. And you can see pre-market gaining almost 30%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. It's been a pretty dramatic 24 hours in global geopolitics. Israel's war against Hamas comes to the Gulf. A surprise attack in the Qatari capital draws widespread condemnation. Here in Europe, a major escalation in Russia's war with Ukraine as Poland shoots down Russian drones in its territory as defense ministers meet here in London. Plus, France also has a new prime minister who faces the daunting task of pushing through unpopular budget reforms. We'll have, of course, expert coverage from reporters and analysts in Europe and the Middle East on the ground. And then in the U.S., a judge rules that the Fed's Lisa Cook cannot be fired for now.
all of that global stock rallying powering ahead. So a lot to discuss with Mark Haefele, Chief Investment Officer at UBS Global Wealth Management. Mark, as always, thank you so much for giving us a little bit of your busy schedule. It's just a lot. It's a lot of news to process, right? And so if you're on a trading floor or if you're an investor, Oracle getting 30%, does that translate into Fed expectations?
Well, I think that, one particular company, of course, doesn't. I think that the markets have kind of said how the Fed is going to go, and I don't think at this point they're going to contradict the market. So, we're expecting a cut, probably 2 this year and then more into next year.
Mark, geopolitics are on edge, right? So you wake up and you don't really know what you're going to read about at the moment, and we had 2 big pieces of news overnight. The markets seemingly ignore it. Is it right because they don't really know how to price it in, or does it show up in data at some point?
Well, we've talked about this many times over the years, and I think there is this issue of the market having really this inability to price in some of these geopolitical risks. But for us as investors, while the human tragedy is real, I think it's an exciting time as an investor because it plays to our strength, playing the whole chessboard across asset classes, because you do get these different moves now. It's not just an equity story.
So let's maybe start with the Fed rate cut. Mm-hmm. It's fully priced in. Is there any world where we have some kind of CPI number that actually derails it?
I don't think so at this point. I think that, the Fed with the dual mandate, looking at this labor market situation, they can do a cut and pay heed to that, and then maybe they do pause depending on what happens.
What are you expecting, 25 or 50?
We're expecting 25.
25 because and then they wait and see. Would it make more sense to go 50, go big, go bold, and then go home?
I don't think so.
How do you see the labor market, changing? And again, what does that mean for where you want to be invested in?
Well, I think that, there has been for a very long time these questions about how the labor market numbers are going to improve or not improve. But for us, we're more focused on tech. We have been and we remain that way, where these topics are probably less of an issue.
How do you, first of all, look at central bank independence? There was a judge, ruling on Lisa Cook. Again, the market at the moment is watching it, but also largely ignoring it.
Well, watching it, I think, makes sense. There's always been questions about how much can any agency move away from the political situation. But I think the Fed has been very well designed, given that it has a committee. And so that we don't think that that's an issue that is going to be topmost on investors' mind in a few months.
So, Mark, going back to tech, this is the big play probably supporting the U.S. economy almost on its own. Valuations, it's priced to perfection. So are valuations starting to get expensive, or can they go much higher?
Well, I think that we would expect that the growth of revenues and earnings is going to continue to power ahead. As we look through the stack of the investments, as we talk to our entrepreneurs who continue to find use cases for AI, see the savings, that gives us some confidence that there's some durability. Now, as we get into the fall and September can be a volatile month, can we get some more hiccups? Absolutely. But I think the longer-term trend remains intact.
We also see the Trump administration doing something, for example, with Intel, that 10%. There's, talk about revenue sharing. Is that noise, or does it matter to the bottom line?
Well, I think that how that all plays out, we still don't know. But I think if you take a step back and you say, what are the big problems that governments are trying to solve? And they tend to throw big money at big problems. And we tend to do well if we're kind of buying what the government's buying. That all feeds into the tech story, because the president has said he will do whatever it takes to make sure America wins in the AI race. And I think investors would ignore that at their peril.
Do you prefer U.S. stocks to the rest of the world?
I think that, we like the tech stack globally. So obviously a lot of that is in the United States. But China tech remains undervalued, and there's considerable investment in China going in that direction. And then selectively in Europe, there are ways of playing tech.
So how do you play, stocks in general in Europe, also given some of the political turmoil?
Yeah, for us, Europe is not, as a whole, is not an overweight. We're very selective in Europe. So maybe Swiss dividend stocks and then high cash flow companies where we feel they have quality that can kind of endure some of the headwinds that remain.
What do you worry about, Mark? When you look at, so for example, the Prime Minister in France, I mean, this goes back to fiscal, right? And it could go back basically to the debt issuance in certain countries, including the U.S. Is that a worry longer term? Like, do you push that back to 2027, or do you start taking action now?
Well, I think what we've done over, say, the past 5 years is leaned more towards equities and away from long-dated bonds because, to your point, over the longer term, a lot of these situations are unsustainable. But if you look at France, for example, right now, France doesn't have any problem paying its shorter-term debt. So to the extent that the politics really starts to drive interest rates higher, we would probably see that as an opportunity.
Opportunity to buy what?
Well, to buy short-term debt, say, versus other European nations.
Is there anything that actually you've changed your mind on in the last 5-6 months that you don't want to buy anymore?
Well, I think that, getting a little more cautious, maybe a little more selective on the tech because it has run up so much. I think that, we spend a lot of time debating kind of across asset classes what to do, in FX and commodities. And I think for now, given some of these geopolitical tensions, there just continues to be this central bank push towards gold. So that's something we continue to think about.
I mean, gold is I don't know whether it's expensive. It's certainly at record highs. Is it expensive yet?
I think that, we don't see tremendous upside from here, but, it comes in the context of as these events continue to unfold and as sanctions talk continues, there are investors who say, hey, with major currencies weaponized, what are the alternatives that I can go to?
But overall, you feel quite sanguine. I mean, you're pretty positive still about the markets.
Yeah, I think that, this core concern is, do we start to get people who are not getting the return on investment in the tech spend that they're doing? Or are investors really starting to question some of these massive CapEx infusions? But we haven't seen that yet.
So interesting. Mark, as always, thank you so much for joining us.
Thank
Mark
you.
Heffler, their Chief Investment Officer at UBS Global Wealth Management. Now, coming up, Russian drones breach Polish airspace. Israel targets Hamas in Qatar, and France has a new prime minister in waiting. It's a huge day for geopolitics, so we'll have the latest next on the ground. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
let's dive deeper into the major geopolitical stories dominating the agenda this morning. For the latest on the Middle East, we'll speak to our Joanna Berseche. We'll also have expert analysis on France's political crisis with EY's Femke Krummüller, and covering developments here in Europe is our Oliver Crook. European Commission President Ursula von der Leyen told lawmakers in Strasbourg, France, that, quote, Europe must fight to establish a place in a new global order that's become antagonistic to its values and approach to democracy. Well, her comments come after Poland shot down 10 Russian drones that violated airspace.
This must be Europe's independence moment. I believe this is our union's mission, to be able to take care of our own defense and security, to take control over the technologies and energies that will fuel our own economies, to decide what kind of society and democracy we want to live in.
Ollie, I mean, Poland shooting down drones that crossed into, territory from Russia is big. It's big news. Is this, an escalation, or is it a provocation?
Well, that's the big question, Francine, and how it's going to be interpreted by Europeans and Donald Trump alike will be sort of very relevant in figuring out what the correct response to this is going to be. We should say, Francine, that the significance of this, there have been missiles that have landed in Poland before and drones that have incurred into airspace. You'll remember, Francine, in the early days of the war in Ukraine, there was a missile that overshot Ukraine, landed in Poland, and there was a huge amount of anxiety around Europe and, the rest of the world saying, does this actually trigger Article 5? Is this actually the beginning of a full-scale war? That sort of calmed down quite a bit, but now go forward a couple of years later, now you have these sort of drones on a much higher scale going into Polish airspace, demanding that Polish airspace closes, that airports close, and what we heard from Ursula von der Leyen saying that more than 10 drones crossed over, and the reason that it's relevant, Francine, and why it's important and why it's different from every other time is this will mark the first time that there is direct engagement between NATO forces and Russian hardware. So the question is, what will the response be from Donald Trump? We have not heard from the administration yet. We've heard from a few lawmakers overnight from the United States, including Senator Dick Durbin, who says that this is basically the Russians trying to figure out whether or not NATO is going to be serious about whether or not it's going to sort of basically defend its eastern flank. We heard from another lawmaker in the United States saying that basically this is an act of war. I mean, regardless of whether or not by Putin this was a deliberate act or it's just relative indifference to kind of the threat of Article 5, this is a significant development for Russia, which has been upping its bombing campaign over the last couple of weeks to the highest level of any point in the war, and it will demand a response of some kind from the United States and from Europe.
Yeah, I mean, we know that, of course, President Tusk briefed the NATO Secretary General about the current situation. Do we know about any ongoing talks between them? Von der Leyen, the Commission President, also taking a pretty strong tone in the State of the Opening address.
Yeah, well, there was a cabinet meeting convened in Poland, and you can bet there's going to be meetings between defense ministers, foreign ministers all across Europe. There will be calls with Donald Trump. I mean, you'll also remember a sort of significant piece of context here. Donald Tusk, the prime minister, may not see as eye to eye with President Trump, but the newly elected president of Poland, was just at the Oval Office very recently, and he got an assurance from President Trump, who is basically Trump who is trying to sort of detract from the number of troops within Europe. Trump said that basically he's willing to commit more troops to Poland if they want them. Remember, there are about 10,000 U.S. troops stationed in Poland as a sort of deterrence factor as part of the sort of NATO architecture, and he said that he's willing to send more if the Poles would be in favor of that. So again, the key here is going to be how the United States responds. Does this now put more pressure on this initiative that we heard from overnight that Trump apparently wants the EU first to sanction China and India over their buying of Russian crude oil, and then the U.S. would follow? This will all sort of fold into the broader geopolitical discussions. We've got to say, Francine, over the last 48 hours, to say nothing of the last 2 weeks, where we see, Vladimir Putin being sort of invited out of the cold by Modi and Xi Jinping. It's a big sort of geopolitical calculus for the Europeans and the U.S. to make now.
Yeah, the Prime Minister Tusk, I need to correct myself. Prime Minister Tusk also, I think, speaking to reporters, saying that Poland shot down 3, possibly 4 drones. He says some drones came to Poland from Belarus. Ollie, thanks so much. Oliver Crook there with the very latest on the situation. Now to the Middle East and Israel's unprecedented attack against Hamas leaders in the Qatari capital, Doha. The strike has drawn rare public criticism from President Donald Trump and underscored the risk that the war in Gaza could get worse before it gets better. Well, the U.S. President Donald Trump said he learned of the attack too late to stop it.
I'm not thrilled about the whole situation. It's not a good situation. But I will say this, we want the hostages back, but we are not thrilled about the way that went down today.
So you were caught by surprise, sir?
I'm never surprised by anything, especially when it comes to the Middle East.
Let's bring in Jumana Brasecci in Dubai. Jumana, how did the attack unfold?
Yeah, well, President Trump says that he's not surprised by anything, especially when it comes to the Middle East. I will tell you, this was a major surprise for the region, particularly for Qatar. Yesterday, around 4 p.m. in the afternoon, smoke was seen rising from a residential neighborhood close to schools and embassies. Unclear what had happened, what the cause of the explosion was, but shortly afterwards, the IDF put out a statement saying that they had conducted a military strike targeting senior Hamas officials, senior negotiators. It was not till a couple of hours later that Hamas then put out a statement saying that 5 party members had been killed, but that the chief negotiators had actually been spared. So perhaps perceived to be an unsuccessful assassination attempt. Now, the response from the Qataris has been very angry. We heard from Sheikh Mohammed, the Prime Minister, late last night, and he did not mince his words. He likened this to an attack of a state terror. He said that it was a violation of their sovereignty, their airspace, also of moral standards, because it is unheard of for a nation to be attacked as both a host and a mediator for negotiations, in addition for a negotiating team to be attacked. Condemnation has come through from Arab states as well, yet to get a full statement from the U.S., but President Trump said he was not thrilled with what happened, though, and this is a quote, eliminating Hamas is a worthy goal in his eyes.
Jumana, Qatar, of course, has been working with the U.S. to broker a ceasefire between Israel and Gaza. So where does this leave the talks now?
Well, this is a huge diplomatic setback, and not least because from the Qataris' perspective, they want to be guaranteed that an attack like this will not happen again, particularly in light of it being actually unsuccessful. And so the spokesperson for the Ministry of Foreign Affairs, Dr. Majid Al-Ansari, he also put out a statement yesterday saying that they're engaging with the U.S. now to get guarantees that an attack, a repeated attack, will not happen again. But at the same time, you have to square that up against the comments coming through from the Israeli Defense Minister, Israel Katz, this morning, saying that Israel's security policy is clear. They will act against enemies everywhere. There is no place where they can hide. So real concern here about the diplomatic efforts and whether there actually can be a chance of a breakthrough on this ceasefire proposal that the U.S. had put forward to both sides in the last week. And by the way, just the irony of all of this is the Hamas negotiators were actually conducting a discussion vis-a-vis the U.S. ceasefire proposal when the attack took place. So unclear at this point whether there can be or will be a breakthrough, and indeed whether the key mediator, Qatar, has the momentum to continue.
Jumana, thanks so much. Jumana Brasecci there joining us from Dubai. Now, the French President Emmanuel Macron has also named longtime ally Sébastien Lecornu to be the country's new prime minister. Lecornu's minority government will need tacit support to pass a 2026 budget. Well, joining us now is Femke Kronmüller, EMEA leader in the geostrategic business group at EA Parthenon. Femke, as always, thank you for joining us. I mean, geostrategics feels like the main thing that we're covering today. First of all, how difficult will it be for Sébastien Lecornu? He starts today. It's his first day in office. There are mass protests to push through some of these budget reforms that have been very unpopular.
Yeah, morning, Francine. So, I think the bottom line is that ultimately nothing has changed in France. Lecornu is facing the exact same situation that his predecessors have faced. So same parliament, same tensions, same challenges. And so that leads to the conclusion that he will face the exact same difficulty finding majorities, let alone passing a budget or even, and we're not even talking about that, any type of a tiny bit more of ambitious reforms.
So what happens next?
So he will try and find majorities. The reason that how President Macron justifies that he has been appointed is that he is close to the existing coalitions between the center and the center right, but the socialists, etc., are already saying, and the RN, the far right, are saying that they're already not happy with this. So that's why I'm pointing to the fact that we're in the same situation as before. Majority is difficult to find, and then they will have to. The main challenge and the main focus will be passing a budget. To be clear, there is no government shutdown in France as we know it, as we can know it from other countries. So they can roll over last year's budget to next year's, but they will try and pass a budget, and that will be the focus over the next couple of months.
Famke, as you rightly put it, it's very clear, it seems very clear for the moment, certainly day one, that rival parties show little willingness for concessions. But if there's nothing, I mean, is it prime minister after prime minister, or will there be, elections called by President Macron? Could he even resign?
Well, that's a great question, Francine. So he could, at this stage, call for early legislative elections again. The challenge is, and I think everybody does see this in France right now, is that there is no expectation that this will yield a different result or any type of result that would solve the situation. So I think it's unlikely at this stage that he will again call early legislative elections. And then the other options, and some parties are calling for this, is for his resignation and early presidential elections. I feel like that's even less likely. So the expectation right now is that we would continue in the current situation until the next presidential elections, which are in 2027.
Famke, if we look at security in Europe in general, we just had a terrific briefing from our Oliver Crook on the fact that Poland shot down drones that crossed into its territory during a Russian airstrike on Ukraine. I mean, this feels like a big incursion of European airspace, probably one of the most serious violations since the war began. What do you think happens next? Is there a will to de-escalate, or could it be ramped up very quickly?
I do think, and like in the first time that this happened, as was mentioned at the very beginning of the war, it's in nobody's interest to further escalate. Of course, the Europeans need to clearly send the signal that they will defend their space, which is something that von der Leyen has already said this morning. I think just allow me to tie it back to France. It's a really good example of how problematic it is that France, as the biggest foreign policy power in the European Union and one of the biggest in Europe, is so preoccupied with the domestic situation. The president is weakened, and there's not really a government. So it just shows how problematic this is.
I mean, do we know if it was intentional or accidental? And is that really the deciding factor on what happens next?
I don't think at this stage we know, and even if security services at some stage will find out, it's not necessarily going to be made public, I believe. I think it will be a political decision how much this will get escalated or not. And again, it's in nobody's interest to escalate this significantly, I would think at this stage.
Famke, I mean, I know you're a great student of also U.S.-European relations. How does that change what Donald Trump will be doing towards Russia?
That is a very difficult question, Francine, because as we know, Donald Trump has been trying to work on a ceasefire from all different perspectives, sometimes to the big surprise of the Europeans. He came into his presidency promising that he would end the war in Ukraine. Clearly, that has proved much more difficult. I think some observers thought that he was going to lose patience a little earlier. He has not yet. I think there's many different ways that this can go, and I find it incredibly difficult to predict. The one thing that I will say, and that I think is important, is that even if there is a ceasefire in Ukraine, and we're obviously even far away from that, then that will not equal the end of the war. And I think that's just very important to keep in mind.
Famke, thanks so much. Famke Krumbüller there from the Geostrategic Business Group at EY Parthenon. Coming up, Klarna prepares to go public. We'll speak to one of the early investors in the Buy Now, Pay Later company. We'll be speaking to Matthias Blummann. That's next. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year.
Okay.
Right? Because it allows us to do more. Right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Russian escalation. Poland shoots down drones that crossed into its territory during another massive Russian airstrike on neighboring Ukraine, calling it an act of aggression. President Trump says he's unhappy with Israel after it carried out airstrikes on Hamas leaders in the Qatari capital, Doha. Plus, AI optimism. Oracle skyrockets pre-market as it stuns Wall Street with an aggressive outlook for cloud revenues. So also looking at Novo Nordisk shares gaining this morning after the Danish pharma giant said it will cut 11% of its global workforce by the end of next year. The company will shed 9,000 jobs and also make its third cut of the year in its profit forecast. The Ozempic and Wegovy manufacturer is fighting to recover ground lost in the obesity drug market to rival Eli Lilly. So back to some of our top stories, and Oracle shares have surged pre-market after the company posted a major increase in bookings and gave an aggressive outlook for its cloud infrastructure business. Known for its database software, the company is on track to add about $190 billion to its market value if its stock gains continue in today's session. Well, for more, let's bring in our global tech editor, Peter Elstrom. Peter, I mean, we woke up and then we looked pre-market like 31 minutes ago, and it was up 30%. I mean, 30% is massive for Oracle.
We did not expect this news to be coming out of Oracle this quarter. Yeah, this morning we're looking at gains that could be as much as 30%. They could gain, if the gains hold at this point during the market trading, could be $200 billion in additional market cap. Larry Ellison is now challenging Elon Musk as perhaps the richest person in the world. And as you say, this is for a database company, a company that we think of as a database company that really hasn't been that sexy over the past few years. But what you're seeing really is they are really capitalizing on the AI boom and this incredible investment in AI infrastructure in particular. They have what the equivalent of their bookings. They talked about $455 billion in bookings at the end of the quarter. That's 4x what it had been just a year before. They're benefiting tremendously from these build-outs, particularly OpenAI is one of their key partners. OpenAI is talking about spending trillions of dollars on infrastructure around the world, $500 billion in the U.S. So they're really capitalizing on that, and it looks like they're going to be benefiting financially for a few years to come.
So, Peter, again, I mean, it sometimes, it blows hot and cold on whether AI will go as fast as we think. And then you have something like Oracle, talking about the cloud business, and you think maybe it's even faster than certainly Wall Street priced in. Where are we on like AI adoption?
Well, the companies that are competing for those AI customers are spending very, very aggressively now. So OpenAI, Google is certainly in that camp. You're seeing many others trying to capitalize Meta is spending all this money on AI salaries in particular. So those companies are making the investments, and Oracle is one of the big beneficiaries of those investments. It's partnering with OpenAI. It also partners with TikTok and some of the others on the infrastructure that you need to be able to run these services. We still need to see whether demand is on the other end of these trillions of dollars investments. Our customers, our individuals and corporations, are they going to pay that money to be able to justify these kinds of investments? That we don't know yet.
Peter, are we excited about the new Apple? Like iPhone, it's tiny, right? It's like 5.6 millimeters.
You tell me.
I mean, look, as a lady, I have small handbags. Yes, I'm quite excited, but I don't know if it's a game changer for them.
It's their thinnest, it's their lightest. It looks very different. So if you want to see something different, Apple's been criticized for making kind of incremental improvements with the iPhones in recent years. Now we're at the iPhone 17, and you get this Air iPhone. It does look quite different. There are some compromises. The battery life is a little bit shorter. Apple says it's going to last a complete day. We still need to see whether that's in fact the case. Also, there's only one camera on the back of it. It's not quite as powerful in that sense as what we've seen in the past. Now, on the other hand, the iPhone 17 Pro and the iPhone 17 have also made some significant improvements. So Apple is hoping that this is going to be the year that they persuade consumers like you to actually spend the money and buy a new iPhone.
I'm not sure about the camera thing. I'm not sure. I need like full HD.
They have a new selfie mode. Apparently, it's a much easier selfie mode.
Okay,
so you can
we're going to try it, Peter. That's going to be our 2025 thing. Peter Elstrom, our executive editor for Global Technology. Now let's turn to Klarna's market debut with shares in the buy now, pay later company to start trading in New York later today. The Swedish company priced its IPO at $40 a share for an implied market value of just over $15 billion. Well, joining us now, Matthias Lundman, founder and managing partner of venture capital firm Moonfire Ventures. Matthias invested in Klarna in the firm's early growth phase. Matthias, thank you so much for joining us. I mean, this is exciting for you. Congratulations, because you spotted a jewel. A lot of people have been trying to catch up with Klarna, actually. I mean, the payment system, it's unthinkable to think that this is a fairly new company and that we didn't have that option a couple of years ago.
I mean, look, it's a huge moment. And, congratulations to Klarna and the team who's built it up, the founders, these resilient, conviction-driven, super tenacious that are now bringing their company to market. And, they've built a parallel payment rails, ultimately. And if you compare it then to sort of Visa and MasterCard, who are, Visa 660 billion, and you have MasterCard smaller in size, but they have built that alternative for e-commerce, and they did it 20 years ago, and at that time we have to, like you said, think back. At that moment, people were still worried about paying for things online. So getting the product first and then paying for it later was actually a super great innovation to build trust and build reputation within the industry.
Matthias, I mean, I guess there is a lot of soul searching in Europe right now. Yeah. What do you think does it mean for the European markets, given they decided to list in the U.S.?
For me, this is a moment again for Klarna, thinking about how they can really take advantage of the opportunity in front of them. They're building out, like they're in early innings really in the U.S., and so being in the U.S., IPOing in the U.S. makes a lot of sense for the brand recognition, reputation, and then they can benefit from what is a much, much larger stock market, larger economy, and so allow them to raise more capital in the future and so on. So to me, it's great news, and we should just really celebrate that we have been able to achieve that. And to be honest, there's a whole bunch of other companies that are on its way. We have Revolut, we have Monzo, we have others. So there's a lot to be proud of in Europe in terms of what we've done in the fintech space. Let's not forget also Adyen, and I know I like to always say that the Stripe founders are actually Irish. Let's not forget that.
Does it depend on where they list?
Sorry?
Does it depend on where they list? I mean, how do you measure success?
To me, it's ultimately how you build a fantastic business. The founders are focused upon what they can do for the consumer. What they also can now, with Klarna, do for the merchants. And for the consumers, they're not just a payment rails. They've added a lot more. It's a bigger experience. You have rewards. You have loyalty that they're adding in. You have discovery, and you have choice. Really at that moment, you say, okay, should I pay for it now? Should I do that later? Should I have something that's interest-bearing? It's really, really powerful. So they're doing something more than just payments. They're taking it a step further.
So, Matthias, what would you concretely like to see from Klarna actually go from now?
Well, I just love the passion and vision of Sebastian. Like, he just keeps going. Like, he is relentless. And so I would always back him. I'd back him again because he is just going to keep fighting. And so the innovation that he's going to see going forward is, again, he's working on that neobank, doing more for the consumer. On the merchant side, he's also innovating, because they can understand in detail the purchasing behavior. They can offer unique deals for those customers, which, and if anything, the main thing that they've been great at is ensuring that cart, the cart that they have that is not abandoned, that they're actually converting them. And so it's a great ROI tool, and they're taking on the risk, from the merchants.
Matthias, what initially did you see in Klarna that made you want to invest in them? Was it the founder or the business model? And how can you replicate that?
Yeah, sorry. Yeah, it's a bit of both. Like the founders are exceptional. Really exciting group of people. Three guys who met at university, super ambitious, wanted to take on the world, and they actually ended up doing it. It's a wonderful story. And Sebastian, he's he's an immigrant, first generation Swede, so it's a great story of success. So that was really compelling. And Sebastian has proven himself to really have that tenacity and capability and the spike that you need to just keep going. I can't see him stopping, to be honest. But then also it was really exciting to see that business model, how they thought about the payment rails in a very different way, and also thought about the consumer and what they could do for the consumer and the merchants.
Matthias, are there other companies, maybe one company with a similar profile that you'd back right now?
Well, I mean, I think we should be very excited about Revolut and what they're doing. And in some ways, I think, Nick at Revolut and Sebastian, they have a lot in common. They're just, super tenacious people. So that's really exciting on the sort of public market side. But at the other level, today, I'm just so surprised in terms of the growth that we're seeing in companies. There's a whole cohort of companies today that within 4 years are able to achieve 100 million in revenue, in what is a very short period of time. And in that we have, the companies like Lovable. We also have 11 Labs. We have a company within our portfolio, Filigrand, and there's a whole bunch of other ones that are coming through. So that's a whole step change in terms of what's happening in the sort of European ecosystem.
So interesting, Matthias. Thank you so much. As always, so great to have you in the studio. Matthias Lindman, there, founder and managing partner of Moonfire Ventures. Now, of course, we'll have a lot more on tech throughout the week. Don't forget the next episode of Bloomberg Tech Europe this Friday, 6:30 a.m. London time. Tom McKenzie will be looking at how AI is changing the way we fight disease, including an exclusive interview with Demis Hassabis, the chief executive of Isomorphic Labs and Google DeepMind. Coming up, we'll talk to Myron Brilliant, the former head of international affairs at the U.S. Chamber of Commerce, about Trump's tariffs. That's next, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What made you go back to politics?
Putin. I'll be very frank with you. Had Russia not attacked Ukraine, I would not have run for president of Finland. This was built in the 1800s later when the Tsar took over the palace. And this is mirroring the Winter Palace in St. Petersburg, but it's called the Hall of Mirrors, so we have the mirrors on the side.
So do you ever get used to it, or do you sometimes just walk in and think, wow, this is...
Every morning, wow, this is...
Have a seat. Talk to me about resilience.
It's something I think we in Finland know something about, actually. It's one of our key words. It's sisu, which is resilience, perseverance, grit, stamina. So you never give up. You just have to keep on pushing and grinding through the tough stuff. And I think a lot of Finns have that ingrained into the system because remember, we're a poor country. You know, first we were under Sweden for 700 years, then under Russia for a little bit over 100. And when we gained independence in 1917, we were basically a poor developing country. And I think then this sort of idea of resilience, let's try to overcome, let's work hard, came very much a part of Finnish DNA. And I think I'm still part of that generation.
And you can watch the full interview with the Finnish president this Friday at 5:30 p.m. in the UK, 7 p.m. Eastern in the US. You can also watch it on Bloomberg, the website, and on the terminal from 9 a.m. London time on Friday. It's the first episode of 6 episodes of season 1 of Leaders with Francine Lacqua and myself, where I sit down with the decision makers shaping our future to explore the personal stories behind their public personas. Now, the Finnish leader spoke to me about living in Russia's shadow. And of course, the threat from Moscow has taken a new turn with a Russian drone incursion in Poland. As European defense ministers gathered here in London, discussions will be dominated by the escalating conflicts in Europe and the Middle East. Our Europe executive editor, Chad Thomas, joins us, also to talk trade, France, but also defense. Myron Brilliant, the former head of international affairs at the U.S. Chamber of Commerce and founder of the Brilliant Impact Group. So thank you both for joining us. Chad, this is uncertain. A lot of people will be thinking, like, look, we had this incursion of drones into Poland. Prime Minister Tusk said there were about 3 or 4. There were, I think, the numbers are quite high that they had to stop on purpose.
It is an escalation, and you have Poland saying this is an act of aggression. This is the first time that we've seen them shooting down drones that have gone over their airspace. We had, Francine, just about 30 minutes ago, the Prime Minister Donald Tusk speaking in the Polish Parliament. He said that he is going to invoke Article 4, which most of us speak about Article 5. That's where you're asking for military intervention. It's not that, so it's lower than that, but it is a significant escalation. Article 4 is asking NATO members to have consultations, to talk about what's happening. Do they need to cooperate more closely on military matters? There is a NATO meeting that was set for today anyway, so they've already said at that meeting that they're already going to be discussing what happened overnight in Poland.
Will we ever really know if it's intentional or accidental? And what's the White House saying on it?
Well, that's going to be the million-dollar question here. We had Kaja Kallas, the EU foreign policy chief, saying that she believed that it was intentional. Obviously, we're waiting to hear what Russia has to say about it, and the White House, they'll be surely waking up any moment, and we'll hearing more from them.
Myron, this comes at a tricky time because Europe is, first of all, not always on the same page right now. You have Donald Trump that's much more friendly to Russia, but then also talked, tougher on tariff threats towards Russia. So how does this change the dynamics?
Well, I think Chad's absolutely right, Francine. I think it escalates things for the president. He's dealing with not only the rising tensions in Europe, but also now in the Middle East coming out of yesterday. He was definitely surprised in Qatar, and he's concerned, obviously, about Putin's aggression. And this is the whole fear to begin with, that the conflict in Ukraine would spill over to the rest of Europe. So while we're not there yet, we're certainly moving towards an escalation of the crisis. So I think the president's got a lot on his hands. Yep. Obviously, the EU and the United States have to deal with NATO security, have to deal with Ukraine, and also trade tensions. And it's a lot on the plate.
Does it put the president closer to Europe? Because there were question marks about, he also rolled the red carpet out in Alaska for Vladimir Putin. If Russia's going behind his back to do this, then is he going to give more support to Ukraine? Well,
Europe is trying to stay close to the president. I mean, look at it post the visit in Alaska with Putin. What happens, right? Zelensky comes to town, and Zelensky doesn't come alone. A lot of EU leaders come with him. What's the message? Europe does not want a gap between what the United States is thinking about in the Middle East or in Europe with respect to these issues. So clearly, the United States and Europe have to work together. Transatlantic ties have to be stronger than ever, but they're being tested, and there is tension, and trade is a part of it. I mean, look at the polling in Europe right now about the U.S.-EU trade deal. It's not very favorable.
No, it's not very favorable, and actually you have quite weak heads of state in Europe, right? So we saw a change of prime minister in France. The situation is still quite unstable because of fiscal issues, and other countries just don't feel as strong as they were in the past.
Well, if you look at what's happening in France right now, they're very inward focused. They're focusing on their domestic issues. They have to. They have huge budgetary problems, and they can't get a budget through the parliament. I don't see how the new prime minister is much more successful than the last two before that. I'm, as you know, based in Berlin normally. In Germany, we have a new government with 3 parties in it. They already are fighting with one another after only a couple of months in power. So it is difficult to see how Europe unites around these very difficult topics that they have to deal with.
Yeah, and how can they unite, especially in the threats? Donald Trump asked him yesterday to be much tougher on China.
Well, the one thing I would say to add to Chad's answer here is that certainly Macron's made an effort with the chancellor in Germany. This is the one area, the foreign policy area is the one area where Macron still has legs, right, to run. He's definitely concerned about the domestic environment. The prime minister will have to deal with the budget, and there's obviously opposition to budget cuts, pension cuts. But in the foreign policy space, I think Macron's been pretty aggressive. The question is, how effective has he been? Right. And I would argue his effectiveness in dealing with the president of the United States has been pretty limited as his position's gotten weaker. At the end of the day, Europe and the United States have to stand together. And whether that's dealing with Ukraine and coming to some common alignment on security guarantees, certainly we've seen a lot of talk about defense sovereignty in Europe. That's a direction that's going to have to happen, but the United States can't remove itself from helping support what's needed in Europe at this moment.
Myron, do they have to stand together? If you have a president, even on the tariffs and trades, if you have a president that gives the UK a better deal than the EU as a whole, then is it the New World Order? Does Europe need to, not by choice, but by fact, look for new allies?
Well, I'm no fan of dismantling a global trade system that the United States and Europe put together, right? I've been on record saying that I would not weaponize tariffs, and I certainly wouldn't throw everything into a kitchen and cabinet sink and hope that it comes out on the other side. So I am very concerned about what's happened on the trade front. The EU-US deal is a pretty good deal for both Europe and the United States because it brings some stability and predictability. But it's certainly a big question mark about where we go from here. And there are other issues. How are we going to deal with AI and digital taxation? How are we going to deal with the broader issues of China and manage China, which was your earlier question? If we can't get alignment. Now, Germany will be a big part of that because Germany cares about the auto market. And the United States and Germany and France and other countries are going to have to come together to manage the China dynamic. And we are concerned.
I think part of the challenge for someone like Macron, he can talk tough, but he doesn't have the money, the fiscal space to do very much when it comes to helping with security. The country that I watch closely in this space would be Germany, because they actually can afford to spend if they want to. Merz has said he's going to spend what he needs to on defense. They haven't really put numbers behind that yet, but we'll be watching from our perspective very closely, where does that money go and what does that mean for the defense industry in Europe and the European defense as a result of that.
And whether or not Germany is going to buy everything from France in this equation.
Absolutely.
So, I mean, that's what, that would help the defense industry, would help Macron's politics. But I think there's a U.S. defense industry. And by the way, who knows? Maybe Donald Trump has a stake in Lockheed one day and other defense companies, and therefore we're going to be doing.
I mean, France and Germany can't reach an agreement on fighter jets, so it's really difficult to see how ultimately people still think in terms of their countries.
Francine, go ahead.
There are just a little bit of headlines actually coming in from the RIA saying that Russia's top diplomat has been summoned to the Polish Foreign Ministry. Myron, I also wanted to touch on, look, von der Leyen, the Commission President, gave a big speech today, and if you look at some of the key takeaways, it's very aggressive, where delivered, there needs to be support for Europe's eastern flank against Putin, holding Israel to account, talking about frozen Russian assets, and saying there needs to be a pushback against Donald Trump. On those, what can Europe actually deliver, given where they are economically?
Not much without the United States' support, in my view. Both Europe and the United States have to sanction Russian activity, right? And the United States is moving now to sanction India and China with secondary tariffs. They have less capacity. We've already done a number of sanctions on Russia. What we have to do is just stay united in defending Ukraine's rights, making sure that a land for peace deal is one that Ukraine can accept, and we have to provide security guarantees to Ukraine. That's ultimately what has to happen. The one thing I want to watch, though, that we haven't gotten to is the president's authority over trade and tariffs, because we have a court in the United States. Yes. We have a U.S. Constitution, Article 1, Section 8 of the U.S. Constitution. Let's see what happens before the Supreme Court. Do they agree with the lower court's decision that the president exceeded his authority over tariffs? If it does, now what happens to the trade deals that the United States has reached? Yeah. And what does that mean for Europe and UK and others? It creates more instability. There's a whole set of questions there, but it might rein in the president's authority.
All right, what does happen? So do they crawl, do country by country, do they show up and say, actually, I want my money back on this and present the Trump administration with a list?
So the president has appealed, the administration has appealed the lower court, the Court of Appeals decision. In November, the Supreme Court will have hearings, and they're expediting. Typically, a Supreme Court case wouldn't show up until June of next year. But there's hundreds of billions of dollars of tariff revenue. There's a big uncertainty. So whether you're the Treasury Secretary or whether you're the White House, you're very worried about the impact of this on the trade agenda for the administration. So I don't know what the Supreme Court's going to do. It could limit the authority. It could support the lower court's decision. It could have a sort of a hybrid decision. It could say widespread utilization of tariffs is not authorized under IEEPA, or it could say that targeted but not widespread. So there's a lot of options here. Yeah. We're going to have to see. But to your point, there's a lot of questions about refunds.
Yeah,
right?
refunds and then fiscal holds, right?
Refunds and fiscal challenges associated with, losing maybe a couple hundred, $400, $500 billion of revenue.
Then how do you fund the beautiful big bill? Myron, thank you so much. Thank you to Myron Brilliant, founder of the Brilliant Impact Group and former head of international, of course, affairs at the U.S. Chamber of Commerce, and our very own Chad Thomas. Up next, Bloomberg Brief.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Ramping up pressure, President Trump warns of sweeping new tariffs on India and China to bring Russia to peace talks with Ukraine. In AI we trust, Oracle surges after giving a blowout outlook for its cloud business. And U.S. equities on track to notch a fresh record as rate cut bets stand firm. PPI is on deck. So all that setting the tone today, and as you can see, it is a positive one. Those Mag 7, well, we may need to broaden it out. Oracle is up almost 30% pre-market. As you can see, S&P futures looking to post another record today, pointing to a gain of 0.2% at the open. NASDAQ 100 futures also up at 0.1% right now. We obviously have some geopolitical tension in oil prices. Crude still at $63.30 a barrel, but up 1.1% after Russia's drone incursion into Poland and, of course, Israel's attack on Hamas leadership in Doha. Let's flip it up and look at bonds. It continues to be a fascinating trip in bonds. A little bit of curve flattening today. You can see we have the 2-year yield up to 3.54. That 30-year yield, though, still lower at 4.73.72. Full cuts priced in now, and the possibility of a third if you look at money markets. So let's get to some individual stocks to watch now. Over to London and Valerie Titel. Valerie.
Vonnie, let's start with Oracle. What a blowout quarter for the software company, up 28% in pre-market trade. It all came down to their guidance when it came to their cloud infrastructure business. They now have a backlog 4 times that the size of Google, even though they're a way smaller player in the cloud business. The CEO saying they had an astonishing quarter. They signed 4 multi-billion contracts with 3 different customers, and it doesn't end there. The co-founder Larry Ellison could become the world's richest person, coming very close up to Elon Musk after this rally in Oracle shares. We also are seeing the impact on the wider tech market and on the wider supply chain for Oracle. CoreWeave, who is a big partner for Oracle in the cloud infrastructure business, up 7%. NVIDIA, who is a big customer from Oracle as well, up nearly 2% in pre-market trade. But lastly, let's head over to Copenhagen. I want to talk about Novo Nordisk. The new CEO, who just took a seat a month ago, has now announced a round of layoffs, 9,000 jobs he wants to cut by the end of next year. It's around 11% of their workforce. The stock is up 2.6% on this news as Novo Nordisk tries to regain some ground lost to competitor Eli Lilly. Bonnie.
Valerie, thank you so much. Valerie Teitel there in London. And in just moments, we're going to be pushing ahead to CPI coming later in the week with Michael Sneed of BNP Paribas, and Keith Lerner of Truist joins us on this equity market later this hour. So, more data coming following those disappointing payrolls revisions. We get PPI today, CPI and jobless claims tomorrow, and the University of Michigan sentiment survey Friday. Michael Sneed of BNP Paribas pushing ahead to the inflation reports, writing, quote, the market impact of a CPI surprise is asymmetric. We think a hotter than expected print will produce likely only a modest reaction, given that labor market warrants cuts. A softer than expected print would provide greater conviction in the Fed easing cycle. Michael joins me now. He's head of cross-asset and macro quantitative strategy at BNP Paribas. So it looks like either way, whether we get a hot or a soft inflation print today and tomorrow, Michael, we're getting a cut. It's just the extent of the dovishness of that cut. Is that correct?
That is correct. And I think that's important for the way that the market is trading. You're seeing equities being stronger, and the backdrop that we're seeing where the Fed is allowing to cut rates without there necessarily being a steep downcline in economic activity, that is a very good outcome for risk assets. And we think it's also a negative outcome for the dollar. In terms of the pricing of rate cuts following the CPI, we see that 25 basis points is already baked into the market for September. We think it'll be interesting about the pricing for December. We do expect 3 rate cuts to be delivered this year, and that's not yet fully priced. It's largely priced, but not yet fully priced into the market.
How would they come, each at a meeting apiece between now and the end of the year, or is there a possibility of a jumbo rate hike to kick us off?
So we do think that there's be 25 basis points at each of the 3 meetings for the rest of this year. We had considered that there could be a risk of a 50 basis points, a jumbo cut coming in September. But when you look at market pricing, the market seems to be reluctant to kind of start to price this in. Straight after the non-farm payrolls, you saw the pricing, the probability of a 50 basis point cut increase slightly, but continue to remain very low. Yesterday, I think the data around the payrolls revision was also a bit of a test. We saw a downward revision that was larger than had been anticipated. But again, the market was reluctant to price in a 50 basis point cut. So it seems that the narrative that maybe you could get a jumbo rate cut is probably going to be declining over the next week.
Michael, a judge has temporarily blocked President Trump from removing Fed Governor Lisa Cook. I'm wondering how you're factoring all of the machinations around the Fed and the personnel at the Fed, and then sort of beyond that, how much independence is compromised into your forecasting.
So when it comes to our discussions with clients about how to kind of incorporate some of these kind of Fed independence type rhetoric, I think one thing that's reassuring from a positioning perspective is the trade that you want to put on from an economics perspective and a trade that you want to put on from a Fed independence perspective at the moment are reasonably aligned. You want to be positioning for the Fed delivering slightly more cuts than is currently priced into the market, and you want to position for a steeper curve. So at the moment, it becomes a bit of an easier trade for clients to manage.
If we would see a different situation on the economic front or a very, very hot CPI print, that could change. But for now, the two kind of trades that come out of the process are similar.
So we are seeing a little flattening today, but just how steep can that curve go, Michael? Everyone seems to be putting on steepeners at the moment, and where do you see those yields at the end of the year?
So I think if we focus on, say, the 10-year points of the curve, so we think that US 10-year, you could see the yield rise up to 425 by the end of the year. So still very much in the ranges that we've had over the last couple of months, but a bit of a steepening pressure from where we are now. So we think this is a good opportunity. And I think one of the core things about our economics view that's behind this is that we think that the slowdown that we're having in economic data at the moment, that this is really due to the impact that we had from the turbulence in the market back in Q2. We think in going into Q4, actually some of the underlying trends of the economy do look resilient. And so actually we'll see a bit of a pickup of growth in Q4 versus Q3.
Yeah, it's fascinating. You're pro-risk really across asset classes. I'm curious as to why you think positioning is really not stretched anywhere.
So I think heading into the summer, there was a lot of uncertainty. Summer seasonality gives investors a little bit of a reason to not be too aggressive on putting on positionings. And we think now that we're going into the end of the year, this is a period in which investors want to show that they can generate returns. And so we'll likely see positioning increase. I think this leads to kind of relative regional performance as well. So, for example, in Europe, we see that European stock positions are very light. Our positioning metric is at just 30, and that's a score that goes up to 100. In comparison, the US is at 50, so pretty much median positioning. So still light, but not quite as light as Europe.
Well, speaking of Europe, I was fascinated, you like EU compression trades as well, in particular long OAT versus Bund, long BTP versus Bund. Are you expecting a satisfactory end to the French situation, or are you just very negative on Germany right now? And, I would point to the fact that basically France and Germany, when it comes to bond yields, France and Italy, I should say, there's almost no difference now, a couple of basis points between them.
This is, of course, very topical at the moment. So our reflection, particularly of the OATs, is that we think there's already a sizable premium priced in. And our trade is essentially kind of fading that risk premium that's priced into the market. The fiscal situation is likely to continue over the coming weeks. There's likely to be much negotiation. It's very positive that we do have a new PM announced in France. That reduces the tail risk, some of the tail risks that you could have a new election in the coming months. But essentially, we think that the market is pricing in too much of a premium, and that gives an opportunity for investors to move back into OATs. There's portfolio flows. Moving out of the US, there's still surpluses from Asian countries, Japan, for example, looking to want to diversify into European bonds. And we think that OATs offers an attractive yield at this level.
Michael, such a pleasure to talk to you. Thank you so much. That is Michael Sneed of BNP Paribas. Now, two other top stories trending on the terminal this morning. A judge has temporarily blocked President Trump from firing Fed Governor Lisa Cook over alleged mortgage fraud. The ruling means Cook can likely attend the Fed's meeting next week to vote on whether to lower interest rates. JP Morgan, Fifth Third and Barclays are among the banks bracing for potentially hundreds of millions of dollars in combined losses from loans tied to subprime auto lender Tricolor. Tricolor focuses on lending to borrowers across the U.S. Southwest who typically have poor or even no credit scores. Representatives for Fifth Third, JP Morgan and Barclays all declined to comment. Sébastien Lecornu will become France's fifth prime minister in 2 years, despite mass protests. Lecornu's minority government will need tacit support from the left or from the right to pass a 2026 budget and survive a possible confidence motion. Coming up, Poland shoots down Russian drones in its airspace. The country and the continent react. That's next. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hodern in Buenos Aires, Argentina, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry Yan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Pressure mounting over Russia. Poland's Prime Minister Donald Tusk calling out Moscow for a, quote, act of aggression after the country's military shot down Russian drones in Polish airspace. European Commission President Ursula von der Leyen struck a defiant and defensive tone reacting to the assault.
This must be Europe's independence moment. I believe this is our union's mission. To be able to take care of our own defense and security, to take control over the technologies and energies that will fuel our own economies, to decide what kind of society and democracy we want to live in.
Let's bring in Bloomberg's chief European correspondent, Oliver Crook, now for more. So, Ollie, what details do we know about the actual drone assault and Europe's response?
Yeah, so some of the most recent details we actually got from Ursula von der Leyen. She was there speaking in front of European Parliament as the sort of State of the Union address that she does, and for the first one of her second term. And she told us that there were more than 10 of these drones that crossed into Polish airspace that scrambled the jets of the Polish military. They shot down a number of these. And this is not the first time we've seen incursions into Polish airspace. We saw very early on in the war, there was a missile that overshot Ukraine that landed into Poland that provoked a great deal of anxiety about whether or not that is the sort of event that could provoke, Article 5 within NATO and could actually cause a much larger war. Those anxieties had sort of abated until recently, but the reason, Vonnie, this is significant, this is the first time a NATO country has shot down anything over its airspace that belonged to the Russians since the beginning of the war. And we've heard from Donald Tusk, the Prime Minister of Poland, and he is calling to invoke not Article 5, but Article 4 of NATO, which reads as follows: all the parties will consult together whenever, in the opinion of any of them, the territorial integrity, political independence, or security of any of the parties is threatened. So that is what Donald Tusk is calling for. This is an article, Article 4, that has only ever been invoked 7 times before since 1949. So the Poles obviously taking this very seriously. We've heard from some U.S. lawmakers who are basically suggesting that this is Russia just trying to test the limits of NATO, their determination to defend their eastern flank. We await to hear from obviously the key person, Donald Trump, how he will appraise the situation. We should say this comes a week after he met with the Polish president and told the Polish president that actually the United States is willing to commit more troops, more than the 10,000 they already have in Poland, in order to provide more deterrence against Russia.
Yeah, and then, of course, speaking of President Trump, he also has been speaking with European officials. Ollie said he'd sanction new secondary tariffs on China and India for trading with Russia, but only if EU nationals do so as well. What is he proposing exactly?
Yeah, so Vani, this is really interesting. So there were some high-level policymakers from the European Union in D.C. yesterday. They were meeting among each other to talk about different ways to bring Russia to the negotiating table, to bring them forth to actually bring an end to this war, which has obviously been a large imperative for the Trump administration. Apparently, Trump dialed into that call and said, listen, we are willing to put secondary sanctions on China, on India, to basically get them to stop buying Russian crude oil, because that is the main vehicle that funds the Russian war machine, but only after the EU does the same. And they were saying that basically the EU should impose up to 100% tariffs on China and India, and that the United States would follow. Now, this is a very sort of interesting dilemma to put the Europeans in. On the one hand, this is the sort of activity that they'd like to see from the United States, but a United States that has become extremely unreliable in their point of view. Are they really willing to torch their entire relationship with China, with India, who they're trying to sort of vaguely retain in the Western orbit with, in the name of Donald Trump, who could change his mind very immediately? I don't know that they're willing to go that far, but it's certainly an interesting sort of thing to put on the table. Is there negotiating space around that? Of course, what the Europeans would have said was, if from the beginning you had been on the same page as the G7, we could have coordinated our approach on China because some of our interests are aligned. Doing it this way is certainly an interesting dilemma for the Europeans to work through, and that's what we're going to be chasing over the next couple of weeks when we speak to policymakers.
How do they even work through this, Ollie? I mean, we know that Europe as a whole has to make a decision. You know, the individual countries obviously can't. So is this, going to mean extraordinary meetings by the Council and so on?
Yeah, so I mean, it provokes a great many questions. A, there's the question of whether or not the EU is willing to put themselves and their neck out that far. They're already engaged in trade conflict with China. China just recently retaliated against their EV tariffs by putting tariffs on pork. Do they want to escalate that? How at risk are they already in their supply chains and their exposure to China? But as you rightly point out, Vani, there are a lot of people in the room at the European level. You need to have unanimity on a lot of these sort of sanction and tariff issues. The Hungarians, for one, have caused a lot of problems around Russian sanctions. Are they going to be willing to go out further still? Again, the Trump administration has some sway in Hungary. Could they get involved? But again, Vani, this opens up a large litany of different questions. The thing is, with the Europeans, they don't move as fast as the Trump administration, right? And that is something that has often frustrated the Trump administration. But they're not going to one day to the other say, listen, we're going to slap 100% tariffs on China, and that's that.
Yeah, exactly. Ollie, thank you so much. Oliver Cook there with all of the latest out of Europe. Coming up, Novo shed some weight. The drug maker is planning to cut 11% of its workforce. That's next. This is Bloomberg.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be, the next stage of growth for these markets.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the front pages of the New York Times, Wall Street Journal and Washington Post, a judge blocked President Trump from firing Fed Governor Lisa Cook. The judge concluded that the alleged mortgage misconduct likely didn't amount to cause to fire Cook under the Federal Reserve Act. The order allows Cook to remain on the central bank's board for now while her legal challenges proceed. Next up, on the FT, NATO fighter jets shot down Russian drones that came into Polish airspace for the first time. Warsaw described this as, quote, an unprecedented violation of its territory. NATO said it was committed to defending every kilometre of NATO territory, including our airspace. And on Bloomberg, Novo Nordisk will slash 9,000 jobs globally and cut its profit forecast for the third time this year. It's fighting to recover the ground it had lost to rival Eli Lilly in the obesity drug market. They include 5,000 reductions at home in Denmark, where mass layoffs are highly unusual. Joining us now for more on this story from Copenhagen is Bloomberg's Christian Wienberg. So, Christian, what exactly happened? This is a massive layoff and all at once.
Good morning. Yes, and this was, as such, not a big surprise to the market because the new CEO had hinted that there would be job cuts, but it might be a surprise for some of Novo's employees here in the home market of Denmark because Novo is not known for doing these massive job cuts in Denmark, and there might have been some that would have hoped that they would have been a little bit less aggressive with the cuts, and also maybe have hoped that at least the people we've spoken to had talked about, they were hoping that this would mainly hit consultants and such. But this is a big hit to Novo's operations in Denmark.
What's Novo hoping to do in order to turn things around? Does it give up on its GLP-1s, its weight loss drugs, and try a different pipeline?
No, I mean, for sure, this is still their biggest cash generator. What they're doing is mainly that they're probably going to cut some stuff in their pipeline, some R&D projects, presumably some of the earlier stuff. We will know more next week when Novo will hold an investor call and give an update on the R&D side. But they have today said that they're going to increase their impairments this year because they're going to shelve some projects. So there will be projects that will be shelved. Presumably because Novo doesn't see them as profitable enough to progress with.
Yeah, now it's 9,000 jobs, it's 11% of the workforce. What kind of position is Norway in to take these people in and provide employment?
Well, the good news is that here in Denmark, the unemployment rate is quite low. So it won't be a massive hit immediately to the employment situation here in Novo's home country. But if you look at it from another side, then most of the job generation that has occurred in recent years in the private sector has come from Novo. So we won't see a kind of mass unemployment levels in Denmark, but we'll see some of the growth levels that had become the norm. That's going to stop now.
Christian, thank you so much. Christian Wienberg there in Denmark for us. Thank you. Coming up, stocks on track for record highs. More with Keith Lerner of Truist. This is Bloomberg.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief, and here's what you need to know. Ramping up pressure. President Trump warns of sweeping new tariffs on India and China to bring Russia to peace talks with Ukraine. In AI, we trust. Oracle surges after giving a blowout outlook for its cloud business. And U.S. equities on track to notch a fresh record as rate cut bets stand firm. PPI on deck. So let's get to those markets now. Future is pointing a very green picture today after a sixth day of gains. Some of this, of course, will be thanks to Oracle, which was up almost 30% post-market and indeed pre-market this morning. So we might have to expand that Mag 7 to Mag 8 or even Mag 9 if you include Broadcom as well in the last few weeks. We also have crude, a little higher, although it's paring those gains now. Of course, geopolitical tensions in the background, what with Israel's attack on Hamas leadership in Qatar, of all places, and, of course, those Russian drones over Polish airspace. Let's look at bonds, because we're seeing a little flattening today, but no doubt at least 2 cuts and possibly even 3 are priced in. 2-year yield at 3.53, down a couple of basis points, actually, just in the last few minutes. 30-year yield at 4.73. Quite the move, a 30 basis point move, basically, just in the last couple of weeks. Let's get to some individual stocks now. Here is Valerie Titel in London. Valerie.
Good morning, Bonnie. Let's start there with Oracle. What a blowout quarter for the database company, all on the back of this cloud guidance, up 29% in pre-market trade. A measure of their future revenue from these cloud contracts surged by over 350%. The company saying it signed 4 different multi-billion-dollar contracts with 3 different customers. The CEO called it an astonishing quarter, and it even puts the co-founder Larry Ellison on the map to overtake Elon Musk as the world's richest person. It is boosting others in its supply chain. CoreWeave is also getting a boost from these Oracle results, up 7%. It does partner with Oracle when it comes to cloud infrastructure. NVIDIA also getting a boost, up just under 2%. NVIDIA chips, Oracle uses a lot of NVIDIA's chips in its processing. So the supply chain definitely being boosted by this blowout news from Oracle. But one side of the market that is not getting any help is Synopsys. This is a company that designs software to test semiconductors. It's down over 20%, nearly 21.5%. They gave some pretty weak guidance and essentially was blaming the trade war with China, the chip restrictions on China, for its drag on Chinese sales. Bonnie.
Valerie, thank you so much. That's Valerie Titel there. Well, Keith Lerner of Truist has some confidence in this equity market as it marches towards a fresh record. He writes, quote, While the path forward is likely to be less smooth than recent months, the bull market still earns the benefit of the doubt. Keith joins me now. He's CIO and Chief Market Strategist at Truist. Keith, our Bloomberg opinion columnist John Author is writing that stocks are living in an alternate reality, but that there are some explanations for it. Give us your explanations for your confidence.
Yeah, well, great. Always great to be with you. I mean, it really is about earnings. I mean, we can talk about all the different shifting narratives this year from, tariffs, the labor market. But at the end of the day, stocks are driven by earnings. And what we've seen not only with the Oracle earnings, but in technology as a whole, we're seeing these new highs confirmed by record highs and forward earning estimates. And what's really important, during this kind of muddled through economy that we've seen the last couple of months, we're actually starting to see a broadening in that earnings theme. So it's going down from the large caps to the mid caps to the small caps as well. So again, in our view, the dominant theme of this bull market remains AI and tech. And with that market almost, and especially in the S&P being almost 50%, if those earning trends continue, which is our expectation, you should still be able to make further new highs as we think about over the next year.
There have been so many promises, though, in the AI space, promises of spending, promises of, needing capacity, promises that the likes of all of us will start using AI in our lives more broadly and that will just increase demand. What if some of those promises don't come true, Keith? Are we in for a big drop?
No, I mean, obviously the risk right now is that there's high expectations, when in the overall market with a 22 multiple. So that is a risk. But, in our view, it's still somewhat early in this overall adoption phase. I think there certainly will be a hiccup, so it won't be a straight line. But, one thing we try to focus on, because we have all these headlines as far as the MIT report talking about, the utilization of AI. Sam Altman's talked about tech being, potentially in a bubble. But we look at the earning trends, and right now, tech earnings momentum is the strongest among the sectors in our work. So until that shifts, we're going to stick with that underlying trend. I think it's hard to bet against it. And you think about even like as we just discussed on Oracle's numbers, where you're having bookings growth over 300%. I mean, where else? What other sectors are you actually seeing that type of growth? So again, we're sticking with the trend until we see more signs of a reversal, which is limited at this point in our work.
Keith, does it matter to the AI trade what happens at the Federal Reserve, how many cuts and when they come exactly?
I think the rate cuts are less important to the AI trade. I think the cuts are much more important for the rotation trade that we were seeing, more recently. So as an example, this year, we know the S&P is up about 10%. The small caps have lagged. Last month, we had a big month for small caps as the market started to price in those rate cuts. So for our view, that secular trend for AI is the main story. Rates are less important, especially because there's such big balance sheets with cash and less debt. But for the rotation trade, when you think about home builders, small caps, retailers, I think the rate cuts are much more important.
So we do see these pockets of weakness. For example, today we have that tricolor story where several banks are going to lose a lot of money based on subprime auto loans and so on. Do those stories, when they pop up and those pieces of evidence, do they trouble you at all, given that we are slowing to some extent?
Yeah, listen, as a portfolio manager, I'm always worried about the risk. Where could we be wrong? And that is troublesome. But, if you think about yesterday, we just had a big financials conference yesterday. And the rhetoric out of that was actually somewhat constructive, especially with the credit card companies talking about not really seeing much of a change in the consumer still being relatively healthy. And as we look internally at some of our card spend, it's still stable. But listen, the biggest risk is that this kind of slowdown that we see in the labor market, manifest into a more serious downturn, and the Fed is late. So we're open-minded to that risk. But at this point, our baseline is that you just got that one big, beautiful bill passed. You're going to get some rate cuts on the way as well. And by the way, the 10-year Treasury is already down 50 basis points for the year. So we're already seeing in some ways some relief there as well. So that's why we actually think by going into next year, we may see a little bit of an uptick in the economy.
So would you play the same themes then for the coming months, even as you're expecting some volatility, or would you start your rotation?
So we want to stick and just kind of keep our eye on the main driver of this bull market, which is AI and tech. So we're still overweight tech, we're overweight communication services. After being more negative on small caps, last month we actually did upgrade more towards a neutral view. But I do think there's some catch-up potential because you are seeing, unlike last year, you're seeing the earnings for small caps move up. the asset class has underperformed large caps by the most since 2000. You've had a lot of outflows, so you actually have a setup where expectations are still relatively low. So I think on the margin, we would still be with tech, but we would have a little bit more small caps just as a hedge and as a catch-up trade potential. And lastly, that one big beautiful bill had some really good incentives for small caps relative to large caps when you think about depreciation and interest rate expense write-offs.
All right, we'll see the results. Keith, thank you so much. That is Keith Lerner there of Truist. Now to other top stories trending on the terminal this morning. Poland has asked NATO to invoke Article 4 after Russian drones crossed into its territory during an airstrike on neighboring Ukraine. Invoking Article 4 would trigger consultations on a military response. The EU's chief diplomat described the incident as, quote, the most serious European airspace violation by Russia since the war began. Crypto firm Gemini has increased the potential size of its IPO to $433.3 million, pricing shares at $24 to $6 apiece from $17 to $19. At the top of the elevated IPO range, Gemini would have a market value of $3.1 billion. The firm was founded back in 2014 by Cameron and Tyler Winklevoss. Sébastien Lecornu becomes France's 5th prime minister in 2 years. Lecornu's minority government will need tacit support from the left or from the right to pass a 2026 budget and survive a possible confidence motion. Coming up, President Trump proposes more secondary tariffs on China and India to squeeze Russia. That's next. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump ramping up pressure on Russia, telling European officials he's willing to impose sweeping new tariffs on India and China to push President Putin to the negotiating table with Ukraine. This all as attacks continue in the region, with Poland shooting down Russian drones that crossed into its territory. For more, Jonathan Tamari of Bloomberg Government joins us now from Washington. So it's all getting a little ropey once again, Jonathan, but I'm curious about these secondary tariff proposals. It's very curious to tell a whole continent, or basically, a group of countries, I'll do it if you do it. How are they supposed to respond?
So, yeah, the president, we know, sees tariffs as a useful tool, not just for economic policy, but to exert United States influence all over the world. And he wants the EU to impose these tariffs on India and China in order to pressure Russia. And I think we'll see if they'll be able to respond. One of the complications is that it would take a unified vote in the EU to do it. And there's some countries that are not necessarily as hostile to Russia as others. But I think it's something that Trump will press. We know that he's thrown his weight around and tried to use the U.S. economic leverage to force other countries to do what he wants, to make trade deals. And this is kind of the latest step as he tries to look for a deal to end Russia's war there.
In other developments, a judge has ruled that the president cannot fire Governor Lisa Cook for now. What's next from here?
Certainly an appeal. The White House is not going to let it go there. And we have seen many cases in which lower courts have stopped the White House from doing something they want, but higher courts and often the Supreme Court says that he ultimately can. So this is certainly not over. We'll see what happens as the case continues moving through the system.
Well, the Senate's banking panel set to vote on the nomination of Stephen Myron to the Fed's board as well. Smooth sailing for Myron?
Looks like it. There haven't been many objections so far. Remember, every Senate Republican voted to confirm him within the last few months to his current position in the White House. It would take 4 Republicans to defect to block his nomination. They don't see that. We haven't seen that number coming forward at this point. Looks like he'll be confirmed.
Elsewhere, the president told reporters he planned to deploy federal troops to another U.S. city, this after cheering the result of deployment in D.C. What more do we know about his plans?
He said that it could be announced as soon as today. He said that he's working with a governor who would welcome them, which seems to imply that it won't be to one of these Democratic states or Democratic cities where the troops have been opposed. But he has not said where that would be exactly. There's been some speculation, maybe New Orleans, where the governor of Louisiana is a Republican. But he hasn't said specifically. We do know Trump sees this as a way to show America that he's fighting crime, and Republicans see this as a really winning political issue, forcing Democrats on the other side of him. So it won't be a surprise if he does it today and if he continues to do it as time goes on.
All right, Jonathan, thank you so much. Jonathan Tamari, Congress reporter for Bloomberg Government. Turning to tech, shares of Oracle soaring in early trading, nearly 30% after the company stunned Wall Street with an aggressive outlook for its cloud business. Bloomberg Tech Europe host Tom McKenzie joins us now. We've seen some moves pre-market, Tom, but 30% for a company as massive as Oracle is quite the move. What exactly is Oracle telling us?
Yeah, and who would know, based on this move, that they in fact missed on their quarterly earnings. But it was that projection, and it was a measure of the order book for Oracle that is leading to this huge rally pre-market, of course, in shares that could add $200 billion to the market cap of this company, potentially more than $70 billion to the founder, of course, Larry Ellison, in terms of his net worth. It was $455 billion. So just meditate on that for a moment. Almost $500 billion of orders now that they have to deliver on in terms of the outlook. They have signed 4 multi-billion-dollar deals. They've signed deals with the likes of OpenAI. They've signed deals with the likes of NVIDIA and TikTok. And now they have to deliver on that. This is reinforcing the view that the build-out in terms of the AI story is still there because, of course, this is a company that provides the data centers, provides the networking that supports the training of these models and the use and inference and the building on top of those models. So it really reinforces that case. They see the cloud business growing around 77% just in this fiscal year for Oracle, 77% increase to about $18 billion US. Into 2030, say they see that piece of the business growing to around $144 billion US. If there is a fly in the ointment, it's on how they deliver on those orders. The CapEx spend coming in far greater than the estimates. Around $34 billion US is now projected by Oracle. That was well above the estimates, but the analysts really like this on the call. You heard from the Deutsche Bank analysts on the call saying there is no better evidence of a seismic shift happening in computing than these results. Evercore ISI's analyst putting out a note saying Oracle is firing on all cylinders.
Yeah, and I want to point out that the stock was already up 45% this year
Indeed.
alone before this move today that we're going to see. Meanwhile, it's all good news, apparently, for AI. TSMC's August sales were up 34%.
This is, of course, the foundry based in Taiwan, so actually producing, actually churning out the chips, the GPUs for likes of NVIDIA, but also, of course, for Apple as well. So salient on the back of the updates that we got from Apple on the hardware front yesterday. But yes, TSMC with their monthly numbers in terms of revenues increasing in the month of August, 34%, sales coming in at about 11.1 billion US dollars. And again, suggesting there is no let-up in the demand for those AI accelerators that, of course, are designed by the likes of NVIDIA, but actually produced and manufactured by TSMC.
Well, let's stay with chips, because let's face it, what else is going on in tech at the moment? Synopsys plunging, not quite such a good story here. This is the trade war story. It's weighing on its Chinese sales.
Yeah, the geopolitics taking hit, as you say, to Synopsys, which had seen its stock up about 25% year to date on current metrics. You could see that all but wiped out entirely in the session today. This is because of the outlook and the impact of sales of that software and chip design software into the Chinese market. Export restrictions, they say, have impacted them. Developing some of their own intellectual property has proven challenging. They are cutting headcount by about 10%. It's a challenging picture, for at least for the design software business, Synopsys, without impact in terms of the export controls on China.
Tom McKenzie, thank you. Tune in to Tom's show. That is Bloomberg Tech Europe, and it's on this Friday. Turning to financials now, sources telling Bloomberg that JP Morgan, Fifth Third Bancorp and Barclays are among banks facing potential combined losses of hundreds of millions of dollars from loans tied to subprime auto lender Tricolor. For more, Bloomberg's Jennifer Serrain joins. This is really a fascinating story, Jenny. I'm curious how it all happened. What was Tricolor doing, or were these banks too vulnerable to this kind of sales pressure, or what happened?
So we're still trying to get to the bottom of it. What we know right now is Fifth Third put out a filing this week saying, you know, they expect to take an impairment charge of up to $200 million. And they actually didn't name the borrower, but basically said that they've discovered alleged fraud with a commercial borrower. And so we understand, based on our sourcing and reporting, that that is Tricolor. You know, I think it's important to remember that this is a subprime auto lender. As you said, it largely caters to undocumented immigrants across the U.S. It's seen huge increase in its business. You know, we understand that it underwrote about $1 billion of loans in a year, and that's up a lot from just 5 years ago. So it's a really fast-growing company. It's clear that these banks were kind of clamoring to get involved, and now we understand that this is, you know, they're facing some sort of fraudulent charges here and alleged fraud.
Yeah, and, you know, Bloomberg can crunch the numbers, and, you know, we found that Tricolor has sold almost $2 billion worth of asset-backed securities since 2022, many of which remain outstanding. Put this into context for us for the big banks. I mean, will it be a big dent or just a little dent?
I think the number that we were reporting yesterday is that you're looking at hundreds of millions of losses across the industry. So definitely something that the industry as a whole can kind of stomach. But what the risk always is with these situations is actually that, you know, does this shine a light on some shoddy risk management practices or issues with underwriting? Regulators will often come asking, you know, why didn't this get caught sooner, and how was this even allowed to happen in the first place? So I think the actual dollar amount, you know, it's definitely something that each of these big banks, JP Morgan, Barclays, and Fifth Third, as you mentioned, could stomach, but it's more about kind of what does this show about their broader practices, and if you look under the hood, is there something more here that regulators might want to kind of take a closer look at?
And then, Jenny, we're looking at the Klarna IPO as well, set to price at $40 a share, which is above the marketed price. Talk to us about whether this IPO is expected to deliver for investors, given that we saw a firm just completely blow things out of the water.
Yeah, I think people are seemingly very excited based on where it priced last night. So that was well above the marketed range at $40 a share. And I think we'll see how things go today. But based on where futures are indicating, it seems like, you know, U.S. stocks in general are likely to rise at the open. So it seems like it'll be a really good day for this company. And it definitely shows, you know, fintech has come a long way in the last 2 years. If you recall, back in 2021, this is a company that actually was valued at, I think, close to $46 billion. in a VC fundraising round, only to see in 2022 that valuation dropped to around $6 billion. So we saw a really big seismic change in kind of investor appetite for fintechs, and you've kind of seen that slowly come back. You've seen Klarna really shift its perception. You know, it's not just a buy now, pay later company. It's really trying to push and be a digital bank. So you see them trying to kind of get into these new products. You see investors finally opening back up and getting excited about this story. So it seems like all signs point to a really good day for this IPO.
All right, Jenny, thank you so much. That's Jennifer Serrain there for us in London. Coming up, we'll get you set up for your trading day with more data and a treasury auction. That's next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lapo in Sintra, Portugal, and this is Bloomberg.
Now a look at what's ahead today. First up, the first batch of that inflation data with PPI data dropping at 8:30 a.m. Eastern Time. Then at 10 a.m., the Senate Committee on Banking votes on the confirmation of Stephen Myron to be a member of the Fed Board of Governors. And $39 billion of Treasury 10-year notes go on auction this afternoon. Plus, don't forget, Klarna is set to begin trading today after raising nearly $1.4 billion in its IPO. Some movers, Oracle definitely moving. I think we can say that at the very least. Extending gains after that blowout revenue forecast for its cloud business is lifting other AI infrastructure stocks such as NVIDIA and CoreWeave as well. Synopsys plunging after saying it's taking a more conservative view of the quarter after an earnings miss. And Bill Holdings higher after an FT report that Elliott has built a stake. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There's a huge difference between what's going on Main Street and what's happening on Wall Street.
The general health of the economy, it's broken down.
We're expecting a prolonged period of elevated inflation.
We have an eye on the inflation data, but the one data point is not going to, I think, derail the path.
I don't think inflation is getting away from the Fed, which is why I think they should be focusing more on the growth side of the economy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday at all-time highs as Secretary Bessent is pushing for the Federal Reserve to recalibrate. The White House Fed pick Stephen Myron is facing a key vote on Capitol Hill, and a judge is blocking the president's effort to remove Fed Governor Lisa Cook. That meeting just 1 week away.
Next week's not going to be boring. I think that we can say that fairly, that the Fed meeting on September 17th is going to be one of great interest. First of all, yes, Lisa Cook will be there. Will she vote? That's going to be something we can get into. Meanwhile, Stephen Myron also may be there, given that he probably will get ushered through Congress. So how much are we going to hear about 50 basis point rate cuts? How much are we going to get dissents across the board? Do we get some bigger numbers put out there? And how much does that affect market pricing of just what this Fed has in store?
The Treasury Secretary's been pretty clear about what he wants to see. His quote, if the Fed is data dependent and the data is bad, makeup cuts are needed.
Well, he's basically said this to you and I, Jonathan, just a few weeks ago, saying, yeah, given the revisions, and he wanted to wait to see what the latest report was going to say, and after the latest downward revision of basically BLS overstating the jobs, almost nearly 1 million jobs in the United States of America, Treasury Secretary easing towards kind of urging the Fed to cut by 50 basis points. That potentially could be on the table. Definitely already 25 basis point the market has baked in.
He's asking the right question. If we knew at the time that payrolls were 75K less every single month over that year, where would rates be this morning? Isn't that a question the Fed's got to ask themselves at this meeting?
And it's the reason why they cut by 50 basis points last year around the same time. So by the same logic, couldn't you make the same assumption now that actually we may have seen a couple of negative payrolls prints if you take the adjustment into all of the models and take a look at June and July and August, and you start wondering, okay, is the labor market at the behest of Fed policy? And is there something else driving earnings and driving corporate success other than what's hinged to the labor market? This divide I have to keep coming back to, and can Fed rate cuts really support a labor market that has a lot of very idiosyncratic aspects to it?
You say you're data dependent, but in real time, the data isn't that dependable, and that's a big problem. Later on this morning, more data. PPI, 8:30 Eastern Time tomorrow morning. CPI this morning, equity futures just about positive. positive on the S&P 500. We have got a busy 60 minutes coming up. Peter Chair of Academy Securities as President Donald Trump floats new tariffs to pressure Russia. We'll catch up with Terry Haynes of Pangea as a federal judge blocks the president from firing Fed Governor Lisa Kirk. And Greg Dacko of EY on a massive labour market markdown. We begin this hour with our top story. Escalation risk in Europe. Poland striking down Russian drones. With the latest, Bloomberg's Ollie Crook joins us for more. Ollie, what do we know about how deep this went into Polish territory, and also whether this was deliberate or an accident?
So those are the fundamental questions, John. What we know is that there are more than 10 drones that crossed into Polish airspace, and a number of them were shot down by the Russian military. It closed down a huge amount of Polish airspace, including the international flights and the international airport outside of Warsaw. This is not, John, the first time we've ever had shrapnel and other sort of missiles, projectiles reach into Poland. You'll remember in the early days of the war, there was a missile that overshot Ukraine and landed in Poland, and that provoked a great deal of concern and anxiety among Europeans and really globally about whether that sort of event is the kind of thing that triggers Article 5. The reason, John, this is significant is this is the first time a NATO country has shot down anything from Russia over its own skies since the beginning of the war, and it has caused the Prime Minister, Donald Tusk, to invoke Article 4, to call for NATO to invoke Article 4, which is not Article 5, but reads as follows. The parties will consult together whether, in the opinion of any of them, the territorial integrity, political independence, or security of any of the parties is threatened. And we should say it's significant because it's only ever happened 7 times before since 1949. And that is the question before the Europeans today. How big a deal to make of this? Is this a deliberate effort by the Russians to encourage, to test the distance of NATO, or is it just indifference from Vladimir Putin, basically not shaken by the possible threat of Article 5? Either way, it sends the same signal to the Europeans, and in fact to Donald Trump, who's trying to bring Putin to the negotiating table, that Putin is not really terribly afraid of NATO, and that he's feeling emboldened and not really moving his way towards a ceasefire conversation.
So, Ollie, this is how the president wants to address things. He wants the Europeans to go hard and go after Russia's biggest partners, India and China. He wants the Europeans to ramp up tariffs. And he's essentially telling them, if you do this, we will too. How's the EU and European partners responded to this?
Yeah, Jonathan, this is a really sort of interesting dilemma for the Europeans to find themselves in. So this was after a call in D.C. between EU officials and U.S. officials. Trump gets on the horn. He says, listen, we're willing to go 100% tariffs on China, 100% on India for buying Russian crude to stifle their ability to fund the war in Ukraine, but only if the Europeans go first. The Europeans need to pose themselves a lot of difficult questions. I think what the Europeans would like is for the United States to go at this alone and not really have to get involved, but they need to ask themselves, are they really willing to torch their relationships with China, with India, who they're trying to vaguely retain in this sort of Western orbit of influence, just because Donald Trump has put this sort of on the table? Maybe they would if they could rely on Donald Trump, but at the end of the day, they have very little faith that there's going to be necessarily follow-through from the United States. And are they going to charge headfirst into a tariff war with China and India, only to be sort of stood up potentially, or whenever the sort of interest of the United States shifts? But listen, it's a very interesting dilemma for the Europeans to be put in. They need to find another way to put pressure on Russia in order to end this war. Maybe this begins a conversation, though I do not see them, putting in 100% tariffs on China or India. That's just not how the EU works.
Ollie, appreciate the latest. Ollie, live with the latest from Berlin in Germany. Anne-Marie, the Treasury Secretary, sat around this table only a few weeks ago and made this exact point.
He said that he was at the G7 meeting. He brought up the fact that maybe Europe needs to start getting on board, tightening the screws when it comes to China, India, secondary tariffs or sanctions. He said at that point, everyone decided to look at what kind of shoes they were wearing, a.k.a. everyone got silent because the Europeans don't want to do it.
Let's see what their response is in the coming days. For the View on Wall Street, Peter Chair of Academy Securities joins us around the table. Pete, good morning.
Yeah, good morning.
It's the great European contradiction. They want the warm blanket of American security, and they want to maintain an economic partnership with a country like China. Is that becoming unsustainable now?
Well, I think even let's take a step back. Let's revisit the sanctions that have always kind of been loosely enforced, not really enforced. Europe has continued to buy Russian, energy products this entire time. So it's a starting point, I think. How about we really crack down on the sanctions in place, make sure that's happening, and then maybe push on the secondary tariffs. I think that would be a good outcome from this, is a real commitment to actually enforce the sanctions on the books and move that direction. I think you can put pressure on Russia that way. And secondary tariffs, I think, are going to be harder for countries to swallow than actually enforcing the sanctions agreed to.
When you say enforce the sanctions, you mean the United States or the European Union?
primarily the European Union, right? They have continued to buy Russian products. They've, looked, I think, the other way when they buy it from Kazakhstan, knowing that it was probably shipped from Russia into Kazakhstan. So I think really enforcing, hey, isolating Russia as much as possible, where their only counterparties really are China and India, would be a good first step. Can China and India support them? And if there's a talk of secondary tariffs, maybe that slows down China and India's interest in dealing with Russia, puts the squeeze on them. Maybe Xi calls Putin. Because I think, our view has been, unless we really do something, to stick to Putin, he's not coming to the table. He's fine with the war. He thinks they're winning. And clearly with the, incursion in Poland, he's a little bit, carefree and is going to push the envelope.
Do you think it was deliberate, what we saw overnight?
It's hard to say, but I think it's definitely an indication that he is nowhere close to coming to the table and doing some sort of ceasefire. He believes he's winning. Every step he is taking is to push the West and set up better, boundary lines in Ukraine, so if and when there is a deal, he can claim more land.
It wasn't just this. We also saw overnight Israel attacking a site in Doha to attack Hamas leaders. This comes at the time as we were getting downward revisions to jobs. It felt like a dumpster fire. Stocks reached record highs. Can you explain that?
I think stocks have been very conditioned to like rate cuts equals higher stocks. So I think that's a little bit of the mode we're in. I have to admit, I don't follow Oracle as a company, but their earnings, their projection was really good. So you're seeing that. So I think so long as we continue to spend on the AI, and I do think we are seeing this kind of what we've been calling, national production for national security, whether it's investments in Intel, MP, I think you're going to see more and more efforts by this administration to, produce the things that we need for national security. And I think that's a positive.
Okay, there are positive stories here, but are we conditioned to just ignore geopolitics because it always seems to be overblown at first headline, then calm down? Are we just conditioned to shrug it off and say, if I can't predict it, I'm not going to price it?
Yeah, I think that's a big part of it. So I think this will kind of, and again, we've had enough success, right? Where, we've pushed back on people, they've, pulled back. We've, Iran's been very quiet in the last few weeks. So I think you can see some of that. I'm a little bit worried geopolitically. I do think we are going to try and enforce these sanctions. There will be more chatter about secondary tariffs. I think the economy is slowing. I think when we look at, I would say garbage in, garbage out. My background was computer science, right? Garbage in, garbage out. So I don't think we spend enough time looking at the data, right? We take the data and put it into models. I think the Fed's been doing that. Like, whoa, let's take a look at this data. We've been complaining about the birth-death model, saying that, right, what this does is take EIN applications, so people looking for new businesses. And traditionally that meant, oh, you were starting a business, you hired a few people. I think now in the gig economy, what it is someone gets worried about their job, says, well, maybe I'll drive Uber on the side or Lyft on the side. They go ahead and get themselves an EIN. So it's not a real job. It's not creating this. The Fed should know this. I think that, or the BLS maybe should know this. That's why we've had that revision. And what really scares me, if you look from April to this year, we've produced 260,000 jobs in non-farm payrolls. We've had 960,000 birth-death model jobs, right? What if those are largely fake? We could be losing jobs in this economy, which is kind of my assessment of where we are. We should be moving aggressively, and I think the Fed and Treasury should combine to do something to control the long end so we don't get a repeat of last September.
Okay, there's a ton to unpack there.
Sorry.
Okay, let's start with rates, and then we'll get to the balance sheet, okay? On interest rates. I don't know what's going to happen in the next 24 hours with PPI and CPI, but let's say it's in line. Is 50 basis points on the table?
Yes, I think so. And let's talk about garbage in, garbage out one more time. We still use owner's equivalent rent to track, shelter, one of the biggest components of CPI. There's a huge lag effect on that. First off, go ahead and I dare you to read what OER is. It's painfully confusing. It doesn't reflect reality. And in this day and age, right, the Cleveland Fed has a real-time rent estimate. Zillow has real-time rents. Why aren't we actually tracking that, which is much lower than what the OER is telling us? So I think CPI is overstated. So again, we're kind of garbage in, garbage out, and we've been overstating jobs, making the Fed reluctant, and we've been overstating inflation, making the Fed reluctant. I think both are going to be revised down significantly. If you look at reality, they should have gone 25 already. I think 50 should be on the table.
So that's interest rate policy. Now, I want to give you some credit. You are one of the very few that is really focusing on what could happen with the yield curve, looking out 12 months when we get a brand new Fed. What are you telling clients about what they should be focused on?
I think that people should be putting flatteners on. I think a lot of people expect kind of a repeat of last year where we lose control over the long end when there were the rate cuts. I think Besson and the Treasury are already doing bond repurchases, so I think they're doing some of this. I think there's a lot of room on the Fed balance sheet to do an Operation Twist. So I know Besson's spoken to you. He does not like QE, but Operation Twist is technically not QE, right? It's balance sheet neutral. It does take duration out of the market, so I think that would be something that you could do. extend there, maybe even switch some of it out of T-bills or short-dated notes into mortgages, right? Because that's been a huge focus of this administration. So I think there are things that Fed could do in conjunction with Treasury that support that long end of the yield curve.
We've been talking about it on this program repeatedly. Listen to what the Treasury Secretary and the administration are telling you. What do they want? It's not just lower rates. What they want, very specifically, is lower borrowing costs and lower mortgage rates. To achieve that, you need more than just an interest rate tool, potentially.
This is the reason why it's so interesting to see the composition of the Fed and just how much the president can get his fingerprints on some of the Fed officials, because they might be more willing participants in Operation Twist or what have you to be creative to get those long end rates down.
Pete, this was very cool. Thank you, sir. Peter Chair there of Academy Securities. Yields down at the front end this morning, lower by a single basis point, the 2-year 3.54. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Poland shot down drones that crossed into its territory during a Russian airstrike on Ukraine. The Polish military calling it a, quote, act of aggression, and said the drones posed a threat to the safety of our citizens. It's the first time Poland has shot down military aircraft that have strayed into its airspace since the start of Russia's war on Ukraine. President Donald Trump told European officials he's willing to impose new tariffs on India and China to push President Putin to negotiate with Ukraine, but only if EU nations do so as well. Other potential measures discussed include further sanctions on Russia's shadow fleet of oil tankers and restrictions on its banks and major oil companies. Oracle shares are surging in the pre-market after the company gave an aggressive outlook for its cloud business. Oracle's cloud infrastructure revenue increased 55% to $3.3 billion, with the company signing 4 multi-billion-dollar contracts with 3 different customers in the quarter. And that's your Bloomberg Brief. John?
Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next on the program, Governor Cook stays on the board.
Dr. Cook hasn't said she didn't do it. And as with so many of President Trump's policies, we've seen these activist courts get in the way. Eventually, if this has to go on an expedited basis to the Supreme Court, President Trump is winning.
That conversation up next with Terry Haynes of Pangea, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Two-day winning streak on the S&P 500, all-time highs coming into Wednesday. Equity futures add some weight to the rally, up by 0.2% on the S&P. On the Nasdaq 100, up by 0.14. Under surveillance this morning, Governor Cook stays on the board.
Dr. Cook hasn't said she didn't do it. What we've seen is that she's saying, she and her attorney have gone to court and said that President Trump doesn't have the right to fire her for cause. And as with so many of President Trump's policies, we've seen these activist courts get in the way. Eventually, if this has to go on an expedited basis to the Supreme Court, President Trump is winning.
So here's the latest this morning. A district judge siding with Fed Governor Lisa Cook, at least for now, blocking President Trump's attempted firing. Bloomberg's Tyler Kendall joins us now with the latest. Tyler, good morning. Reaction from the White House literally just seconds ago.
Right, moments ago, John, good morning. And the White House is really doubling down on its argument that they have sufficient cause to fire Lisa Cook after this decision by this judge that will allow Cook to retain her seat while the broader questioning of her firing does play out in court. And I want to read you some of what we just got from the White House, saying that this ruling will not be the last say on the matter, and the Trump administration will continue to restore accountability and confidence in the Fed, alluding to the fact that they are going to swiftly appeal this decision that came down the other day. Now, the judge said that Cook is highly likely to succeed on her arguments that President Trump did not have sufficient cause to fire her. And it was interesting to read in her decision. She highlighted the fact that these allegations of mortgage fraud had to do with Cook's private conduct, nothing to do with her time as a Federal Reserve governor. And Cook's lawyers have previously suggested that if there were any discrepancies on her mortgage applications, that they were unintentional and likely due to clerical error. Now, as we wait for the Justice Department to officially appeal this ruling, we do know that DOJ lawyers have previously argued that it is within the president's right to determine what is sufficient cause to remove an official. Importantly, also, I wanted to highlight that this judge said that Cook's due process rights were likely violated, but the administration time and time again has said that they gave Cook sufficient time to respond to the allegation, pointing to the 5 days between FHFA Director Bill Pulte posting the allegations on social media and then President Trump posting her termination on social media as well. John, this looks like it's going to head to the Supreme Court, and while the High Court has actually weakened protections for officials at independent agencies in recent rulings, they did signal back in May that the Fed could be a special case.
Tyler Kendall in Washington. Tyler, thank you. Got the full statement right in front of me. Allow me to share it with you. The president lawfully removed Lisa Cook for cause due to credible allegations of mortgage fraud from a highly sensitive position overseeing financial institutions on the Federal Reserve Board of Governors. The statement goes on to read, this ruling will not be the last say on the matter, and the Trump administration will continue to work to restore accountability and confidence in the Federal Reserve.
So basically what you see here is that they're already preparing for their lawyers to once again appeal, and this is likely headed to the Supreme Court. Tyler makes a very good point. We heard from the Supreme Court just months ago that the Fed is considered a quasi-independent private entity, this independence. At the same time, we have seen the Supreme Court be a little bit more lenient to the Trump administration. And I think what comes down to here is what matters for cause. Will the Supreme Court agree with this judge when it comes to for cause for the Federal Reserve Act? Does it mean that something that has to happen while Lisa Cook was on the job?
Terry Haynes standing by. Terry Haynes of Pangea Policy. Terry, welcome to the show and good morning to you, sir. The Treasury Secretary says ultimately this will go to the Supreme Court. He suggested ultimately the president will win. Do you see it that way too?
Good morning, John. And well, I agree with Secretary Besson on lots of things, and I'm one of your chorus who always urges people to pay attention to what he says because he's giving markets clues on lots of things. I think this ultimately does go to the Supreme Court. There's an appeals court level in between, so this might take a while. And there's a preliminary injunction now against the president removing Ms. Cook. So I don't think that's going to happen anytime soon. So that's number one. Number two, I applaud the secretary's loyalty to the boss, but at the same time, I don't think he wins. And this is a very, very simple case. It's even, with respect to my friend Anne Marie, it's even simpler than most people think because the Federal Reserve is a creature of Congress. It's the Adam's rib it comes from is the Congress. It exercises congressional authority. Ultimately, with the exception of a for-cause clause, the president has no ability to deal with the governors. That's all Congress Congress. So I think the president should get ready for a little disappointment here.
Well, Terry, what happens, though, if Lisa Cook, given that we have this DOJ investigation opened, what if she is convicted of mortgage fraud?
Well, then the facts change. And, you know, the easiest way to look at this case is allegations are not cause. Full stop. And, you know, and that's always true, and that's going to be true here. And I've always said two things. One is that. The other thing is that the facts are going to determine whether or not for cause is sufficient. And if she actually committed criminal mortgage fraud, yeah, he's within his rights to remove her, sure. If not, not. The punishment's got to fit the crime here. One of the things I said to markets on Sunday was, you know, there's nobody that's actually defending Fed independence. Forget Trump. Cook herself isn't by politicizing this case. You know, the Congress isn't by not taking up its responsibilities. Even the Fed punditry around it, you know, pushes the thing for its own purposes rather than defending Fed independence. Somebody ought to start defending Fed independence. That probably starts with the Congress, as former banking chairs Graham and Hensarling pointed out last week in the Wall Street Journal.
So who do you think needs to step up and do this in Congress?
Well, the relevant committees in Congress, Senate Banking Committee, certainly. But, you know, the Fed itself isn't defending its own independence. The Fed in the past has run independent investigations of its own governors for conduct. The Fed has an inspector general. The Fed has more than enough ability to deal with this itself. Bessent, by the way, pointed that out a couple of weeks ago. The Fed's still not doing anything. I understand they might think it's a poison chalice they don't want. But, you know, the institutional integrity starts with the institution itself. So, you know, my 2 cents is they ought to take it up.
A lot of people are throwing around this word independence and integrity and the idea of maintaining some level of autonomy in the central bank. What does that look like, since we've seen that defined about 15 different ways?
Well, the way it is defined is that in the Federal Reserve Act is that as I say, the Fed isn't an independent fourth branch of government with its own authority. The Fed's power comes solely from Congress. That's it. Under the Federal Reserve Act, Congress gives the Fed kind of the granular authority to make its individual monetary policy decisions free of interference from Congress. Otherwise, it's got the same oversight. The Congress has the same oversight over the Fed as it has over any other agency, including the Federal Trade Commission, the FCC, the SEC, anything else. So, you know, markets have talked themselves into this grand independence, you know, a la the European Central Bank. That's never existed. But what's existed all along is the commitment to letting the Fed do its job independently with respect to monetary policy. Everybody ought to want that to continue, but the way to do that is to hone in on what that is and how to preserve it.
Hey, Terry, appreciate your time as always, sir. Terry Haynes there of Pangea Policy. You know, when you've got something on the calendar that you're super anxious about, can you imagine Chairman Powell's feelings about next week's meeting? He must be absolutely dreading what's about to take place next week.
He's just stockpiling Xanax. I have no idea, but I'm just suggesting, you know, maybe that's one way of dealing with it.
Talk about awkward.
I mean, come on. I wonder what the range of potential feelings are going to be on that committee.
That decision a week away. Up next on the program, the former senior U.S. intelligence official Norman Rule as Israel targets Hamas in Doha.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Two-day winning streak on the S&P 500, five-day run on the NASDAQ 100, all-time highs on the S&P, going into more economic data later this morning. That's the equity setup this morning. Futures positive on the S&P, on the NASDAQ, in the bond market, 2-year, 10-year and 30-year. The 2-year bond yield rising yesterday after dropping for 4 consecutive days. We're back lower again this morning by a basis point, 354.79, following some monster revisions on payrolls and heading into some key inflation data.
Does PPI or CPI even make the needle turn in any which way, or are people focused purely on the idea that there was a downside revision that was the greatest number in data going back to 2000 and the greatest on a percentile basis going back to 2009? At this point, the market is betting not really. It would take a pretty hot print, which is why a lot of people are wondering, does it even matter?
Payroll cementing the dovish bias of the Federal Reserve for next week's meeting. That's some of the price action in the bond market. Let's get you some morning movers with Yahara Anand, who has more. Hey, Yahara.
Hi, John. It's the big story this morning. Oracle shares up 30% in the pre-market after it gave a very bullish outlook. The company's booked revenue is up 359% from the same time last year, climbing to $455 billion in the latest quarter. That's thanks to massive cloud deals with the likes of OpenAI, TikTok, and NVIDIA. And the growth not stopping there, with the CEO saying that the cloud infrastructure unit will pull in $18 billion this year, and that number is expected to explode to $144 billion by the end of this decade, underscoring the huge demand for computing power. And that is helping to lift other AI infrastructure plays as well. We are seeing shares of NVIDIA, which, as I said, is a major Oracle customer, up 2%, while CoreWeave, which provides similar cloud services, is up 7%. And we make a hard pivot to the weight loss market, with Novo Nordisk shares up 2% in the pre-market here in the U.S. because the company is slimming down. The drug maker announced that it will slash 9,000 jobs globally, which will help it save $1.3 billion by 2026, money that it plans to spend on research to develop new drugs and on sales, because it has been falling behind Eli Lilly in this booming weight loss market, and it cut its profit forecast for the third time this year. So investors hoping that this will help turn things around under a new CEO who just took the helm last month. John?
Yahara, thanks for the update. Appreciate it. More from Yahara in the next hour. On our radar this morning, some of our top stories. President Donald Trump looking to impose tariffs of up to 100% on India and China if EU members join. Sources telling us here at Bloomberg that Trump made the offer to EU leaders in order to ramp up the pressure on Russia. Elsewhere, Fed Governor Lisa Cook staying on the job for now. A federal judge blocking President Donald Trump's attempt at removing Cook ahead of next week's FOMC meeting. The White House saying this morning this ruling will not be the last say on the matter. And finally, JP Morgan, Barclays, Fifth Third Bank, facing the possibility of hundreds of millions of dollars in combined losses. People familiar with the matter telling us here at Bloomberg the changes are tied to subprime auto lender Tricolor.
This is actually an incredibly interesting story on a number of fronts. On one hand, yes, you could say the losses, hundreds of millions of dollars, not going to really move the needle for the likes of JP Morgan. But when there's one cockroach in the kitchen, how many more are there? This was a company that focused on lending auto loans in particular to poor individuals in the United States, a lot of immigrants. And some of the lenders are looking into allegations that potentially some of those auto loans, the actual receivables, were double pledged to other assets, right? There was this huge layoff from Tricolor staff over the past couple of weeks. And here's my question, right? How much does this indicate the fraying between the economy, which isn't doing so great, and corporate America, which has been going gangbusters, even with layoffs and all these other things? There's so many stories wrapped up in this. It's a mystery to see this coming out at a time supposedly of such strength in corporate America.
Potentially a serious story. I'm just impressed that both of us got through this without saying tricolor.
Well, I really struggled there for a second. And
Didn't you feel that too?
I was waiting for it.
You saw this, right?
You were laughing, so I was trying to. Tricolor.
Tricolor.
Yeah, it's like, well, it's, okay, let's move on.
Tricolor.
Yeah,
okay.
You did a great job.
Going to come back to that story a little bit later this morning, a serious one. Let's turn to another serious one in geopolitics in the Middle East. Israel conducting an unprecedented strike in Qatar, targeting Hamas senior leadership. The president showing a rare break from supporting Israel's actions.
I was very unhappy about it, very unhappy about every aspect, and we got to get the hostages back. But I was very unhappy about the way that went down.
Joining us now from the region is Bloomberg's Jumana Basechi. Jumana, welcome to the programme. Let's just get into this. How is the region responded to this?
Shock and anger. Condemnation came through straight away, both from Qataris who were irate, I would say. If you listen to the Qatari Prime Minister Sheikh Mohammed's press conference yesterday, visibly angry, likening the attack on Doha to state terror. He said it is a blatant violation of international laws and norms, and also a violation of moral standards, referring to the fact that there is an unwritten rule of diplomacy and that you don't attack chief negotiators, and you certainly don't attack the country that is hosting those mediation talks. Now, what should be noted here is that despite the attack, the chief political brass that Israel had been targeting survived the attempt. Khalil Hayya was the person that they were mostly looking to hit in this attack, and he actually survived. And this morning, the Israel Defense Minister, Israel Katz, said that they will continue to go after their enemies. And why is this relevant? Because if you expect, or if the expectation is that Qatar will continue mediating, they also need to have guarantees that an attack like this will not happen again. And so later in the evening, a call was reportedly a call took place between President Trump and the Emir of Qatar, where President Trump urged Qatar to continue along with their diplomatic efforts. But in exchange, Qatar have said quite explicitly that they need to have a guarantee that incursions like this will not happen again. So the bar is just so much higher now in terms of a diplomatic breakthrough. And of course, the backdrop to all of this is the U.S. had put forward another ceasefire proposal. Yesterday, the Israeli Prime Minister said that they're willing to sign up to the terms of that proposal, but it's up to Hamas now to accept some of the terms that are being put down. No answer, obviously, from Hamas. And at this point, it is unclear whether Qatar will continue with the same momentum and with the same drive as they did before, given the uncertainty around those security guarantees and the insurances. Again.
Jumana, great reporting, as always. Jumana Basechi, leading some of our coverage out of the region, joining us from Dubai this morning. The former senior U.S. intelligence official Norman Rule writing this: in the near term, the attack will put Hamas leadership in a state of crisis as it seeks to survive, maintain command and control, and develop a strategy to sustain the organisation. Norm joins us now for more. Norm, welcome to the programme, sir. As we know, Israel is at war with Hamas. And as we also know, Hamas isn't just in Gaza, it's elsewhere. Do you consider this a one-off or a new front?
This is neither a one-off nor a new front. Since October 7th, the Israeli military has adopted a strategy where they're using their excellent intelligence, their superb military technology to go after high-value adversary targets throughout the region, to eliminate those targets before the adversaries can develop plans to repeat an October 7th-like event. We've seen the Israeli military operate in Lebanon, Syria, Yemen, Iran, but Qatar is different. Qatar is not an adversary state. It is a member of the Gulf Cooperation Council. In Israel's entire history, it has never conducted military operations against the Gulf Cooperation Council. Israel is also a partner of the United States, a major non-NATO ally. And indeed, Israel has conducted diplomatic engagement in Qatar with Hamas and with the Qatari government. So the Israeli action in Qatar is extraordinary by many measures.
There's also a massive U.S. base there in Doha, Norm. Is this another red line that turned pink, where we just are struggling to now find where the lines in the sands are?
We're in a region where many red lines have turned pink. For many years, the Iranians turned many red lines pink as they broke many diplomatic norms. But now the U.S. has attacked Iran. The Israelis have attacked Iran. Now the Israelis are attacking different places. We're watching a region where issues that everyone believed the rules of the game were understood are no longer understood. And I think this has unsettled many of the region's leaders who have looked for a stable future as they develop economic plans and social plans as they're trying to stabilize what has been a difficult region for many years, has made them very concerned. And for this, Israel is seen by some as a disruptive actor. Now, in Israel's defense, they have made it clear Hamas was responsible for October 7th. Its leaders are dead men walking, and they're going to eradicate the organization. They have not veered from that posture, and they have not gone after other actors, and they're not going after their neighbors. They're just going after individuals we consider to be terrorists. Final point, Hamas is considered to be a terrorist organization by many of the states in the region, to include by many of the states of the Gulf Cooperation Council.
Yeah, you said something very important there, Norm, that increasingly a lot of people in the region, a lot of leaders are viewing Israel as the disruptor or the destabilizer, in some ways even more than Iran. How much does that take off the table any idea of normalization?
Well, I think normalization is not on the table in the near term. But we also want to be clear as well. If you are a believer in the Indian Middle East corridor to Europe, it's a simple matter of geography. The idea of communications, energy, or other lines going to Europe, you need the geography of the Levant or Israel. Now, when that happens is a different question. And how that happens is a different question. But sooner or later, engagement with Israel is going to be a reality. But in the near term, that's not going to be the case. At the same time, Israel and Iran are in very different categories. Iran is creating militias that kill civilians routinely. Iran has shut down the Red Sea with the Houthis. Iran has proliferated ballistic missiles to terrorist organizations. Israel does none of this. Israel and Iran are in very separate categories.
This also, though, ties the hands a bit of the United States, which is trying to walk this very fine line of maintaining relationships with Qatar and others in the Gulf region, while also being somewhat supportive of Israel. What do you make of the recent break with President Trump in response to Israel and a sort of fraying of the relationship, it seems, at least on the face, between President Trump and Bibi Netanyahu?
Well, we have seen some evidence that the United States will go in a different direction from Israel in other areas in the past. For example, the United States has spoken with Hamas directly at times, and that was not always something that Israel accepted. The United States held talks with Iran longer than Israel may have seen appropriate. Likewise, when the president visited the Middle East in May, he did not visit Israel, which some people saw as unusual. The United States has an independent policy in the Middle East from Israel. That's that. But at the same time, there is no question in my mind the President of the United States is committed to the defense of Israel and standing with the Israeli people when necessary if they're under threat by Iran. But he is clearly not supportive of this action because it disrupts many of the efforts he had underway to work to free hostages.
Norm, thanks for making time for us this morning. We appreciate it. The former senior U.S. intelligence official, Norman Rule. We've had some brief comments from the president in reaction to this story. A full statement coming a little bit later.
Yeah, he was outside yesterday briefing reporters before he went into dinner, and he said he's never surprised, really, by anything that happens in the Middle East. He said he'll be giving a full statement today, but he said this: I was very unhappy about it. So obviously, this White House is seemingly pretty annoyed with how Israel conducted themselves in the region.
We'll look for that statement a little bit later this morning and later on today. Equity futures on the S&P 500. If you are just joining us, positive here by 0.25%. Later this morning, the main event, 8:30 Eastern Time, PPI data. Tomorrow morning, we'll get CPI. Let's get you an update on stories elsewhere with your Bloomberg Brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. The Supreme Court has fast-tracked a challenge to President Donald Trump's tariffs. The court agreed to hear cases brought by businesses hurt by the levies in the first week of November. The tariffs remain in place for now, but a decision striking down the tariffs could cut the U.S. refund amount to tens of billions of dollars, which it will have to pay back. Apple rolled out its next generation iPhones at an event yesterday. The iPhone 17 lineup includes a new slimmed down model called the Air, a name it already uses for its sleekest iPads and Mac computers. All 4 new iPhone 17 models will feature better cameras and longer lasting batteries than last year's lineup and will be available in stores September 19th. South Korea chartered a plane to bring home hundreds of workers being detained in a U.S. immigration crackdown in Georgia. The plane was set to take off today, but South Korea's foreign ministry said the departure has been delayed due to U.S. circumstances. Officials are in talks with their American counterparts to return the detainees as soon as possible. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes from now. Up next on the programme, a massive jobs revision.
This was one of the biggest revisions in absolute terms in decades. In the benchmark year, March 2024 to 2025, shows that the job growth was vastly weaker during the Biden administration than ever previously reported.
What does it mean for policy from here? Greg Dacko of EY joins us next, live from New York City. You're watching Bloomberg TV.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're getting a double dose of inflation data in the next 24 hours at 8:30 Eastern Time, PPI. Then on to tomorrow, CPI. Next week, a week today, a Federal Reserve decision just around the corner. Coming into that, your scores look like this morning. Equity futures positive by 1/3% on the S&P, up by 0.2 on the Nasdaq 100. Under surveillance this morning, a massive jobs revision.
This was one of the biggest revisions in absolute terms in decades. In the benchmark year, March 2024 to 2025, shows that the job growth was vastly weaker during the Biden administration than ever previously reported. Between this revision and last year's, job growth was actually overstated by approximately 2 million jobs.
So here's the latest this morning. The White House reiterating criticism of the BLS on the heels of disappointing benchmark payrolls revisions. The Treasury Secretary, Scott Bessent, calling on the Fed to recalibrate its stance, writing this: President Trump inherited a far worse economy than reported, and he's right to say the Fed is choking off growth with high rates. Joining us now to discuss is Greg Decker, the chief economist at EY. Greg, good morning to you, sir.
Good morning.
Let's talk about these revisions. Do they matter going forward for policy from here?
I don't think they matter that much going forward, but they do reflect an economy that was softer than previously anticipated. So what matters, I think, going forward is the momentum that we carry into the rest of the year and into 2026 when it comes to the labor market. And there, we're seeing softness. The latest jobs report indicates that over the last 3 months, we've only been adding about 30,000 jobs a month. And we have a bunch of other economic indicators on the labor market front that are also pointing towards that softness. The flow of labor market activity when it comes to hiring is at a 10-year low. You're seeing a creep up in the number of people that are filing for unemployment benefits. You're seeing long-term unemployment rate measures that are at the highest in the post-pandemic era. So you are seeing more evidence of a softening in labor market conditions. And the very reason why this matters is because this is weighing on income growth momentum and in turn forcing consumers to make difficult decisions when it comes to spending activity. And that is where you're going to see the slowdown coming out of consumer spending activity.
If this Federal Reserve was aware at the time of just how much weaker this labour market was, would rates be lower this morning than they are now?
I think the Fed would have been on an easier trajectory when it comes to monetary policy. If you look back over the last few months, we've had a few policymakers led by Governor Waller arguing that there was room for the Fed to neutralize monetary policy. We're not talking about vast rate cuts to bring rates down close to zero. We're talking about a move that would bring the Fed funds rate from a slightly restrictive stance towards a more neutral stance over the course of the next few months. And now we have greater evidence of this labor market softness. Again, it's not a cliff, but we are seeing increasing evidence of a visible softening in labor market conditions, and that should be a rationale for the Fed to be neutralizing monetary policy with gradual rate cuts, especially in an environment where underlying inflationary forces were moving towards 2%. We don't have the risk of second-round effects from inflation via the wage growth channel in an environment where the labor market is softening.
How much power does the Fed have to juice the labor market right now by cutting rates?
Well, I think the Fed has the power to buffer the shocks that we're seeing right now. We're seeing a number of supply-side shocks that are constraining the economy. The trade and tariff shocks, the immigration shocks, the higher pressure on goods price inflation, and the Fed has essentially the ability to essentially limit the pressure from higher interest rates on the economy. Now, one important caveat here is that what matters perhaps more for the economy is long-term rates. So the Fed does not necessarily have that much ability to control long-term rates, and so the cost of credit may actually remain higher if there are a few factors that keep these long-term rates high. One, the lack of Fed credibility and potential political influence on the Fed. 2, the risk that we see ongoing policy uncertainty, keeping those long rates higher. And 3, the risk that there is this anticipation of higher inflation for longer that may also pressure long-term rates.
The reason why I ask, Oracle yesterday came out. They performed amazingly. They said that they have this 77% expected increase in their cloud computing services in particular. Stocks surging, $200 billion of market cap gain. When you look at the details, they're going to spend more money and they're going to cut staff in order to do it. Yep. And they've continued to cut staff. And you've seen this around the board with a lot of these big tech players that have been fueling a lot of the gains in investment in the economy, reducing staff to do it. Yep. Doesn't this suggest something bigger than what the Fed can address by cutting interest rates?
I mean, there's only so much the Fed can do in the face of supply shocks. So that's the first thing we have to realize. We're in an economy where we're no longer driven only by demand shocks. We're increasingly driven by supply shocks. And the very type of developments that you're talking to in terms of a potential technological revolution is another sign of this supply shock. It's working the other way than tariffs or immigration shocks because it's actually increasing supply, but it's doing so in a way that is revolutionizing the way we think about labor market activity. And so that's another factor that may limit labor supply and mean that we need less labor demand in this environment and therefore not as much pressure upward on the unemployment rate. So I'm very much in line with that view that we're seeing an economy that is currently being exposed to a number of supply shocks that are distorting the traditional measures that we typically use to measure how healthy an economy is. Notwithstanding that, I do still think that we're seeing a slowdown in labor market demand that is weighing on income and in turn will force consumers to make those difficult decisions to start pulling back in terms of consumer spending activity. And businesses are also feeling the pinch. They're in this uncomfortable environment where the cost of goods, the cost of services is increasing, and their customers have less ability to spend in a higher cost environment. So they're seeing their margins being squeezed. I think we'll see some of that actually reflected in the PPI data, where the markups that were a key factor driving PPI increases last month are actually going to be under pressure over the course of the next few months.
But didn't Chairman Powell tell us all to look through it? It's not really going to matter just yet in terms of the tariff impact on inflation?
Well, I think it's likely to be a one-time shock because of this softness in the labor market. We're not necessarily going to see employees bargaining for greater wages, and employers are constrained by these higher input costs, so they're likely to put downward pressure on wage growth. And so I would anticipate that over the course of the next few months, we're going to see more moderate wage growth pressures, which means that there is less of a risk of essentially inflation becoming more embedded unless, of course, there is ongoing pressure on the Fed to essentially ease monetary policy more than would be required by economic conditions.
One off, but not all at once. Sounds like the new transitory, doesn't it?
Well, that's essentially what it is, right? This idea that you might get the trickle-out effect to compensate for higher tariffs, but it won't lead to a protracted higher inflation rate. Basically justification to look through it.
Greg, appreciate your time.
Thank you.
And congratulations, incoming president of NABE, of course. So we'll hear much more from you in the future, I'm sure. Greg Deco there of EY and the latest in this economy. The latest on this economy we'll see at 8:30 Eastern Time, PPI, CPI in the next 24 hours. It's amazing how few people aren't focused on that data relative to what we've seen in payrolls more recently.
Because of exactly what you just said. If they're going to look through any hot prints and you have a labor market that quite clearly is cooling, well, right now, PPI and CPI are all but irrelevant, which raises the question, how offsides would this market be if it sort of muscled its way into being a little more relevant?
Then that's the question for the next 24 hours, isn't it? That decision about a week away for the Federal Reserve. Coming up next on this program, Jim Zelter, the president of Apollo Global Management, Republican Congressman French Hill, and Lotfi Karui of Goldman Sachs from New York City. The second hour of Bloomberg Surveillance. Up next.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Equity markets are still in this honeymoon phase.
What's the best liquid nominal asset class? It's equities.
We're pretty constructive on risk assets. There's much more benchmark FOMO going up than there has been down.
We're still looking at a bull market that continues to maybe 6,600, 6,800 by the end of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs coming into Wednesday. Equity futures adding some weight to the rally, up by 0.3%. On the Nasdaq, up by 0.2%. In the bond market, yields very close to the lows for the year. Just about 90 minutes away from economic data, 354.79 on twos. That economic data is just around the corner, 8:30 Eastern time, PPI. Then on to tomorrow, CPI, a double dose of inflation data coming up.
How high does it have to be before people care about it? That's my ultimate question, because right now everyone's focus is on the labor market and what that means for a Fed that seems poised to cut rates. The debate will be fierce given some of the personnel changes or not on the Fed committee. A question here of how divorced the underlying economy is from some of this corporate development that we see that keeps powering stocks to all-time highs.
So disconnected from what's going on when you look at the numbers from the labor market and the revisions yesterday. A revision on record overstating jobs by nearly 1 million. And this is why the Treasury Secretary has come out and said, basically, the Trump administration inherited a far worse economy than many were expected. Because if you're seeing this underlying weakening in the labor market, this was before Trump was inaugurated earlier this year.
They're not pushing for 25. They're pushing for 50 from this Federal Reserve this time next week. This morning, equity futures positive by 0.3%. The equity market doing better than good recently. Coming up this hour, Jim Zelter of Apollo with investors betting big on a rate cut. Congressman French Hill as a judge blocks President Trump's bid to fire Fed Governor Lisa Cook. and Lotfi Karui of Goldman Sachs, with the Fed keeping a close eye on inflation. We begin this hour with stocks hitting fresh all-time highs ahead of a double dose of inflation data. Jim Zalta, the president of Apollo Global Management, out with a new report asking the question, what if the world doesn't work the way you think it does? Zalta and the team going on to write, the era of free money is over. Ultra-low interest rates are history. Inflation is structural, not transitory. It's redefining risk, return, and the cost of capital. Jim joins us now for more. Jim, good morning.
I got to hire you at Apollo as a marketing guy. You're doing a good job.
I'm going to go one step further.
Thank you.
I woke up the other week, came into the office, handwritten note from you, and it said, public markets power the narrative, private markets power the economy. Just start there. What is the question you're posing for clients at the moment? What do you want to get them to think about?
Well, it's a bigger conversation about market structure and the changing backdrops about how investors think about investing from a 60-40 portfolio historically, and the tools they have to create better outcomes with less volatility. The reality is alternatives have worked for 40 years for institutions, and if we think thoughtfully about the growing need for retirees around the globe, how do we augment what's worked well in the past but may not be the compass for the future? On the other side of the coin, it's for companies. 8,000 companies down to 4,000. The role of private capital is changing. Companies like SpaceX and Stripe can stay private for much longer. And so a little bit, when I hear about your headlines this morning, I feel like many folks that come on talk a little bit about the world in the rearview mirror versus looking through the windshield. And the real aha moment for us came 3 years ago when we saw what was going on with rates rising dramatically in this cycle. And universally, we all thought that the economy would hit skids and there would be tightening financial conditions. And that really didn't happen. So that was a very practical situation where we really said maybe our textbook that we've using all along is wrong. But changing market structure, how companies finance, how investors invest. It is a new playbook, a new paradigm.
Redefining public and private markets. Our good friend Mark Rowan would often talk about this and say often the distinction was risk, higher risk in private markets. And now the distinction I think you and the team want to make is liquidity.
Yeah, I mean, the whole idea when we grew up in a marketplace, this is my 40th year in the business, where private was risky and volatile, and public was safe and liquid. And there's many examples right now. I come from the world of credit, and I started out as a high yield / junk bond trader back in the 80s. And it might have been a public security, but trust me, it was volatile and it was risky. And now over 30 years as now junk bonds have become high yield in an asset class, there's still a lot of inherent volatility in that. And again, we would say that across the whole risk reward spectrum. I grew up in Rochester, New York, Kodak, Xerox, Bausch & Lomb, 3 great American icon companies. They didn't get the memo on disruption. They were safe investment-grade companies, and voila, they're not in existence anymore.
Can we talk about how things have changed over the last 40 years? So you and the team would often talk about you are what you originate, you are what you create. The CapEx needs of companies now seem to have changed. I was reading the transcript from your address at a financial markets conference earlier this week, and you talked about the CapEx needs 20, 30, 40 years ago relative to now, and the change in quality, the change in character of things. How important is that, given where we're at?
Well, just to reset that question, in the last 30 years, the high yield market globally has financed companies that are going through either regulatory change or technology change. Think cable, think shale, think airlines, think telecommunications. And for the most part, that massive CapEx was on non-investment grade companies. As we sit here in 2025 over the next 10 years, massive CapEx boom between data, AI, sustainability, energy transition, transmission lines, the transaction we did for RWE this week in Germany. And so I don't think people are still thinking that private credit and private capital is small, illiquid, non-investment grade companies. And the reality is 80 to 90% of the private credit market is really investment grade counterparties, investment grade debt. And again, many companies now are afforded the opportunity to stay private much longer because of the breadth and the breadth of the financing markets.
To build on what John is talking about, does private debt have more of a role than private equity at this point?
Well, The debt markets and the capital markets and the credit markets are, as the Congress learned in 07, 09, it's the lifeblood of the economy. When GE could not roll over their commercial paper, it was the aha moment for the Congress to say, wait a second, we need to act here. And so when you think about the scope of private credit and scale, certainly the application with investment grade solutions, it's in the multi-trillions, 10 to 40 trillion, and the PE industry is a 7 to 10 trillion, depending on how you think about the dry powder and the overhang. So I would argue over the next decade, the impact of private credit, investment grade and non-investment grade, will probably have as large an impact, if not larger, than private equity has had in the last decade.
So the peak of private equity is over?
Well, I wouldn't say that. I mean, I think that the private equity industry is going to go through an evolution, and it's going to be a Darwinian evolution. And I think that, you know, the challenges of monetization, the challenges of upfront capital commitments, there will be fewer and fewer firms that are able to go to investors and have that dialogue and have that relationship. We believe we're one of them because of our investment track record. But the reality is I think that many PE firms, that business model is going to change, and how can they adapt?
This is a really important conversation to be having, especially because on surveillance, we keep talking about the divide between public markets and the underlying economy. And it seems like it's growing in an increasingly dramatic fashion. And we keep wondering whether the economy is really struggling right now, at least by virtue of some of these labor market pictures, at the same time that you're seeing the oracles of the world do very well. Are you seeing that? Are you seeing the need for money to be a little more free now in order to juice some of that activity?
You know, we're not seeing it yet, but I do think the question you're really asking is, and it is the same question about, you know, with the amount, public markets used to be a great diversifier for portfolios, and it really was the bellwether how the U.S. economy and the global economy was doing. But as more companies have stayed private and more companies are funding privately, you really are questioning that barometer and what it's telling you. Torsten has a good piece out this morning talking about the concentration of the CapEx cycle and how it's concentrated in a handful of companies in data, AI, and technology. And while the CapEx is a massive number and it's driving a North Star to growth, you're asking a provocative question, is it really hiding the underlying economy, which is driven by private companies? 90% of the hiring in America is by private companies, and is that a different story today? It could be. We're seeing, if you look at the public numbers in terms of earnings over the second quarter, it beat consensus by 700 basis points, 11 versus 4. And for the most part, the credit portfolios that we oversee, the multi-thousands of counterparty risks, 3,000 to 4,000, it actually showed quality upgrades 3-to-1 versus downgrades in terms of performance. So in the breadth of our credit portfolios, we're not seeing a weakness. I will tell you, we definitely see more lingering inflation. And I do believe that while this administration is dead set on getting rates lower, I believe that there is a legacy inflation issues in the economy. When's the last time any one of us bought something in the last year and you said, wow, that was cheaper than a year ago? It has not happened. And that's just and I do believe that's going to be the scourge of this rate cycle, because I do believe there's greater inflation, and companies are having a much more challenging time passing that along to consumers. We're seeing it across the board.
There's a lot to unpack there. One of the things I wanted to unpack was the concentration risk and the AI financing that we've seen both in data centers and the energy transition. There's a quote in the last year that's just stuck with me for the last 12 months, and it came from the Alphabet CEO, that the bigger risk is underinvesting and not over-investing. And that just sounded like a commitment to over-investing. Now, I'd want to understand how your industry avoids a massive misallocation of resources at a time when everyone is chasing the same story.
Well, it still feels like you have a bug in our investment committee rooms. I mean, I've been talking the last 6 months about the cycles of dark fiber in the late 90s, of shale, you know, in the early teens, 12 to 16, and certainly enterprise software the last 5 years. And you have to be concerned as an investor today, are you taking equity risk for a fixed rate of return? That's the ultimate sort of bubble, if you would. And I don't think that the true economics, certainly consumers, industry, the economy is going to benefit, but not all industries as they evolved was it a great investor to be an investor. The cell phone industry is a great example. Only in the last decade has it become a good investment for companies to invest. So I don't have the answer to that one. It's a question we're asking ourselves. Now we find ourselves both on the debt and the equity side of funding a lot of the data center activity, but there's a tremendous amount needed, and there's a voracious appetite. But I certainly understand what the Alphabet executive was saying.
Do you think there's a bit of a duration mismatch between how long it takes to build a data center and how long it takes to build the energy infrastructure to enable it? And could that be problematic in the future?
There certainly is. We have spent more time. The energy supply issue could be a governor to growth. And that's a challenge that we've not seen yet, but if you pencil out the numbers, that could be a concern. But I think the bigger question is back to the first one we asked is, these are 10, 20, 30-year infrastructure builds. Who really, with our marketplace going towards indexes and ETFs and multi-pod shops that are all thinking about, moment-to-moment liquidity, the era of the long investor, it's a question mark. Who is that long investor? And we would say it's the retirees of tomorrow. Every day, 12,000 folks in the U.S., hit 65. And the West, broadly speaking, and other countries around the world have not done a great job with retirees. And so the ability to thoughtfully introduce long-duration infrastructure, inflation hedge assets into these portfolios. In the UK, they call it matching adjustment for insurance assets. Those are really where the growth of our business is going to go, and that's going to benefit investors.
This makes a lot of sense, particularly if you're investing for retirement. You don't need daily liquidity. That's just logical. I think where the criticism is coming from for your industry at the moment is that family offices are already doing a lot of this. I think you and the team have talked about that a ton. High net worth individuals are doing the same. You're now going after retail. And then people start to feel a little bit uncomfortable with that. Are you looking for a new bag holder? Are we looking for someone else to pick up the pieces? What's the response from you and the team to address that head on?
I think it's all about doing it in a methodical, logical, diverse way. This is all about the proper amounts and the proper diversity. Certainly, we would never advocate for someone taking an outsized portfolio of their retirement and putting it all into alternatives. But clearly, over the last 30 to 40 years, history has shown us that an allocation to alternatives, 10 to 20% of a portfolio, increases returns and brings down volatility. And so from our perspective, there's a variety of areas in the world of credit in particular, the world of infrastructure, the world of secondaries that are more yield-oriented, compounding type of vehicles. And certainly we have a view that private equity, while a very attractive asset class, even in returns over the next decade, mid to high teens, that should be done in appropriate doses. So it's all about diversity and proper portfolio allocation.
We've got no bugs in the boardroom, don't worry. Jim, it's good to see you. You're going to stay with us. Jim Zalta of Apollo, perhaps. Perhaps not. All right, let's get you an update on stories. We don't. Elsewhere this morning, with your Bloomberg Brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you so much. French President Emmanuel Macron has named Sébastien Lecornu to be the country's new prime minister. Lecornu, a defense minister, will become the country's 5th prime minister in 2 years. The last 2 premiers were ousted after trying to pass budgets that would sharply reduce France's deficit, the widest in the euro area. A judge has temporarily blocked President Trump's effort to remove Lisa Cook from her position as a Fed governor. The ruling allows Cook to remain in her post while she challenges the White House's attempt to oust her over allegations of mortgage fraud. The judge found the alleged misconduct likely does not amount to cause for her removal. Top lawmakers are opposing President Trump's proposal to fund the government through January 31st. The pushback increases the risk of an October 1st government shutdown. The White House's plan calls for a series of changes to funding levels and is more than 2 months longer than lawmakers on both sides initially wanted. And that's your Bloomberg Brief. John.
Vonnie, thank you. Up next on the programme, fast-tracking a tariff review.
I'm confident the Supreme Court's going to go with us. We do have a fallback position. It's more cumbersome, and I think it limits the president's hands to do these great deals.
Up next on the program, we'll have more from Jim Zelter of Apollo, live from New York City this morning. Good morning.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Live from New York, equity futures positive by a third of 1%. The economic data 1 hour at 11 minutes away. Futures up across the board. On the Nasdaq at least. On the Nasdaq up by 0.2. Small caps, some massive underperformance as we closed out summer. Some underperformance this morning. We're down by about a third of 1%. Summer, by the way, just for the record, continues.
I know. You're going to say that
September
21st.
Holding on
it's
to that.
absolutely ridiculous. And you're wearing black, so I don't see you wearing a white suit.
This is all year. It's not seasonal, okay? Under surveillance this morning. You know that. Fast tracking a tariff review.
We do have a fallback position. It's more cumbersome, and I think it limits the president's hands to do these great deals. What a tragedy it would be to be overruled on this. I think courts are very reluctant to overrule a president's signature policy.
So here's the latest this morning. The Supreme Court fast-tracking a challenge to President Trump's global tariffs. The court agreeing to hear arguments in the first week of November.
So that's music to the ears of this administration, especially the Treasury Secretary, who has talked about the fact that actually this is infringing on how they are negotiating right now with some partners. As he said, this is one of the president's signature economic policy proposals. And the Supreme Court is going to decide, Jonathan, whether or not they're legal or not. And what they want to see is that they want to know as soon as possible. They don't want to be at the very end of the court's term next summer. So we're going to start that hearing about this at the Supreme Court in November, so it is a very fast track for the administration.
Jim Zelter, the president of Apollo Global Management, still with us. Jim, let's continue this conversation. At the start of the year, you talked about macro paralysis. This story is continuing. It just feels like this market, public markets, have moved on. Have you and the team moved on?
Yes, I think if you landed from Mars today and you had not had the benefit of the last 6 months, the idea of the death of U.S. exceptionalism would not be on your radar screen, and you'd have 4 or 5 things. You'd say massive CapEx cycle in front of us. You'd say administration pro-business and determined to cut rates. You'd say that the last quarter's public numbers in terms of equities and credit have been strong. And you'd say there's a big M&A pipeline, and we're on record to have the second biggest M&A year versus 21. So all those things would point to invest. Rates are going lower, spreads are going to stay tight, and I can give butts to all of those, but that's the trend going on right now. And the idea that investors were going to, boycott the U.S. FDI has been massively strong in the last 4 or 5 months, and knock wood, we've had a very strong year across our public and our private businesses. A lot of origination. This week we led a very large transaction for RWE, which is exactly what we're talking about big private solutions, energy transmission, a very exciting business. It's a blockbuster business, one we would never have talked about years ago, but they have billions upon billions of needs to restructure the transmission system in Germany. So the markets are, the animal spirits are back. There are lots of little hiccups out there, and whether it's instability or valuations or other headaches. But yes, active market. We've been active in the U.S. and Europe dramatically this year, and the pipeline is quite strong.
Have you found the need to hedge from the U.S. a little bit more, given the fact that there is this policy uncertainty, but more so this question around the Fed cutting rates, allowing inflation to run hot, and a depreciation of the dollar?
Mm-hmm. Certainly there's been a lot more hedging of investments from overseas investors. And certainly, we typically, because most of our liabilities are into dollars, we will hedge back to the dollar as well. But we certainly want to have exposure to other economies in addition to the U.S. because of the concern about inflation.
Do you think this is a real deal in Europe? I get the feeling you do.
Well, there was an interesting article I read this morning that a year after the Draghi report, like 11% of the proposals have been put in place. So I think companies I see corporate leadership in a variety of sectors, and I see a few government leaders, passionately pursuing this, but I think the overall pace is not what it should be. And the paralysis of the broad government oversight in Europe is holding the progress back. So it's not as fast as we would like it, but it's a train we want to be on.
What would be an easy change to make that train go faster?
They've pushed for a variety of relaxation of some of the securitization rules. Basically a Solvency II balance sheet for an insurer in Europe. You have to own almost 65 to 70% of your assets need to be sovereign bonds. That's just too large an amount, and it's very, very challenging and difficult to purchase and to hold securitized product, asset-based securities, which have proven to be a very good tool for insurance companies and other financial services firms in the U.S. It's good for dispersing risk, and it's good for versus corporate purchases. So I think something like that, securitized products, would be a very easy and important move to make.
I think, sadly, many of us just conditioned by experience, conditioned to be disappointed by Europe.
Are we allowed to be disappointed? I keep thinking about what Howard Marks said after they announced the regime of tariffs. And he said, the U.S. is still the best place to invest, but it's less of a best place to invest. And so you start looking at other places and saying, yeah, there's hair on this, they're not going to get their act together, but at least there's some investment and we might as well diversify. And I wonder how much that's driving people to like what they're seeing, even when there still is a lot of skepticism.
Jim?
I would say they've looked around, they still come back to the U.S. Strongest, largest, deepest market in the world, greatest economy, rule of law, unbelievable banking system, creativity, intellectual capital. It's the place to invest.
That
He's running.
Sounded like a politician's speech, didn't it?
Yeah, maybe for mayor.
Yeah?
He's still diversifying.
Run, Jim. Jim Zelter of Apollo. Jim, thank you, sir. You don't want anything to do with that. Up next, a man who will want to engage on that topic, Congressman French Hill, as Fed Governor Lisa Cook keeps her job for now. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about. All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Economic data about 60 minutes away. Equity futures positive here by 1/3% on the S&P. On the Nasdaq 100 up by 1/4. In the bond market, 2-year, 10-year and 30-year bond yields settling down. We're down about a basis point at the front end to 3.55. But check this out in Europe. Italy versus France. 3.48 on French debt. 3.48 on Italian debt. The convergence. If you go back to the Eurozone debt crisis, this was 4 percentage points. That was the spread between the two, Italy trading over France, and now these two trading right in line with each other. Do you remember that line about hard men making easy times? Hard markets make tough leaders. Tough leaders make easy times. Easy markets make weak leaders. Weak leaders make hard times. That's the situation in Europe over the last 10 years.
That's pure poetry, John. It just rolled off the tongue. I mean, there's this question here of whether France has what it needs to pull its act together at a time when their borrowing costs actually exceeded Italy's for a brief second yesterday, and some people are saying it's because of a roll and these technicalities. Nonetheless, the reality is stark for France, and right now there are protests that are gearing up across Paris to protest some of the cutbacks from Bayrou, who already is out as prime minister. So a very difficult moment to really understand exactly what the political response mechanism is going to be.
Yeah, I think the thing I'd like to emphasise this morning is less of what's going on in France and more of what's happened in Italy, in Greece. They went through the hard times. The leaders had to make the tough decisions. That's why things are so much easier now compared to, say, France. France had problems 10 years ago and the markets gave them a pass, and guess what leaders became? Weak. Didn't do enough to address the issues. Where are we 10 years later? Big problems. That's the issue we've got at play now.
So you're going to invest 10 years out in France because you think that they're going to get their act together and take the lessons of Italy and Greece?
I don't know if we're at the point where markets are hard enough to make leaders strong enough to make the kind of decisions we need to make times easier.
You know, it's a good point. It's what a lot of people are wondering. This game of chicken between markets and politicians. And at what point is the pain in bond markets enough to spur some sort of action? And it seems like, based on the protests, some of the ramifications, not there yet.
That was enough of that. It's on the edge of Joe Rogan, wasn't it? Okay. French yields this morning up by a basis point or so to 3.48. 2 hours away from the opening bell. Let's get you some morning movers with Yahara. Hey, Yahara.
Hi, John. With this massive rise in Oracle shares, up more than 30% in the pre-market, it is set to add about $200 billion to its market cap. That would mean it would be the 10th most valuable member of the S&P 500, and that is all thanks to a very bullish outlook from this company. Its booked revenue is up 359% from the same time a year ago, climbing to $455 billion in the latest quarter, and that is thanks to massive cloud deals with the likes of NVIDIA, TikTok, and OpenAI, just underscoring the strong demand for compute power. And we stick with tech, but this stock is moving in the other direction. Synopsys is down 23% as U.S. export restrictions weigh on its China business. No surprise there. That is because this is a company that provides tools to design advanced semiconductors, putting them squarely in the crosshairs of Washington's efforts to curb China's access. And those measures have been on and off again, creating uncertainty for this company and its customers. And we end on the original meme stock, GameStop, up nearly 11% after reporting a big jump in sales, more than 20% compared to the same time last year. And that was thanks to a boom in hardware sales, because during this time was when the Nintendo Switch 2 came out. And as we all know, that flew off the shelves. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, some of our top stories. President Donald Trump asking the EU to impose 100% tariffs on China and India in order to push Russia into negotiations with Ukraine. The White House saying it will match any tariffs imposed by the EU on the two countries. Elsewhere, the Senate Banking Committee voting today on Stephen Murren's nomination for Federal Reserve Governor. The move likely setting him up to be confirmed before next week's FOMC meeting. And finally, Apple shares slipping after the unveiling of the new iPhone 17 at its annual event. In a key change, the company swapping out the iPhone Plus for the iPhone Air, which Apple says is its thinnest ever.
Some of the commentary from the likes of Samsung and Google were savage. That's all I can say. The advertising, the counter-advertising, if that's it, that's all you've got. What I thought was the most interesting is that prices didn't go up on any of these products except for the highest end. What this highlights to me is an awareness of a pushing back in price, even as they have their heroin chic phones, their really ultra skinny phones that are the iPhones 17. Some positive reviews, some questions around battery life. The bigger question is, this wasn't a big enough innovation to really turn the dial.
What was the innovation? Cosmic orange iPhone. It's a little bit thinner, has a better battery life, which every single iPhone that comes out should have a better battery life. I mean, does this really make you want to go line up and get a new iPhone?
This is not a moment for hardware, is it? This is meant to be the moment for software. Address the issues, and you're not seeing the incremental developments that people want to see in order for them to upgrade. We'll catch up with Dan Ives later this morning. Dan's been talking about a super cycle of upgrades for years now, and we haven't seen it.
Yeah, and the question is, can they innovate at the WWDC, the developer conference, to really put forward something like a phone or a robot, like we were talking about yesterday? Because is it still the phone that is the device, that is the hardware that's really going to turn the dial? They also were putting out there some Apple Watches that have better tracking devices for your sleep and other things that some of us neglect.
I like the headphones. Do you see what the headphones can do? Real-time translation. You speak back, and then you get the translation on the phone for the person you're talking to when you're abroad. I thought that was pretty cool.
Do you think that we're ever going to learn language, or that our kids are going to learn language in school, or do you think that they're just going to be able to translate it?
I thought about that yesterday. I was just looking at this playing out, and I just thought it's slicker if you walk into, I think the video was from a florist. Did you see this video?
Yeah.
I think she walks into a florist. Isn't it slicker and just smoother just to be able to speak the language?
Yeah, very much
Instead of holding up a phone with the text coming up.
Yeah, although I've been in situations where that would...
Unless they have the headphones too.
Oh, and then everyone just...
and we just walk around with those.
Again,
we just become robots.
Yeah, with white AirPods in our ears. OK, let's turn back to Washington. Federal Reserve Governor Lisa Cook staying on the job after a judge temporarily blocked President Trump from removing her. Congressman French Hill, chairman of the House Financial Committee on Financial Services, joins us now for more. Congressman Hill, welcome to the programme, sir. I've got a lot to get through, and I just wanted to start with the independence of the Federal Reserve and the role that your committee's got to play as this spat continues to build down in Washington.
Well, good morning, Jonathan. Great to be with you. As you know, I've spoken out many times about the importance of the independence of the Fed, and so has my colleague across the Capitol, Tim Scott, the chairman of the Senate Banking Committee. But because we fully support Fed independence doesn't mean the Fed's immune from criticism. And every president in my adult life has been very vocal about criticizing the Fed at one time or another. So I don't think Fed independence is in question.
When it comes to what could actually happen in terms of financial stability, we have Fed Governor Lisa Cook's lawyer saying that the president was unlawful in removing Governor Cook and said its vague allegations would endanger the stability of our financial system and undermine the rule of law. Do you agree with that assessment?
Well, I think there's some hyperbole in there. Lisa Cook has been accused of effectively mortgage fraud. Those are significant allegations for someone who is a financial regulator, but I think they need to be adjudicated. I mean, she needs her due process, her day in court to prove that, in fact, that's not the case. And I think that's underway right now, and that's, again, something I've said in recent days.
Do you think the president should have waited for the courts to play out in terms of this investigation for these allegations to actually become charges and a conviction to then take up this idea to fire her for cause?
Look, the president's entitled to his own opinion. He has access to the facts that probably I don't, so he's made his decision about it. But my judgment is that's a serious allegation, and if true, it's certainly potentially a disqualifying allegation and charge for someone who's involved, very much intimately involved in the federal regulatory process.
Taking a step back, though, do you agree with the Treasury Secretary on resetting the Fed's mission?
Well, you know, I've believed that for a long time. I believe the Fed should have a single mandate, which is price stability. The biggest, most punishing tax on the American people, our citizens, is inflation. And inflation's caused by too much money chasing too few goods, and we've had a dramatic example of that by Fed policy during the pandemic and the Biden administration's fiscal policy in combination. Very punishing, 40-year highs in inflation. So I believe we need fewer mandates, and I think we need that monetary policy focused on price stability. A financial regulation and supervision, and to make sure that we're also taking steps to make sure our Treasury security market is resilient. All this work is led by Frank Lucas of Oklahoma, and we're deep in that process. So I think taking a strong look at the Fed's monetary policy and their governance, it's an important factor, and I agree with the Treasury Secretary on that.
Well, inflation has not been below 2% for more than 4 years at this point, and we're still talking about 50 basis point rate cuts, maybe 75 basis points of rate cuts this year. Do you think that that's premature? If this should be a single mandate Federal Reserve that looks solely on inflation?
Well, I think this is the tough decision they have coming up, and we've seen a softness in the economy during the whole year in terms of consumers' ability to purchase, the jobs reports that we've gotten. This is why the Fed chairman, I think, consistently has said, let's look at the data, look at our data assessment and the forecasts associated with it, and also make our own judgment about whether we're at the neutral rate for pricing, because we don't want to see the economy stall out and then go into stagflation, particularly when you're right about inflation getting close to 2 but not below 2 and not right at 2. But when you look at inflation expectations, they seem to be more closely anchored at 2, and that should give the Fed some confidence as they entertain their decision in the next few days.
Chair Hill, I know you and your colleagues almost just recently got back from summer recess, but October 1st is fast approaching, and the Trump administration is weighing and pushing for this idea for a stopgap funding measure to keep the government open through January 31st. Would you be on board with that?
Well, we're talking about it among ourselves and obviously with our friends in the Senate. We've each passed 3 appropriations bills in the Senate and the House. I think it would be great to go to conference on those bills and then pursue, get those enacted into law, and then pursue a CR that's a shorter term CR would be my advice for consideration, so that we can get this work done. We're very close. Both the House and Senate are processing these bills. We have the Republicans in charge of the House and the Senate and the White House, so we ought to get together, find our top line number, and get our work done this year.
Congressman, before you go, the important stuff, Arkansas football. Razorbacks getting it done this year?
Really enjoyed watching the quarterback come and have his great game against Arkansas State. This was the first time in Arkansas history that Arkansas State played the University of Arkansas in Little Rock at the famous 1949 War Memorial Stadium. It was a fantastic day. He looks pretty good. We play Ole Miss this weekend, so that'll be the first SEC game, and that's where the rubber hits the road.
Saturday, 7 p.m. Looking forward to it, sir. Thanks for being here. Congressman French Hill.
You still need to come to a Razorback game.
I've got to make it happen. I know. This year it's got to happen. Thank you, sir. SEC football.
All the best.
Thank you. Appreciate it. Got to make a game happen this year. Team trip. I'm not going to do like the team cruise we've talked about a million times. I will do a trip down to some kind of SEC football game before the year is out.
So you'll be there. I'll go to Bentonville.
It's got to be Arkansas.
Arkansas or Ole Miss this weekend.
I could see you there. I feel like you have like sort of a southern sort of undertone. I could see this.
Possibly. I think I relate to that. I think it's probably the closest thing in this country to European football.
Oh, because of the small kind of
SEC
natures,
football,
yeah.
totally.
Yeah,
The connection with your team.
Yeah, that's what you do on the weekends.
I can't connect with the NFL at all. Just the idea a franchise can move from city to city, state to state, just doesn't speak to me.
The fact that the New York team actually plays in New Jersey bothers you?
Yeah, I just can't get my head around that. All right, let's get you an update on stories elsewhere this morning before I offend someone else. With your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. President Donald Trump said he is very unhappy about Israel's strike on Hamas targets in Doha. Trump said he learned of the attack too late to stop it. The president spoke with both Israel Prime Minister Benjamin Netanyahu and Qatari leaders after the strike and assured Qatar that such an attack would not happen again. JP Morgan and Barclays among banks bracing for potentially hundreds of millions of dollars in combined losses from loans tied to subprime auto lender Tricolor. Sources telling us here at Bloomberg the banks are warehouse lenders for Tricolor and are looking into whether the collateral for the lines was double pledged. Novo Nordisk will cut some 9,000 jobs globally, 11% of its workforce, after slashing its profit forecast for the third time this year. This as it fights to recover lost market share from Eli Lilly in the obesity drug market. The pharma giant plans to save $1.3 billion by the end of next year and to reinvest in new drug development and sales. And that's your Bloomberg brief. John.
Vonnie, thank you. More from Vonnie in the next hour, about 30 minutes away. Up next, phantom inflation.
They're kind of worried about like the phantom inflation expectation story or, you know, the threat of potential inflation coming from tariffs. I mean, I think those are really secondary considerations at this point, given what we're seeing in the jobs market.
In just a moment, we'll catch up with Lotfi Karui of Goldman Sachs from New York City this morning. Good morning. You're watching Bloomberg TV.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, you know, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., you know, really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be you know, the next stage of growth for these markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing
you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhodern in Buenos Aires, Argentina, and this is Bloomberg.
Session highs on the S&P 500 up a third of 1%. Likewise on the Nasdaq 100 this morning, coming into Wednesday at record highs. Up a third on the S&P, up a third on the Nasdaq. Under surveillance this morning as we count down to PPI and CPI phantom inflation.
They're kind of worried about like the phantom inflation expectation story, or, you know, the threat of potential inflation coming from tariffs. I mean, I think those are really secondary considerations at this point, given what we're seeing in the jobs market. So to me, I think the risk is that the Fed ultimately won't deliver as much as they should, and that kind of reinforces the slowing that we've already seen.
So here's the latest this morning. Investors looking ahead to a double dose of inflation data due out in the next 24 hours, with just 1 week to go until the Fed's next decision. Lotfi Karui of Goldman Sachs joins us around the table for more. Lotfi, good morning.
Good morning.
Got a lot to talk about in your world in credit markets and broader fixed income. Let's just start with the Federal Reserve a week away. Neil Dutta of RenMac called the inflation phantom inflation. He wants this Fed to lean into the weakness in the labour market. Where are you and the team at?
Yes, I think that would be our view too, which is that reaction function is definitely more tilted towards the weakness in the labor market as opposed to potential upside, risks from inflation. I think 25 basis points is pretty much a done deal at this point. We expect them to follow suit with another 2 hikes in October and December, and then 2 more in 2026. Now, a lot of that is in the price. And so I would say relative to the last 6 months, the risk reward in that front end of the curve feels probably the most balanced to me at the moment.
Do you think that what you're seeing in the individual companies that you invest in, the sort of credit aspect of this, verify the weakness that we see in some of the numbers about the labor market, about the underlying economy?
To some extent, yes, but not a lot, to be honest with you. I think whether you talk to investors or corporate issuers, the message that you're getting is that we're happy or we're comfortable with this weak but not too weak equilibrium, so long as it comes with monetary easing, so long as we remain far away from the recession threshold. And then you have some of the offsetting tailwinds kicking in later into the year, and that's really expansionary fiscal policy and deregulation. And so most folks are actually willing to look through the current weakness and sort of, focus on 2026. And I think that's the right approach, because you will see a growth acceleration in 2026.
Does this justify how tight spreads are, how much people are buying credit with the hope of that reacceleration?
Yeah. I mean, look, credit, generically, credit is an anti-recession asset class. When you buy credit, you're owning a put. And so you're a lot more sensitive to downside risk than upside risk. I think the comfort that everyone has is that you're still far away from that recession threshold. And so, yes, to some extent, it is justified in my view.
When you talk about deregulation and the fiscal input coming from Washington, where exactly do you see that?
Well, I mean, on the fiscal side, you got, tax policy is going to turn expansionary.
But is this really an extension of policy, isn't it? What's new?
To a large extent, yes, but you do have a little bit of a growth impulse. And then, look, growth has slowed down this year, too. And so the starting level is actually lower than 2024. I think, we're sort of oscillating around 1.5% here. We will probably, revert back to trend growth in 2026.
Coming into 2025, I still remember your outlook. And you talked about the valuation proposition in credit being some of the worst you've seen for years and years and years. And as we sit here today, spreads just got tighter and tighter and tighter. Are you scratching your head at all about what you've seen so far?
No, I think, look, we've been range bound. The range, if I take the investment grade Bloomberg index as an example, the range has been 75 to 90 basis points. I still think that the risk of a valuation melt up, which is something that you increasingly hear, so spreads going to literally uncharted territory, is very, very low in credit. If anything, you should see some M&A supply kicking in the next, couple months. So from a technical standpoint, it won't feel as imbalanced as it is today. But I still feel pretty good about that. I think, look, as a spread investor, you have to be cognizant that valuations are not great.
So the trajectory of benchmark rates seems to be heading downward. We are going to get some Fed easing. The bigger question for a lot of investors, and Jim Zelter of Apollo was on just earlier, saying he's concerned about inflation. And he thinks over the longer term, if you cut now at a time where there still is enough resilience and potentially some of the impulse that are coming through later this year and early next, you could get a really sticky inflation. How much is that a risk scenario to what you're just putting out there?
It's always a risk. I mean, our baseline view is that tariffs, in the end, are sort of a price level effect. So, think of them as like a VAT, transitory. I know, that's sort of a... But more importantly, we don't think that will translate into structurally higher inflation expectations. But of course, you cannot rule out that risk. I think the Fed has gotten to that same view too. It's really less about spot inflation, which will mechanically increase on the back of tariffs, and more about inflation expectations. And at the moment, those will remain anchored. I think that's the view.
There's also been a big debate about the U.S. versus Europe, and that's something that we were talking about with Jim, the idea that the U.S. is still the cleanest shirt in a dirty laundry bin. I'm rolling my eyes because everybody says these cliches. But at the same time, you might want to increase your exposure to Europe just by virtue of having that additional hedge. Do you think that's gone too far, especially with the political instability?
You're seeing it in the data. I think there's no question that the marginal dollar, and I would emphasize that this is about the marginal dollar. So the new dollar that you're allocating is getting allocated in a more balanced way. And we see it on the private side. If you look at the data, Europe is definitely attracting more capital. Would I go as far as saying that we're on the verge of a massive rotation away from the U.S. back into Europe? Probably not. I'll give you a very concrete example. Look at leveraged finance markets. In the U.S., it's $4.5 trillion. If you add up high yield bonds, broadly syndicated loans, private credit, in Europe, it barely exceeds $1 trillion. So in terms of size, in terms of depth, in terms of fragmentation, I do think that the U.S. still scores way better than Europe.
Lisa's talking about sources of demand. Can we talk about sources of supply and some of the issuance shifting over to Europe? What are they called, reverse Yankees?
Yeah.
What's going on with that kind of debt issuance?
There's a variety of narratives that you're probably hearing. To me, the biggest driver of that surge in reverse Yankee issuance is really the willingness of large multinational corporations to diversify their currency mix, full stop. I don't think it's about sort of the yield differential between the two. A lot of these companies actually do have a big chunk of their revenues that come from the euro area. You're just looking for ways to diversify a little bit, and I think that's what's happening. But, reverse Yankee issuance is on a record high pace at the moment.
It's unbelievable, the amount of supply we've seen from US issuers over in Europe.
Yeah, and what Latvia is saying is it's more of a currency hedge than it is anything else, which is really interesting. The idea that if you're selling into a continent, you might as well keep the currency the same, especially given the dollar weakening trend.
Seen some serious weakness. Euro dollar back up at 117 this morning.
Are we on 120 watch? That's what I keep wondering.
We've been on 120 watch consistently. The ECB pushed back against that. Have you noticed that? And since then, it's kind of been like this ceiling for that currency pair.
Yeah, whether they continue actually mentioning it. They never mention the currency until it hits close to that 120 mark, and then they start getting yippy. I think that the interesting thing to me is at what point do people stop traveling to Europe because of the currency?
I think that's the interesting thing exclusively to you. I think that feels very, very personal.
I'm just wondering, at what point does that affect the supply-demand dynamic when it comes to tourism?
Serious issues. Let's book a guest. Let's make it happen. Lotfi, it's good to see you. Thank you, sir. Lotfi Karui of Goldman Sachs. I'm right there with you.
Yeah, come on, you think about that. Other people do too.
The hard-hitting journalism
100%.
For the summer of 2026. Coming up next, Deepak Puri of Deutsche Bank, Dan Ives of Wedbush, Seth Carpenter of Morgan Stanley, Lisa Hornby of Schroders. The economic data in America, 34 minutes away.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse. The philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress. I changed during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being. of the world.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
There's a huge difference between what's going on Main Street and what's happening on Wall Street.
The general health of the economy, it's broken down.
We're expecting a prolonged period of elevated inflation.
We have an eye on the inflation data, but the one data point is not going to, I think, derail the path.
I don't think inflation is getting away from the Fed, which is why I think they should be focusing more on the growth side of the economy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. A two-day winning run on the S&P 500, 5 days on the NASDAQ. Futures up again by a third of 1%. In the bond market, 2s, 10s, and 30s. Two-year bond yields very close to the lows of the year. Just north of 350 this morning at 354.79. Yields down a single basis point. We are 30 minutes away from the economic data. The next stop for the big economic debate, PPI at 8:30 Eastern Time.
Does it matter? I think that is the key question. How high does that number have to be for it to matter at a time where there seems to be an inflation independent, to an extent, Federal Reserve that is squarely focused on the labor market? Yesterday's labor market revisions only underscored the sense that there is enough of a weakening in the employment sphere that they really can look past some short-term inflation.
The decision is a week away, a week today, and this is what the Treasury Secretary Scott Bessent's got to say about it. If the Fed is data dependent and the data is bad, make-up rate cuts are needed. 25's not going to cut it. The administration wants more than that.
They want more than that because they're looking at these revisions and they're saying if the Fed had this type of data earlier, they would have been cutting sooner. So they should be making up for the lost time. When the facts change, I change my mind. That's what the Treasury Secretary said yesterday on Fox News. All of this, though, is going to be so much more interesting, I think, as the personnel. We're going to have Stephen Myron potentially today clearing a key Senate hurdle. Lisa Cook, a judge last night, said she could stay at her job. Are they going to be there to vote? And likely they're going to be doves. So they're going to be voting for a rate cut. But whether or not it's 25 or 50, that remains to be seen.
If we do have a Governor Myron walking into that meeting next week, he can ask a very simple question. If we knew then what we know now about payrolls growth, where would rates be? Would they be lower than they are now? And the answer for a lot of people might well be yes. Which raises the question, I think, about 25 or 50. I think some people will be pushing that issue at next week's meeting.
If Stephen Myron is there, he certainly will. Will Chris Waller? That will be an interesting question. Will Mickey Bowman, another potential contender to become the next Fed chair? Will the market start to price this in? And at what point do we worry about inflation once more? I mean, really, again, we're talking about this all ahead of PPI coming out today, a question of how much we have the ability to, or for companies have the ability to pass along price increases, and then CPI, how much consumers are eating it. Tomorrow, these are going to be important linchpins to understand the longer-term trajectory for the Federal Reserve.
Shouldn't change the conversation. Not because I believe it shouldn't change the conversation. Shouldn't change the conversation because of the way the chairman has laid out the reaction function of the Federal Reserve at Jackson Hole. When you come out and say this is basically going to be a one-off but not all at once, you're basically saying even if we get hot prints between now and year end, that's not going to stop me from maintaining a focus on the labour market.
Yeah, and this is a reason why a lot of people are seeing a Fed cutting rates and are believing what the Fed is saying, and they're not necessarily selling long-term treasuries. That's one thing that has given a lot of people confidence. My question is, what is the reaction function next week from the markets to any kind of outsized rate cut or an indication that they're going to continue to cut? Because ultimately, it's fine if Fed Chair Jay Powell says it. Does the market endorse this idea of a one-time kind of price adjustment?
At the moment, just about. 30-year bond yields backing away from 5% over the previous 2 weeks. We're back down to about 4.73. Coming up this hour, Deepak Puri of Deutsche Bank as stocks trade at all-time highs. We'll speak to Dan Ives of Wedbush as Apple falls following its new iPhone unveiling, and Seth Carpenter of Morgan Stanley as we break down the latest inflation data. We begin this hour with stocks steady as traders await a key week of economic data. Deepak Puri of Deutsche Bank writing the following. Given signs of a weakening labour market and a moderating economic outlook, we expect 5 cuts until September 2026. Deepak joins us now for more. Deepak, good morning.
Good morning.
Good to see you, sir. How quickly do we get that kind of move? Do you think it's 5 cuts spread out evenly, or could they just move, say, 50 right now? Let's go.
I think the bar for a 50 right now is pretty high. So I would be more inclined to say it's a bit more spread out, maybe 2 to 3 rate cuts for the rest of the year, and then 1 cut per quarter for 2026. This is going to September 2026. And the reason I say the bar is pretty high for 50 basis point, because, you know, we cannot be focused too much on a lagged release on the labor markets, which is a lagging indicator to begin with. So I think the markets are not going to be focused too much. Yes, from a Federal Reserve perspective, maybe it's going to have a lot more discussion, and that'll be, you know, available to us when the minutes are released.
Sure.
But I think in the near term, I still believe, given the inflation backdrop, the fact that the assessment of where the tariff rates are going to hit, and really base upon what would be the impact of the pass-through of those tariffs on inflation, it's still a little bit TBD. So I think it'll be pretty much premature to start cutting aggressively at this point.
If we hadn't had Jackson Hole, I think a lot of people would agree with you. But the language that the chairman used with regards to inflation has got a lot of people thinking that he's just going to ignore those hot prints. Is that the wrong interpretation of what we heard in that speech?
I would tend to agree with that. I think what Jay Powell said in Jackson Hole is saying, yes, we are eliminating average inflation target. It's now an inflation target of 2%. Having said that, inflation is still the mechanism for full employment. You have to look at full employment through the prism, through the lens of inflation. So first and foremost, yes, for the time being, if you're looking at, you know, the federal dual policy mandate, maybe labor markets are gaining more credence. But overall, it hasn't really said that inflation is not going to be part of this analysis. I feel the markets may be, you know, overestimating the dovishness of that speech.
If the Fed does cut 5 times by September, does that essentially underwrite risk assets?
To a large extent, yes. But we have been saying that don't fear the pause, fear the cuts. And the reason we are saying that, Lisa, is because when the Fed starts to cut rates, a lot depends on why they are cutting rates. Are they cutting rates to tame inflation, or are they cutting rates because they feel that the labor markets are declining so rapidly that it's going to start having an impact on overall economic activity? And I think that sort of analysis is to be determined in the sense that for the time being, it sees that the labor market is gaining more momentum in their thinking. If that remains somewhat muted, meaning the second half of the year is the economic activity is somewhat of a soft landing, let's say, before it reaccelerates in 2026, I think you'd see a bid up in risky assets. And not only that's one of the reasons, there are 3 or 4 other reasons why I feel, stocks and risky assets could do well. You look at the capex spending, you look at the earnings growth, the strength of the balance sheet of both households and corporations, plus the fact that eventually you're going to see this rate cut regime. All these talk about a positive risk scenario. So you don't want to be overly bearish at this point in the cycle.
Based on what you're describing, it raises the question, can you have your cake and eat it too, right? I mean, can you have bonds rallying at the same time that stocks are rallying on the heels of Fed rate cuts, or do you essentially get stocks doing well, sell the long end, and by God, do not hold any dollars?
Yeah, I mean, that has been the case. If you look at the last 15 years, there have been a lot of time frames where both bonds and stocks have rallied. Those correlations that we used to have, there has been a breakdown. And you can also see it in 2022, where both stocks and bonds really fared miserably. So I think that stocks rallying means that the bonds couldn't rally is probably a misnomer at this point. We have seen the evidence to the contrary.
How uncomfortable is it, given the picture Lisa's talking about, with the fact that we are really in a weakening labor market? Going back to May, it's sub 30,000 jobs added to this economy a month on average.
Yeah, I think that's one point of the labor markets that is a bit more, concerning. But if you look at a lot of others, look at the initial claims data, the high frequency data on labor market, that is still not, at least to me, telling that the labor market's in a perpetual decline here. I think we need to take into account that post-pandemic, the data is noisy with regards to labor markets. So I'm not saying labor markets are not they're not as strong as they used to be, but they're definitely not suggesting to me that we are in a recession or in an imminent recession, whereby, to our earlier conversation, the Fed needs to step in aggressively.
So then why is the Fed cutting if inflation is still above their 2% target?
Well, they have to do a preemptive insurance rate cut, because even though what they don't know is the trajectory of what the impact of labor market softness is going to be on consumption. And I think that's the linkage that they're trying to, give the market some sense of relief and comfort that we are there. We don't want, yes, we would like to tame the inflation, but for the timing, our focus is directly on the labor markets.
12-month price target, 6,800 on the S&P?
That's correct.
That's very small upside. Indeed. With about 125 basis points of rate cuts. Why is that move not sufficient enough to generate more returns in equities?
Well, the sentiment positioning, the fact that we're looking at a valuation level that's above 23 times, so the argument that earnings can only pull the stock market up to a certain level. You also need a PE expansion, and that's difficult to see at these levels. So I think you want to be at least positive. As I said earlier, you don't want to be overly bearish, but I don't think it's also a very high conviction with regards to all chips in place. I think any sort of a pullback makes a big case for the markets to go up, and we'll be a buyer at that point.
You've been in this business a long time. Have you ever been as confused as to how to handle an environment as the one we're in right now?
There were confusing times, obviously, 2009, 2011, right around the pandemic. So there have been times that give you conflicting data signals, right? But I'll zoom out and look at the way the stock markets react in a longer time frame. And I think we all know stock markets and real economy are two different things. When I look at the money supply, when I look at the financial conditions, when I look at the strength of corporations, to my earlier points, it's really difficult to be overly bearish. Yes, the real economy, one could argue, half of the households are doing great, maybe the other half are not. But I think the momentum with which the markets are going, the drivers are a lot different than the real economy.
Deepak, it's good to see you.
Likewise.
It's been too long. Come back in soon.
Will do.
Appreciate your time. Thank you. Deepak Puri there of Deutsche Bank. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump told European officials he's willing to impose new tariffs on India and China to push President Putin to negotiate with Ukraine, but only if EU nations do so as well. Other potential measures discussed include further sanctions on Russia's shadow fleet of oil tankers and restrictions on its banks and major oil companies. Poland shot down drones in its airspace during a Russian airstrike on Ukraine. The Polish military calling it a, quote, act of aggression. It's the first time Poland has shot down military aircraft over its airspace since the start of Russia's war on Ukraine. Now, Russia saying just moments ago it is ready for consultation with Poland on the drones. Nepal's Prime Minister resigned on a second day of violent protests in the South Asian nation. The Press Trust of India says KP Sharma Oli stepped down after hundreds of demonstrators stormed his office. The unrest stemmed from a government ban on social media platforms, which has since been lifted. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next on the programme, the Morning Calls Plus. We'll catch up with Dan Ives of Wedbush as Apple falls following its new iPhone unveiling. That conversation up next, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We definitely see more lingering inflation. When's the last time any one of us bought something in the last year and you said, wow, that was cheaper than a year ago? It has not happened. I do believe there's greater inflation, and companies are having a much more challenging time passing that along.
Just a fantastic exchange with Jim Zalta, the president of Apollo Global Management, a little bit early this morning. Catch that full exchange out on Bloomberg.com. And if you are a terminal subscriber, it will be on the terminal a little bit later this morning. Let's get to some of the price action as we count you down to the economic data. 14 minutes away for PPI. Equity futures positive by 1/3%, up 1/3 also on the Nasdaq 100. That's the price action. Let's get you some morning calls. First up, TD Cowen upgrading Nike to buy, citing market share gains and better management execution. Next up, Bank of America upgrading Oracle to buy, saying it's clearly capturing more AI infrastructure share. That stock is absolutely surging. And finally, Evercore raising its price target on Apple to $260, saying its new design could help reinvigorate its user base. Sticking with Apple, its shares falling after its latest product lineup failed to impress investors. Joining us now, Bloomberg's senior tech editor, Dana Wollman. Dana, welcome back to the program. You gave us the preview. Let's have the review. Is this going to invigorate the user base?
I think just, I'm going to be the voice of the consumer here, and also just speaking for what I know about consumer behavior, but I do think that this will be a compelling lineup for consumers heading into the holiday season. Apple really did an end-to-end refresh across its lineup, not just its phones, but also its smartwatches, and kept prices largely in line with last year's models. And I think none of this is lost on the average consumer. I think consumers these days are savvy enough to know that these are not just iterative chip upgrades or processor upgrades. They can tell when the phone looks different or when the watch looks different. And the fact that the prices are the same as last year, I think, will give a lot of people permission to go ahead and maybe take the plunge on the upgrade that they had perhaps been shying away from or holding off on.
You know what the pushback is from investors, Dana? It's not what it looks like, it's what you can do with it. And why we didn't hear enough yesterday on AI and new features and the future. Were you disappointed by that?
I wasn't expecting anything new on AI. Apple does typically sort of bifurcate its updates on software and hardware into distinct events. June is the developers conference, and the fall is typically all about the hardware. And it's really, it would have been really unusual of Apple to unveil a surprise new feature that it hadn't already been testing publicly in public betas for months now. Now that said, we do expect Apple to reveal more in the coming months, perhaps early next year, about its AI strategy and its AI rollout. But we were not expecting any surprise new features that had not previously been announced. The one that we were on the lookout for and that we did get was live language translation in the new AirPods Pro earbuds. But that was it in terms of expected AI features.
Dana, appreciate the update. Thanks for being here. Dana Wollman there of Bloomberg. The stock in the pre-market down by something like 0.7% so far this morning. Let's get the bullish view on things. Dan Ives of Wedbush, 270 price target, outperform rating on shares of Apple. Dan joins us now for more. Dan, good morning.
Great to be here.
You've sat here so many times in September alongside us and talked about the upgrade super cycle. It hasn't happened. Is it about to happen with this, and why?
No, I mean, look, this, and those super cycles we've talked about, I mean, they definitely were disappointing, right? I mean, the reality, I think this is one where street expectations going in are, I think, pretty soft relative to next year. So when you think about on a scale 1-10, this is probably going to be an 8.5. Look, you do have over 300 million that haven't upgraded their iPhone. Is there going to be a huge catalyst here? I think a lot of it's just pent-up demand, especially in China. But the reality is, the elephant in the room, it's AI. And I think that's, when you talk about what's going to truly drive the stock, that's it. And we've talked about it. That right now is front and center.
Before we get there, and we'll find out more, I'm assuming, later this year at the WWDC, there is this signal from the fact that they didn't raise prices on the phone significantly, except for the highest end phone. Does this suggest that they're going to take it more on margin, especially given how much their costs are increasing pretty much across the board?
Yeah, I mean, some small price increase book. I think also the reality, that's why Cook, you know, played nice in the sandbox with Trump, right? Because it's very important in terms of India and China, make sure they do have some exemptions when it comes to the tariffs. But look, the reality is they cannot raise prices significantly at this point, because the last thing you want is churn, other competitive issues. You have a phone that's, you know, definitely an improvement, but nothing that's jaw-dropping. And it all leads, the whole reason you own Apple, it's the install base. I mean, it's all about when they monetize the 1.5 billion iPhones for AI.
Can I just jump in? The install base. For a long time, you've seen that as a source of potential growth. Isn't it about time to start seeing it as a source of potential risk? That you've got this massive install base that hasn't upgraded for a long, long time. Don't we have to start questioning whether they ever will? And whether the real risk here is they might actually go and buy a different phone from someone else?
Look, we've talked about that. That's why we've been so, I think, you know, strong in our view. Like, the clock struck midnight in terms of them needing to now, goes back to AI, because when you talk about monetization and what keeps people in the ecosystem and what really is the golden goose for monetization, it comes down to AI. And the reality is, every Apple event the last few years, I feel like Michael J. Fox Back to the Future, you know, and that's been a big part of the problem relative to the rest of tech when it comes to embracing AI.
The install base is sick of waiting. That is sort of a worry that a lot of people have. And Samsung right now and Google are out there trying to troll everybody who's been waiting for something new and saying, ha, 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 look, ours fold. There's a question about, especially if they're getting a heads up or if they're getting a head start on the AI development, of whether the install base starts to leave. Aren't we starting to see signs of that? Doesn't that worry you?
Look, I think it is it's probably the stickiest install base out there, right? In terms of just when you think about Apple and customers that really don't leave. I think the worry is really around the monetization. And that's why we've said, like, okay, perplexity was really more to see what happened with Google. Once DOJ, once they had that victory, now I think they walked down the aisle from some sort of major partnership from a Gemini perspective. But I think this is a critical time, next 6 to 9 months for Apple, to make sure you have the AI strategy, you don't lose customers, you have an upgrade cycle that, right now New York City cab drivers bearish on Apple, so I think that sets up pretty positive relative there. But it comes down to AI innovation. There's a better chance of me playing Ryder Cup Bethpage than that happening inside of Apple. It has come externally.
Dan, you mentioned Tim Cook playing nice in the sandbox with Donald Trump. Should he go on the state visit next week when Trump's bringing a bunch of tech executives like Jensen Huang?
I think you get on that plane because, I mean, you know it so well. It's like, he obviously got called out in terms of Middle East. To the right, you have really the new trusted advisor wearing the black leather jacket, Jensen. I mean, Cook needs to make sure he's not on the outside looking in. And that's why that, what we saw last week in D.C. was also an important moment, too.
When you say that he's playing nice in the sandbox, when Lisa was asking about pricing of iPhones, he's constrained, do you think, by the White House and audience of one, or do you think he's constrained by where the consumers are right now and has to meet them where they are?
Yeah, I think it's a combo, but I think the reality, too, is that raising prices definitely is not the right thing to do from a consumer perspective. But when it comes to tariffs, that's also where, like, the India, look, they're essentially doing a dance around, right, when it comes to India and China, tax exemptions, obviously significantly investing in the U.S., but like we've talked about, like, it's a fairy tale that they'll ever make iPhone Pros in the U.S. Again, it goes back to, like, if you like $3,000 iPhones, we should make them in New Jersey. So I just think that that's going to continue to be something that's in Asia, despite obviously a lot of the investments from an AI perspective in the U.S.
You're a bullish guy. Let's just finish on a really big name this morning, Oracle. $225 billion plus a market cap could be added to this company later on this morning. We're higher by 32% in the pre-market. What do you make of this move?
I mean, it's a drop the mic from Safra and Ellison, right? Because the reality is that it shows this AI revolution, as much of the haters and the skeptic, you look at...
Points to me.
No, I'm saying, dude, you're a big supporter. But I'm saying, like, but Lisa, I think, but I think the reality is that many that are skeptical of maybe like some of the growth, you look at these numbers, that ARR number, that's a drop the mic. And I think what that shows, the rest of tech, the rest of AI, that's what we continue to say. It's 10:15 and the AI party was 9 p.m. and that party goes to 4 a.m.
It's an outfit worthy of the stock move. It's good to see you. Thanks, Dan.
Great to see you.
Appreciate it, sir. You've got the distance to play Bethpage.
You never know. It's more of a short game. I don't have Pharaoh's long distance.
I wish I had that kind of distance.
Yeah, exactly.
Like McElroy 350 kind of stuff.
Exactly. Bethpage Black. That tests the distance.
I'm very pro-America. That's going to be like the few days that I'm going to be very pro-Europe on this program.
I know.
Oh.
You know, but I'd expect
you're going to have to let it go.
Of course.
Just give me some space.
But again, the difference is Europe doesn't have a guy named Scotty.
True, but we've got a guy named Rory.
And I love
a pretty
Rory.
deep bench as well.
Oh, and Rory's on a hot streak.
Okay, we'll talk more about this another time when we're not on live TV. Dan, thank you, sir. Appreciate it. Thanks. Coming up in just a moment, some economic data for you. PPI just around the corner. We'll catch up with Seth Carpenter of Morgan Stanley. A lot to break down for this point and the data point we get tomorrow morning.
Yeah, and we keep talking about at what point do we care about inflation once again. PPI, how hot does it have to come in and how much has to get translated to the consumer?
Got tickets for that.
I will have tickets
for that. All right, we'll talk.
Basically, you're looking for someone to talk with you because it's not going to be us.
I mean, going to a Ryder Cup with Farah would be a peak moment for me.
We'll make it happen.
Okay.
All right.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The first of two inflation prints coming right up. PPI just around the corner, 20 seconds away. CPI tomorrow morning, 24 hours and about 15 seconds away. Equity futures on the S&P 500 positive here by a third of 1%. Up on the Nasdaq by a third of 1% also. In the bond market, these are the scores. 2-year, 10-year and 30-year bond yields a little bit lower at the front end, and the 10-year this morning. We're down about a basis point. The 2-year, 3.55. With your economic data, let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. We were expecting a little bit of a decline in inflation, and that's what we got. Producer prices headline number on a month-over-month basis down 0.1%, which puts the year-over-year number at 2.6%. It was 3.3% in July. Core down 0.1% as well, so that moves us to 2.8% from 3.7%. And core ex trade is up 0.3%. That's half of what it was last month on a month-over-month basis, and puts us at 2.8% for the year. So that was as it was the last month. So at this point, it looks like some of the special factors that hit last month, and we'll look into this, didn't quite hit. Most of this was a decline. The August decrease, they say, was a decline in final demand services, down 0.2%. Final demand services was up significantly last month. Final demand goods did rise 0.1%, maybe a little bit less than people anticipated because of tariffs, but we'll have to dig into all of that in just a second.
Yeah, Mike, take your time. I'll run through the price action just briefly. Pretty obvious move off the back of a downside surprise on PPI. Bit into the front end of the curve, yields down by 3 basis points on a 2-year, 3.53. Push that through foreign exchange, a weaker dollar, as you might expect. Elsewhere, if you're looking at the equity market, a lift on the S&P 500 this morning by about 0.5% on the S&P. So session highs here. Likewise on the Russell 2000, a bounce here, higher also by 0.5. We often say this off the back of a data point here in America, that the first move isn't always the right move, and we'll see if this sticks as we go through the details. But the initial take is obviously going to be this allows the Federal Reserve to focus a little bit more on the weakness in the labor market and consider more rate cuts.
Yeah, the takeaway from markets is a 25 basis point rate cut is baked in. That's not the question. The question is how much is there an argument for a 50 basis point rate cut? Right now, there's 27 basis points of cuts getting priced in for next week. That, to me, is the key question. If this was going to be the barrier to hold them back from going big, well, it doesn't seem to be that much of a barrier. We'll wait to see what we get from CPI, but the first read seems to be that is not on the table.
And Mike McKee, details matter. What do you see on a second look?
Well, we see some declines in the things that went up a lot. Food prices were down just a touch this month because last month we saw a rise in fruits and vegetables of 38.9%. 38.9%, but in August they were down by 15.1%. So there's some good news there. Final demand for energy is basically unchanged, down 0.4% as electric power went down by 5.9%. So we're seeing some, actually, that is natural gas, I'm sorry, went down by 5.9%. So we are seeing some backing off of some of the things that went up during the month of July that were kind of unusual. The one thing I'm looking for here is consumer, the portfolio management issue. We were up 5.8% in July, 2% this month. So it's still inflation coming from portfolio management, but not as much as it was the month before.
Mike McKee, thank you, sir. Stay close. We'll come back to you in about 5 minutes' time. Just got a provocative message from a Bloomberg Terminal subscriber. 75 is the new 50. Joking, of course, but this will be a conversation in the coming week.
Joking, but not. I mean, essentially, at this point, 50 seems less of a reach when you start talking about the revisions and then not necessarily seeing inflationary pressure. Early days, let's wait till we get CPI, because the connection between producer prices and what consumers are paying don't always correlate to the same kind of degree that people expect.
Joining us around the table, Seth Carpenter of Morgan Stanley. Seth, good morning. It's good to see you.
Great to be here. Thank you.
I want to give you some time before we get into this data point to flesh out how you view the world right now, because I've been following your research, and certainly you and the team consider what took place on April 2nd and the months after that, not as an event, but as a process. And we've got to wait to let this play out in the coming months. Just flesh that out for us, how you're thinking about the world with regards to tariffs and a pass-through to end inflation.
Yeah, no, I think that's a key question, and I do get the sense, talking to lots of investors around the world, that people feel like we've seen tariffs, we've seen sort of how high they could go, we've seen a retracement, we get it. Now let's move on and look at what's next. And not sure we can quite move that quickly. Evidence we have from 2018 to 2019, evidence we have now this round, is that it takes 3-4 months before you really start to see the effect of the tariffs show through to consumer prices. The last two CPI prints, in fact, we were able to get evidence that in at least the core consumer goods components where we expect to see it, you are starting to see an initial pickup. It's not crazy. It's not the inflation that we saw a few years ago, but it's moving up for sure. I think the tricky part here is going to be the tariffs were much broader than what we saw in 2018. So trade diversion is going to be harder. On the other hand, there's a lot more negotiation back and forth. So how many industries are going to be gaming, absorb it for now, pass it on later? And I think that uncertainty is critical. I think we still have a lot of additional inflation from tariffs in front of us. And then what we can't forget as well is that tariffs hurt economic growth as well. In 2018, the evidence was 6, 7, 8, 9 months of a lag. We're just coming up on that in the fourth quarter and then into next year. Take the imports from China. 2/3 of what we import from China are either capital goods or intermediate goods that go into manufacturing in the U.S. So the tariffs are a tax on domestic CapEx and a tax on domestic manufacturing. The tax provision helped on the CapEx side of things to some degree. Tariffs are going in the opposite direction. Where's the net? How are things going to work out? I think these are the reasons why no one should feel like they have the whole picture already clear in their head.
Yeah, well, what you just described sounds a lot like stagflation, which no one should feel too happy about. It's always kind of a disaster, at least stagflation light, as some people have been describing it as. Do you disagree with Fed Chair Jay Powell, who said that any kind of inflationary pressure from tariffs will be a one-time price adjustment? And that is the reason why this central bank seems to be placing a greater emphasis on the slowdown that you're talking about, or, as we saw yesterday, some of the revisions in just the labor market lack of momentum that we've seen?
Well, I think as a baseline forecast, and we have to make our baseline forecast, the answer to that is, yeah, the most likely outcome is that tariffs will lead to a one-time increase in the price level, which means that the inflationary effect, the percentage change in prices, will be temporary. I think that's a really great place to start a forecast. That's where our forecast is. That's not, though, the only game that the Fed has to play. They also have to ask, well, what if we're wrong about our forecast? What if things turn out differently than our baseline? And in particular, the last time we saw tariffs, and it was temporary, we had the biggest problem for the Fed was too low inflation, not too high inflation. Here we are over 4 years into inflation being above the Fed's target for a long time. Businesses are kind of getting used to inflation being high. Consumers might be getting used to inflation being high. They might be getting sick of it, but they also might put less effort into thinking, oh my God, do I have to go look somewhere else for an additional lower price? Because now everything is just more expensive. So I think there's a risk that the inflationary impulse is longer this time, gets more embedded. And let's not forget, in the services component of things, we have now labor restriction going on because of immigration. We talked about the revisions to the labor market. Job creation was less than people thought. Job creation has come down a great deal. The unemployment rate, 4.3%. I'm old enough to remember when 4.3% was actually pretty good. And it's about unchanged. It's only up a little bit from a year ago. What that to me says is that the labor supply side of things is also come down a lot. And so then the question becomes, how do the services industry, especially the ones who might find themselves constrained for labor, how does that show through in prices?
So that brings us to the data that we get today, which shows that inflation really isn't as big of a concern as some people expected when it comes to producer prices. We'll see what CPI has to say. Some people are calling for the Fed to cut in a more significant way next week, maybe even 50 basis points. Do you think that if they were to do so, or even 75 basis points, let's cater to that Bloomberg subscriber, do you think that that would actually ignite the risk of inflation over the medium term, or do you think that that would be appropriate?
So I think the risk is that it would be premature to cut 75 basis points for sure, and even 50 basis points. I don't know, from my judgment, that it balances the risk between slow growth and inflation. Now, newsflash, I am not the chair of the Fed, so my opinion is much less important.
Yes, I hear that you could be in the running.
So the way I think about it is they've got a dual mandate. Full employment, maximum sustainable employment, i.e., how close is the unemployment rate to what they perceive as full employment, which they've told us is 4.2%, and stable prices, which they've defined as 2% inflation. Inflation's above target, inflation's rising. It's not skyrocketing, but it's going up. Tomorrow's CPI is going to be really important for the consumer goods side of things. So where is that balance of risks? I think that's really the question. What Chair Powell told us at Jackson Hole was he changed his mind a bit and said, you know what? Now we're going to lean more on the risk of employment getting weaker and accept a little bit more risk on inflation going higher. At the prior FOMC press conference, though, he kind of had said, let's look at the unemployment rate. You know, you could imagine payrolls coming down a lot. As long as the unemployment rate is stable, that's what full employment, maximum sustainable employment is really about. So there has been a little bit of a change in that risk adjustment. There's no black and white. He's clearly wrong. He's clearly right. This is a very, very difficult situation for the Fed. Their two variables that they have mandates for are kind of going in opposite directions. That is the most difficult situation for a central banker.
Well, he went full Waller, basically, at Jackson Hole. But to John's point all morning, if they had had this information in terms of actually where the economy was, the labor market was, do you think they should have been cutting? Would they have been cutting sooner?
I mean, I think there's clearly the argument that they might have been cutting sooner given where Powell is now, given his remarks at Jackson Hole. Given his remarks, though, at the July press conference that the unemployment rate, which is saying how is labor demand doing relative to labor supply, it's much less obvious that they're anywhere near as far behind the curve as you would infer just from a read on the non-farm payrolls print. So this is an extraordinarily difficult, nuanced, tricky situation. It is the time where it's both great to be an economist because we get to go into the details, and it's terrible to be an economist because nobody wants to hear it. Well, actually, details here matter a lot.
Didn't we endorse you for a seat on the Federal Reserve 2 years ago? I think we did that on this program before. That's not new. That doesn't feel new.
So serious, we can do it again.
Mike McKee's still with us. Mike, you've got more, I know. What have you got?
Well, I've been looking at some of the categories here, and as I mentioned, vegetables were a big decliner, but we also saw wholesaling of machinery down 5.2%, and I know Seth was just talking about that. Air travel, though, up 1%. One of those categories that does feed in to the CPI and to the PCE numbers. Also, we're seeing some changes in as I mentioned, portfolio management down a little bit compared to what it was, up just 2% compared to 5.8%. In general, what we're seeing is durable goods rising some, though. Electronic equipment up 5.1%. So there are some tariff effects, and we'll keep looking for that throughout the day. And I'm sure Seth and his staff will be as well.
No doubt. Mike, thank you, sir. Michael McKee there breaking down the PPI data. If you are just joining us, welcome to the program. Downside surprise on PPI about 12 minutes ago. Unleashing a lift in the equity market. Moving bonds too, yields down at the front end as we start to talk more about this conversation that will take place this time next week at the Federal Reserve. And I think it does open the door just a little bit more to a conversation about 25 versus 50 at next week's meeting.
Well, it certainly is in terms of the market pricing, but I keep thinking about what Seth Carpenter said, which is no one wants to hear, well, if you look at this, you take a look at this. But honestly, that's actually what I'm looking right now at in terms of oil prices going down, some vegetable prices going down. But if you buy a new phone, say, although not an Apple phone, because evidently the prices didn't go up too much, but certain electronics, the prices are going up pretty significantly. It's such a motley and confusing picture that to draw conclusions is a fool's errand.
Everyone wants to have an opinion. Just think you've got to stay super open-minded. And if I've got one opinion about the situation, I'm kind of with Seth. I've said this for a while. Don't view what's taken place this year as a one-off event. View it as the start of a process. And I think that allows you to stay open-minded about what's about to happen over the next several months. I don't know what will happen, but you have to view it as a process and not a one-off event.
And this is what a lot of corporate executives are doing right now. They're saying, let's wait. Let's not be first movers when it comes to jacking up prices by 10%. We'll wait, but slowly over the next 1 month, 2 months, 3 months, as the inventories have to be replenished, then we will raise prices. And that's when you're going to see it trickle out in that process. So on the flip side, yes, but oil prices are lower.
Seth, it's good to see you.
Great to be here.
Thanks for dropping by. Appreciate it. We like you where you are at Morgan Stanley. Ted picked us too. Seth Carpenter there of Morgan Stanley. Ted, I know you're watching around this time, so good morning. Equity futures on the S&P up by 0.5%. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Well, just recapping the data, U.S. wholesale inflation declining in August for the first time in 4 months. The headline producer price index falling 0.1% from a month earlier. It did rise 2.6% from the year before. Tomorrow we'll get consumer price data. Economists expect core CPI to rise as tariffs impact prices. The Supreme Court has fast-tracked a challenge to President Donald Trump's tariffs. The court agreed to hear cases brought by businesses hurt by the levies. That hearing scheduled for the first week of November. The tariffs remain in place for now, but a decision striking them down could force the U.S. to refund tens of billions of dollars. Crypto firm Gemini has increased the potential size of its IPO to $433.3 million, pricing shares at $24 to $26 apiece. At the top of the elevated IPO range, Gemini would have a market value of $3.1 billion. The firm was founded in 2014 by Cameron and Tyler Winklevoss. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Coming up on the programme, we'll catch up with Lisa Hornby of Schroders as we break down the latest inflation data. Plus, we'll touch base with Yahira to get your morning movers as Chewy falls in the pre-market by more than 8%. From New York, you're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
I believe the Fed should have a single mandate, which is price stability. The biggest, most punishing tax on the American people, our citizens, is inflation. And inflation's caused by too much money chasing too few goods. I believe we need fewer mandates, and I think we need that monetary policy focused on price stability.
So the good news this morning for the congressman from Arkansas is that inflation came in below expectations, a downside surprise on PPI, a rally in equities and in bonds. Equity futures up this morning by about 0.5% on the S&P 500, on the Nasdaq 100, and on the Russell 2000. With about 40 minutes to go until the opening bout, let's get you some morning movers. Let's cross over to Yahara Anand for more. Hey, Yahara.
Hi, John. Oracle blew it out of the water when it comes to its growth projections, stunning Wall Street and helping to lift other AI infrastructure plays. That is because its booked revenue jumped 359% compared to a year ago, jumping to $455 billion in the latest quarter, thanks to massive cloud deals with the likes of OpenAI and NVIDIA, which is why you are seeing those shares rallying 3.25%. Oracle also said that its cloud infrastructure unit will rake in $18 billion this year, and that is expected to grow to $144 billion by the end of this decade. And that is why you're seeing CoreWeave shares up more than 10% because of that strength. Next up, we have regional lender Fifth Third Bancorp. Shares are down nearly 2% after the bank said it uncovered allegedly fraudulent activity by one of its commercial borrowers, forcing it to write off up to $200 million. And sources tell us here at Bloomberg that JP Morgan and Barclays are also exposed, but because those are bigger banks, they are not getting the same level of scrutiny as this regional lender. And we